start with what? Direct taxes. Marathon. Now our subject is very vast, if you know. Okay, our subject is one of the vastest subject in life. Wherever you want me to solve question, you please tell me, we'll solve. We'll definitely see mock test papers. Now please note this marathon which we are doing right now is applicable for CMA as well as CS students. Okay, but for CS students, marathon the mock test papers are not there. For CMA as well as CS, subject is same. Subject is same in the sense the syllabus is same. Syllabus is same. Okay, the syllabus is same. But for CS, because the mock test paper is not there, we will use the mock test paper of CMA. We'll solve the mock test paper of CMA, in other words, in this class. So chapter wise, as and when I'm covering the chapter, we'll see mock test paper related to that chapter also. We'll see of June attempt also and December attempts also. We'll just discuss those papers. And at the end, we'll discuss the MCQs which are covered over there. So almost how many MCQs will be there? 15 fours are 60 MCQs will be there. And please note, for examination, what should I study for MCQs, sir? Whatever notes you have written, no, more than sufficient. Nothing extra they'll ask you. If you watch this marathon only, if you are just watching this marathon for CMA students specifically, MCQ, that whatever 30 marks is there, no, that will be covered. I mean, that will be sufficient for you to score the 30 marks. Okay, first chapter is our introduction chapter, introduction to taxes. First, we are starting with marathon of what, sir? Direct taxes. Types of taxes. Tax can be of two types. One is, what is tax, by the way? Government needs money. See, government needs money to undertake various different activities. That money which government requires, that money government is collecting from us in the form of tax. Correct? That money which is there, government is collecting from us in the form of tax. That is tax. So it is one of the important source of revenue to the government. So tax can be of two types. One is direct taxes, another one is indirect taxes. Now they can ask a question on difference between direct taxes and indirect taxes. Okay, here we have written few more points you can add from the material. Direct taxes is the tax. This is Gube points which you have made me write. Okay, why am I reading this point also? I don't know. So direct taxes are what, sir? Direct taxes are taxes on income, and indirect taxes are taxes on goods and services. Direct taxes is a tax which is paid on income, whereas indirect taxes is what, sir? Where is my material I'm searching? I teach this point, they'll feel, what are you teaching? Direct tax is a tax on income, indirect taxes is a tax on goods and services. Direct taxes, incident impact is on same person, whereas indirect taxes, incident impact is on two different person. Direct taxes are progressive in nature and indirect taxes are regressive in nature. Then we saw constitutional provisions with respect to taxation. Constitutional provisions with respect to taxation, what did we study, sir? We saw that there is Article 265 which says no tax can be levied or collected unless there is an authority of law. Article 245, central government or the parliament has the power to make law for whole of India, and the state government has the power to make law for whole of that state. There is an article called as Article 246 which has a schedule called as schedule number 7. This schedule number 7 talks about three lists. What is that list, sir? Union list, state list and concurrent list. Union list, whatever is there, union list is also called as list 1. State list is also called as list 2. Concurrent list is also called as list 3. Now whatever is there in union list, with respect to that, exclusive power is given to central government to make the law. Whatever is there in state list, with respect to that, exclusive power is given to state government to make the law. And whatever is there in concurrent list, with respect to that, power is given jointly to central government and state government to make the law. Now entry number 82, important. Entry number 82 of union list or entry number 82 of list 1 gives the power to central government to collect taxes on income except on agricultural income. So who can collect taxes on income? Central government can collect taxes on income, except on what income, sir? Agriculture income. And on agriculture income, can taxes be collected? Yes, it can be collected by state government. Power is given in entry number 46 of state list or list 2. Now, what are the sources of Income Tax Act? Now, what are the different places? I mean, what are the different things which you have to study under Income Tax Act? Should I study only Income Tax Act, sir, or should I study something else? When I say income tax law, what should I study? What are the sources of income tax law? You should study Income Tax Act 1961, which contains the main provisions of the law. Income Tax Act. Then you are supposed to study Income Tax Rules 1962, which is supporting to main Income Tax Act. Then you are supposed to study Finance Act. For your examination, the Finance Act applicable is what, sir? Finance Act 2024. And you are also supposed to study notifications and circulars and judicial decisions or case laws. Now, please note, before we continue, I will tell you one thing. Your examination will be divided into direct taxes and indirect taxes. Correct? Direct taxes, majorly the questions will be practical. Okay? You may get only one question for 4 marks or 6 marks. 4, 5 or 6 marks, depending upon how they are changing the question, which is theory. Normally that question will be from what, sir? Procedural topics. Procedural topic is the last topic which is there, like TDS, TCS, return of income, etc. From that topic only you will get a theory question. Apart from that, entire direct taxes, there will be no theory questions at all. You okay, not okay? Meaning starting right from the beginning till the end, you will not have any theory questions except that last procedural topics, last 2 topics or 3 topics which are there. Okay, so when I am studying the subject, I should study from what perspective, sir? Practical or case study perspective. Practical means either they'll give a sum to solve, or case study means they'll give a story. Based on that, you are supposed to. That case study based question will come only from one chapter, which is residential status. That chapter will be case study based question, or agriculture income, again computation only. Whereas GST, if you see GST and customs, if you see GST mainly, GST majorly will have your theory question. You will have around 2 or 3 questions you can expect, which is complete theory. Complete theory means straight theory question. Straight theory questions will be there. Okay, 2, 3, sometimes 4 questions may also come because you have optional points also. Then there will be second type of question will be your case study based question. Like your place of supply will be case study. Okay, they will not give any practical point is not there. That is case study. And practical question will come from value of supply, or this is ITC, input tax credit. Case study based question can come from place of supply or time of supply also, or RCM point, but RCM they will not normally ask, or this registration chapter is there. Correct? They are all case study based questions. So I hope this point is very clear to you. Now, so Finance Act, normally what happens is every year on 1st of February, the Finance Minister of India will come and they will give a budget. In that budget, they are going to make the changes in the tax law for the upcoming year. Okay. So that budget, once it receives the signature from President of India, that will become an act called as Finance Act. Finance Bill is presented in the budget and it becomes Finance Act. So the Finance Act applicable for your examination will be Finance Act 2024. Now, what do you mean by income? Income means anything which you are receiving, that is income. It can be whether it is legal, illegal, it does not matter over here. Income means receipts, but all receipts are not treated as income. Receipts are divided into 2 categories, capital receipts and revenue receipts. If it is a capital receipts, normally it is not your income because you don't receive it on regular basis. Capital receipts, normally it is not treated as income unless they have specifically included. Whereas revenue receipts, because you are receiving it on regular basis, it will always be treated as income unless it is specifically excluded. Now there is something called as source of income and heads of income. Source of income means what, sir? The place from where the income is coming. What is the place from where the income is coming to me? That is my source of income. Whereas head of income means what, sir? The place where the income is going to go. Heads of income means the place where the income is going. Meaning, in in income tax law, whatever income you are earning from whichever place you are earning, it does not matter. All those income will go under only 5 heads. One, income from salary, if it is a salary income. Then income from house property, if it is a house property related income. Income from business or profession, if it is a business or profession. Income from capital gain, and income from other sources. What do we do under income tax law? Majorly 2 things are supposed to be done under income tax law. The question can either be with respect to computation of income. Income can be under each heads. There will be a question on computation of income, or computation of your total income, and computation of tax on your total income. Now, section 4 is the charging section. Section 4 of Income Tax Act is the charging section of income tax, which says, now I'll also tell you which are the important sections when we are studying. Okay, you can write it separately in the first page or somewhere, so you remember this section. This meaning, sir, should I quote the section number under income tax law, sir? Not required. Should I quote the section number under GST, sir? Not required. Normally not required. But there are some section numbers which you should definitely quote, because it will have add weightage to your answers. Okay, income tax is something which you are studying for the first time, so they will not expect you to know the section number, write the section number, nothing like this. Section 4 of Income Tax Act is the charging section, which says income tax is charged for every assessment year on every person on the total income earned by such person in the previous year at the rate prescribed in finance. So you have to pay tax on your total income. When do you have to pay the taxes? In the assessment year. Who has to pay it? Person has to pay it. On what? You have to pay on the total income, which is earned by you when, sir? During the previous year. Now here, and what rate, sir? A rate will be given in Finance Act. So for you guys, the Finance Act 2024 is applicable. Please note, if you are writing in June 26, December 26, this marathon is not for you. This marathon is not for you. For you, whatever you are going to study in income tax, so completely not at all there. There will be full change of that. Now here, financial year is divided into 2 categories under income tax law. One is called as previous year, another one is called as assessment year. What is previous year? It is the year in which the income is earned by you. So whichever year you are earning the income, on that income you have to pay the taxes in the next year. That year in which you pay the taxes is called as assessment year. So previous year is the year in which income is earned. Assessment year is the year in which tax has been paid. And normally we know, so for example, let us say I went to Konmay Kadupati on 15th of July 2024. I earned 12,40,000 rupees. What is the previous year for me? I went on 15th of July 2024. So previous year will be 24-25. Assessment year will be 25-26. See, normally the previous year is a period of 12 months. But in 2 cases, the previous year can be period less than 12 months also. When you are starting a new business or profession in the middle of the year, or new source of income is coming from middle of the year. Now, who has to pay the taxes? A person has to pay the taxes. Who is a person? A person includes individual, HF, firm including AOP, company, artificial judicial person, local authority, AOP and GOI. One second. Section 2, subsection 7, clause 7. Assessee means what, sir? Assessee means any person who is liable to pay tax or any other sum under this act, and it includes, and assessee includes what, sir? Representative assessee, deemed assessee, or assessee in default. See, normally this is a theory question which may come in the first chapter if it comes. Normally, normally the chances of coming is less, but if they come, normally the income is earned in the previous year, and on that income you pay the taxes in assessment year. This is the general rule or normal rule, but it has some exceptions. There are 5 exceptions. Meaning in these 5 situations, the income which you are earning in the previous year, on the tax also you should pay in previous year itself. Which are these 5 cases? Income from shipping business of a non-resident, income from a income earned by a person who is leaving India. Now we don't know whether he is going to come back to India or not. Or income of an AOP, BOI, artificial judicial person formed for a particular purpose. A person who is likely to transfer property to avoid taxes, or income from discontinued business. You have closed your business, so we don't know whether you are going to pay me the taxes or not. Now the tax rate for your examination, normal, first we will study about general tax rates. So normally general tax rates under optional regime. So if you are an individual HU of AOP, BOI, artificial judicial person, who are covered over here in case of individual, any individual who's resident person aged 60 less than 60 years, and if you're a non-resident person irrespective of age, you don't have to pay taxes up to 2.5 lakhs, and from 2.5 lakhs to 5 lakhs 5%, 5 lakhs to 10 lakhs 20%, and more than 10 lakhs you have to pay 30% tax to me. Now there is a limit up to which you don't have to pay any taxes. That limit is called as basic exemption limit. If you are a senior citizen, up to 3 lakhs you don't have to pay taxes. From 3 lakhs to 5 lakhs 5%, 5 to 10 20%, and more than 10 you have to pay 30%. And if you are a super senior citizen, up to 5 lakhs no taxes, 5 to 10 20%, and more than 10 30% tax is what you are supposed to pay me. Then surcharge also will be applicable. See, normally how should I compute the tax? First find the total income. Now the total income whatever is there, that you divide into 2 categories. Whether the total income is at income taxable at slab rate or it is income taxable at special rate. So if it is an income taxable at special rates, you have to compute the taxes at special rates. That we will see. I mean, how to compute we will see. Income taxable at slab rate, you will have to compute the taxes using these slabs or default regime depending upon what assessee is following. Now the tax is computed on total income, correct? Now you should see whether the total income is crossing 50 lakh rupees or not. If the answer is yes, if not the special income or slab rate income, we are not talking about that. If your total income is crossing 50 lakh rupees, then what will happen? You will have to pay an extra tax on the tax amount called as surcharge. Surcharge is applicable if the total income is more than 50 lakh rupees. If the total income is more than 50 lakhs up to 1 crore, surcharge which you have to pay is 10% of tax amount. Whatever tax amount you have computed, whether it is under special or normal tax, whatever tax is there, total the tax amount on that surcharge of 10% will come. If it is more than 50 lakhs up to 1 crore. If it is more than 1 crore up to 2 crores, you have to pay 15%. More than 2 crores up to 5 crores, you have to pay 25%. And if it is more than 5 crores, the surcharge which you have to pay is 37%. This is under optional tax regime. Now, irrespective of whether surcharge is coming or not, one person will always come. If there is a tax, one person will always come, which is health and education cess. Correct? Health and education cess you have to pay up of how much, sir? 4% on tax amount. This is tax amount including the surcharge. Now, I'll just give one question. Fadafat to tell me what is the answer. If my income is 18 lakh rupees, tell me if my income is 18, you tell me I am Krishi, my income is 83 lakh 50,000 rupees. What is the tax amount? This is the question. I am 18-year-old and my income is how much, sir? 83 lakh 35,000 rupees. Sir, 83 lakh 50,000 means, see sir, up to 10 lakhs it is how much? 1 lakh 12,500, and on 73 lakh 50,000 I will apply 30%. How much is it? 73 lakh 50,000. I will apply 30%. How much? 22 lakhs 5,000. So the total of this is 23 lakhs 17,500. On this, can I say because income is more than 50 lakhs, I'll apply 10% surcharge? 2 lakh 31,750 rupees. 25 lakhs 49,050 rupees. And on that 4% health and education cess. 26 lakhs. Correct? Okay, yeah. Now, if a person is born on 1st of April 1965 or 1st of April 1945, what will I have to do? He will complete 60 years. If it is born in 1st of April 1965, he will complete 60 years on 31st of March 2025. He will complete 50 years on this date. Therefore, he will be treated as senior citizen. Though he is going to celebrate the birthday on 1st of April, it is said that he has completed 60 years on the last date of the previous year. Now, under optional regime, you also get something called as rebate. Apart from whatever normal tax you are paying, you will also get something called as a rebate. What is rebate? Rebate is a concession which is going to be given to you, or it is a relief which will be given to you. Now, this relief will be given if you are a resident individual only. You should be a resident for taking the rebate, and your total income should be how much, sir? Up to 5 lakh rupees. You should be resident and your total income should be up to 5 lakh rupees. How much rebate will you get? Whatever tax amount is there, or 12,500 rupees, whichever is less. Now, rebate will be given before applying your cess and surcharge. Now, rebate will be given. You tell me one point. Rebate will be given against all the income except which income? Except which income? Except long-term cap gain under section 112A. Why? Because already they are getting 1,25,000 ka benefit. We'll study that point later, but because we are studying it. Okay, rebate. Rebate, you know, concession will be given if the income is up to only 5 lakh rupees. So you should be very carefully, you should check the question, how much is my income? Now, then margin relief concept, you know, margin relief. What is margin relief, you tell me? If your income is slightly more than surcharge limit, you will, because of surcharge, your tax amount will increase. So what will they do, sir? They will give us marginal relief. They are going to compute our extra income, extra tax, and give us margin relief. Margin relief is applicable only when the income is slightly more than surcharge limit. Okay, it can be 50 lakhs, 1 crore, 2 crores, 5 crores, or 10 crores. Concept of margin relief is applicable for all types of assessees, irrespective of who you are, it does not matter. All types of assessee, even if you are a company, it is applicable. Partnership firm also, it is applicable. 115 BAC. In examination, you should be very clear. While reading the question, you should read it carefully, because many times it will happen that you have solved this question in the classroom. That question will come in the examination. But in the examination, they would have told, instead of 115 BAC, they would have told compute the tax under normal provisions, or they would have told compute the tax under default tax regime. If you would have not read that last line, that will create a big problem. Compute the income if this person has opted to shift out of default regime. So something like this can come. Okay. So under default tax regime, now in the question which normally students ask is, sir, the question they have not mentioned whether a person is opting for default regime or normal regime. So how should I compute, sir? Question is completely silent. How should I compute, sir? Now, if the question is completely silent, then which provision you should opt for? You should opt for default tax. Better write a note. Since the question is silent, we have opted for default tax regime for computing the tax amount and income. So this section is applicable if you are an individual HUF, AOP, BOI, artificial judicial person. In simple words, if you are a slab rate assessee. Section 115 BAC is applicable to a resident as well as non-resident person. Now, what is the tax rate applicable to irrespective of your age? This is the limit. So under 115 BAC, the limit is up to 3 lakhs, you don't have to pay any tax. Then from 3 to 7, 5%. 5 to 10, sorry, 7 to 10, 10%. 10 to 12, 15. 12 to 15, 20%. And more than 15, 30%. Here there is no 25% rate and all. Okay, you should be very careful. The rates over here is different. Now here also he has to pay surcharge. Surcharge limit is same, but here he does not have 30%, 37% surcharge limit. Meaning if his income is more than 2 crores, directly you pay 25%, no 37% limit. And health and education cess is always applicable irrespective of who you are. Now he will get a rebate. This rebate for him is important because for him rebate is calculated under 2 different ways. If his rebate will be given to a resident individual under default tax regime, only to resident individual. If his total income is up to 7 lakh rupees, the rebate which will be given will be equal to tax amount or limit of 25,000, whichever is less. Now, normally this is the rebate which is going to be given to you. Okay, but if your income is slightly more than 7 lakhs, then also you will get a rebate. If your income is slightly more than 7 lakhs, you get a rebate which is like your margin relief ka concept. Wherein what you are supposed to do, you first compute the tax on total income. Compute the tax on total income. What is the extra income? Check that. Extra income will be whatever your total income is there minus 7 lakhs. Now, if the difference between them is more, whatever difference is there, no, that difference is called as rebate. So, repeat. First, compute the tax on total income. Whatever question they have given income of 7,10,000 rupees, compute the tax on this amount. Now, see what is the extra income? 7,10,000 minus 7 lakhs, which is 10,000. Now, see the difference. If the whatever difference is there, that is the rebate which will be given to you. Sir, can we do a question on this, sir? You tell me the answer for. You tell me the answer for this question wherein my income is 7,18,000. My income is 7,18,000. What is the rebate which I am going to get? One answer I have received. Hey, this much time if you are taking. First, compute the tax on 7 lakh rupees. The rate only we don't know, sir. 7,18,000 rupees. 21,800. Now see what is more than 7 lakhs. 18,000 rupees. Difference is how much? That is the rebate which will be given. 3,800 is the rebate. Yeah. 3,800 is the rebate. Online students, I hope you got the same answer. Sir, tell us, sir. Again, you do, sir. See, first tax on 7,18,000. How much is it? Ayo, sir, up to 3 lakhs, no tax. 3 lakhs to 7 lakhs, 20,000. 7 lakhs to 7 lakh, 10,000. 1,800. So how much is it? Correct. Now we should subtract rebate. How much is rebate? Tax amount minus extra income. Extra income is what, sir? 7,18,000 is my income. How much is from that subtract 7 lakh rupees? How much is it? 18,000. So extra income is 18,000 rupees, which is how much, sir? 3,800. So this is the rebate. Whatever is left over, what is that amount? 18,000 rupees. Huh? On that you will apply cess of 4%. 18,720. 720 is the cess. Okay. Yeah. Now tax rates for company. If you are a company, for you, if you are a domestic company, for you the tax rate will be 30%. If the turnover or gross receipts in the previous year is previous year 22-23 is up to 400 crores, then the tax rate for you will be 25%. See, normally for domestic company, what is the tax rate, sir? 30%. Normally for domestic company, the tax rate is 30%. But if the turnover of domestic company for the year, which year is it? 22-23 is up to 400 crores, then it is 25%. If the company was not there in 22-23, I will not have turnover of 22-23. So what is the tax rate applicable to me? 30%. This year the tax rate will be 30%. So that company should be there and the turnover should be up to 400 crores. Only then in the current year the tax rate will be 25%. If you are a foreign company, for you the tax rate is 35%. Now surcharge is also applicable. For surcharge will be applicable for companies if the total income is more than 1 crore. Up to 10 crores. For domestic company it is 7% on tax amount, and for foreign company it is 2% on tax. And if the total income is more than 10 crores, for domestic company it is 12%, and for foreign company it is 5%. Health and education cess will be applicable at what, sir? 4% of tax. Now for a partnership firm, the partnership firm or an LLP or a local authority, the tax rate applicable will be flat 30%. Even 1 rupee income is there, flat 30%. Similarly, company also flat 30%, flat 25%, or flat 35%. Flat rate, meaning even 1 rupee income is there, they have to pay the taxes. Surcharge will be applicable for firm if the income is more than 1 crore. Surcharge applicable is 12%. And health and education cess will be applicable at 4% on tax including surcharge. Now cooperative society, if you are a cooperative society, up to 10,000 of your income, you have to pay a tax of 10%. If your income is more than 10,000 up to 20,000, you have to pay 20%. More than 20,000, you have to pay 30%. Surcharge will be applicable if the income is more than 1 crores up to 10 crores. How much is the surcharge? 7%. And more than 10 crores, 12%. From exam point of view, if you ask me, should I study this? Don't waste your time. Meaning you just have to know, but they'll not ask any question from all these points. Health and education says compulsory applicable. Now special tax rates. Special tax rate is applicable if special tax rates is applicable for you. Special tax rates. Long-term capital gain. If the transfer is before 23rd July 2024, tax rate is 20%, and you will get indexation benefit also. If the transfer is on or after 23rd July, the tax rate is 12.5%. No indexation will be given. Long-term capital gain under section 112A, transfer is before 10%, afterwards 12.5%, and the gain in excess of 1,25,000 is only taxable. Money which is earned by you more than 1,25,000, only that you have to pay the taxes. And 111A, short-term capital gain before 23rd July 15%, after 23rd July tax rate is 20%. For casual income such as lottery, betting, gambling, tax rate will be flat, what's sir? 30%. And 115 BAC, online money games, tax rate is 30%. Undisclosed income or deemed income, the tax rate will be 60%. Please note, one of the exam, the question was asked was, Dilip has an undisclosed income of 5 lakh rupees. What is the total tax liability? What is the total tax which Dilip has to pay? Yeah. Now here, problem is undisclosed income, the base tax rate is 60%. So this I'll apply 60% of this. How much is that? So this is the base tax which I have to pay. Okay, they have asked what is the total tax which I have to pay. Now because it is an undisclosed income, you also have to pay surcharge of 25%. On 3 lakhs 25% is 75,000 rupees. Now, on this total amount, 3,75,000, I have to pay 4% health and education cess. 15,000, huh? So, total tax which I have to pay is for 5 lakh rupees of undisclosed income, I have to pay tax of 3,90,000. Okay, disclose. So, better to disclose. If you have any dot, you to disclose, yeah. Now please note 111A and 112A. What are the incomes covered, sir? Only 3 types of capital assets are covered, which is following incomes are taxable under section 112A and 111A: listed equity shares, equity oriented mutual fund, and units of business trust of India. Now, if I have income, normally whenever the question is on total income, they'll also ask you to compute the tax. Okay, whenever the question is on total income, they'll also ask you to compute the tax. And in the total income question, you may have income taxable special rates as well as slab rates. Correct? So how should I compute the tax at that time, sir? First, compute the tax on special income. Correct? Whenever you are computing, first compute the tax on special income, and whatever is left over, can I say that is taxable at slab rate? So first you segregate the income into special income and balance total income. On special income, you will have to apply special tax rates, and on what is this? Balance total income, you will have to pay the tax, compute the tax at slab rates. Meaning you just compute the taxes on special income, whatever tax is there, and slab rate also whatever tax is there. Now please note, you are calculating the base tax before surcharge and cess. Once you compute the tax, now if this total of the income is more than 50 lakhs, then surcharge will come. And on that amount, you will add health and education cess to find the total tax liability. So whenever my income has special income as well as slab rate income, what will I have to do? Segregate the income first. Compute the tax on special income, compute the tax on slab rate income. Compute only the basic tax amount, not these surcharges. Compute the tax, total the tax amount. Add surcharge, add cess. Now, important points: your total income as well as the tax amount should be rounded off to the nearest multiple of 10. Nearest multiple of what, sir? 10. So if the last digit is 4, round it off to the previous multiple. If the last digit is 5 or more than 5, round it off to the next multiple of 10. Then rebate under section 87A is available if your total income is up to 7 lakhs or 5 lakhs. Correct? No. Rebate under section 87A is available if the total income is up to 7 lakh rupees or 5 lakh rupees against all the heads of income or all the sources of income except long-term cap gain under section 112A. If you have this income, you cannot claim rebate. Normally, basic exemption limit is there, no? Basic exemption limit up to 3 lakhs, 2.5 lakhs, 5 lakhs, I don't have to pay any taxes. That basic exemption limit, you should adjust against which income, sir? Slab rate income. So normally, basic exemption limit should be adjusted against the income taxable at slab rates. However, if the basic exemption limit is not fully utilized or adjusted against the slab rate income, if you are not able to fully utilize, then the unutilized basic exemption limit can be adjusted with which income, sir? Special rate income, except casual income and undisclosed. Okay. Now, normally, what is the surcharge if the total income is more than 2 crores? 25%. If it is more than 2 crores, 25%. See, if it is more than 50 lakhs, 10%. More than 1 crores, 15%. More than 2 crores, 25%. But there are totally 4 incomes called as GUBE incomes. On this 4 income, the surcharge should be maximum how much, sir? 15%. I cannot levy more than 15%. Which are these 4 incomes? Long-term capital gain under section 112 and 112, short-term capital gain under section 111, and dividend income. On these incomes, maximum surcharge which you can levy is how much, sir? 15%. Okay, yeah. Now, the next topic for our discussion is what's sir? Residential status. Residential status, residential status, residential. What is the next chapter? Agricultural income you have written. Okay, agricultural income. Next chapter for our discussion is agricultural income. Agricultural income is a very easy topic, very simple topic, very easy topic. Agricultural income is exempt from payment of income tax. You don't have to pay any income tax on agricultural income if such agricultural income is received from agricultural land in India. So if you are receiving that agricultural income from land which is located in India, so if the agricultural income is from a land in Nepal, taxable, not taxable? Taxable. Why, sir? Only if the agricultural income is received from a land in India, it is exempt. Section 10 subsection 1 says this. If the land is anywhere outside India, fully taxable. Okay. Agricultural income means what, sir? Any rent or revenue derived from agricultural land located in India used for agricultural purpose, or any income from agricultural operations, or income from farmland or a farmhouse or a dwelling unit on agricultural land, or income from nursery, plantation or seedling. Now, agricultural activity means what, sir? Check in agriculture what work you are doing, basic operation or subsequent operation. Basic operation is up to the sprouting of that, up to the stage of germination. That is called as basic operation. If a person is doing only basic operation, entire income is agriculture income. If he is doing subsequent operation, entire income is what income? Non-agriculture income. Rule number 7 is there, which talks about if there is a question on agriculture income, normally this will be on this rule only. If a person has agricultural income wherein the product which is cultivated by him, he is putting some process and selling it. So the income which is going to get is both agricultural as well as non-agricultural income. So in such cases, composite income from sale of agricultural produce. Agricultural produce is sold by you in raw form. If you are selling it in raw form, so our example, we took example of potato. Potato, I took it from the ground. Mud is also there in the potato. I have not even cleaned that mud. I have selling it in raw form. Entire income will be treated as agricultural income. I have sold it after some processing, meaning I have washed that and removed the mud. Now whatever income I am going to receive, that income will be called as now that income after some processing. Now the process which I applied, was it mandatorily required to sell agricultural produce? Was that process required to sell potatoes, sir? If I wash and sell the potatoes, people will buy the potatoes. Correct me. So that process was mandatory. So in such cases, my income will be fully exempt because it is agricultural income. If the process which I have applied is not a mandatory process, if that process which I have applied, it is not a mandatory process, meaning I have cut the potatoes, not boiled in oil, boiled only we say, fried it in oil, and then I sold that chips. Now, was this process mandatory, sir? No, sir. So, potato, the process is not mandatory for selling agricultural produce. In such cases, whatever income I get now, fair market value of agriculture produce used for further processing, take that, less cost of cultivation. You should first take the market value of agriculture produce which is used for making potato chips. Because I am not selling it, if I would have purchased it from, if I would have sold it in the market, how much I would have paid it? Market value of that minus cost of cultivation, that will give you agriculture income. Business income, how much will be business income, sir? Take your sale value of what? Potato chips. The chips, subtract the cost of processing, oil cost, heating cost, cost of processing, subtract fair market value of agriculture produce which is used for further processing, which is nothing but if I would have bought these potatoes from the market, I would have paid money, no? That money. Difference is business income. Now, in case of three businesses, in case of tea, coffee and rubber businesses, they have told, don't break your head, I will only tell the rate. If you are growing and manufacturing tea, coffee and rubber, if you are growing and manufacturing tea, 60% will be your and 40% will be business income. If you are growing and manufacturing coffee, which is grown and procured by you, 75% is and 25% is business income. If you are growing and manufacturing coffee which is grown, queued, roasted and grounded by you, 60% is agriculture income, 40% is business income. If you are growing and manufacturing rubber, 65% is agriculture and 35% is business income. Correct? Yeah. Now there is also a concept of partial integration in agriculture chapter. What is this concept of partial integration telling us? If normally to whom is it applicable, sir? To slab rate people. Okay. So if your agricultural income is more than 5,000 rupees and if your non-agricultural income is more than basic exemption limit, then this concept of partial integration is applicable. To apply the concept of partial integration, all the conditions should be satisfied. What are the conditions? First, you should be an individual HU of AOP, BO, artificial judicial person, and your agricultural income should be more than 5,000. Basic exemption limit should be more than, a non-agricultural income should be more than basic exemption limit. So in such cases, if you satisfy all these conditions, what will happen to you, sir? While computing your agricultural income, what should I do, sir? While computing the tax, first compute the tax on agricultural income and non-agricultural income. Combine both of them and compute the tax. Then add your agricultural income to basic exemption limit. See, because agricultural income you don't have to pay tax. On basic exemption limit also you should not pay the taxes. So you add both of them. Okay, you add both of them, you compute the tax. Whatever tax you have got under step number 2, subtract it from step number 1. Difference amount is the tax which is payable by you. On that amount add cess, surcharge, whatever is. Residential status. Now we'll see questions. Okay, once we complete residential status, then only the first topic is actually done. Okay, these 3 topics together. Residential status. Residential status means what, sir? To know whether a person is required to pay tax in India or not, we should see whether that person is resident or not. Normally, if you are a resident person, you have to pay tax on Indian income as well as foreign income. If you are a non-resident, you should pay only on Indian income. So residential status is not equal to citizenship. It is nowhere connected to that. Majorly, what is important from exam point of view is residential status for individuals. So an individual, see, basically they have given a basic condition, 2 conditions they have given, basic condition and additional condition. If an individual satisfies the basic condition given in section 6(1), if he satisfies it, he is called as a resident. If he does not satisfy it, he is called as non-resident. If he satisfies the basic condition, we will check for additional conditions. Now, additional condition also, if he satisfies basic condition, he has satisfied, additional condition also is satisfying, meaning he is a resident and ordinary resident. He has satisfied the basic condition, but he has not satisfied the additional condition. He is resident but not ordinary. Now, what is this basic condition, additional condition, sir? Residential status for individual. Section 6, subsection 1, the basic condition. Individual is resident if he satisfies any one of the basic conditions. What is the basic condition which you have to satisfy to be called as a resident? He should stay in India. He should not. He should do what, sir? He should stay in India. He should stay in India for 182 days or more in the previous year. So in the previous year does not mean last year, in the year for which you are computing the income. So for that year, he should have stayed in India for 182 days or more. And or more. Or he should have stayed in India for 182 days or more in the previous year and 365 days or more in the 4 preceding previous year. So let us say for our examination, what is the previous year? 24-25. So if I want to be called as a resident of India for 24-25, I should have stayed for 182 days or more. If I have stayed, then I will be called as resident. Or during the year 24-25, which is my previous year, I should have stayed for 60 days or more than 60 days. And in last 4 years, before the last 4 years, I should have stayed for 365 days or more. I should have stayed in India. While computing the stay in India, what are the different things which I have to keep in mind? Date of coming to India and date of going out of India should also be included. Then staying at one location is not mandatory. I can stay anywhere in India. Okay, and India is up to territorial waters. That place is called as India only. So once a person satisfies the basic condition, I will see what's the additional condition. So resident for a period of 2 or more previous years in 10 preceding previous years. This is the additional condition, meaning once a person has satisfied the basic condition, I'm going to see the additional condition. Now only when he satisfies this additional condition, he'll be called as resident and ordinary resident. If he does not satisfy, resident but not ordinary resident. So additional condition says he should be resident for a period of 2 years. Please note, he should be resident for a period of 2 or more years in 10 preceding previous year. What do you mean by he should be resident for 2 or more years? That means he should have satisfied basic condition for at least 2 years in last 10 years, and he should have stayed in India for 730 days or more in last 7. He should have stayed in India for 730 days or more in 7 preceding previous years. So in the previous year 24-25, because that is the previous year for our examination, I should have satisfied the basic condition. Now I should take last 10 years. In last 10 years, I should be resident for at least 2 years. And in last 7 years, I should have stayed in India for 730 days or more. Now, there is an exception for second basic condition. What do you mean by exception for second basic condition? Second basic condition, you know, there are 2 basic conditions. One is 182 days, 60 plus 365. Now, this is an exception for second basic condition, meaning in this case, I will not see 60 plus 365 days condition. When will I not see 60 plus 365 days condition? If you are an Indian citizen who has lives India during the previous year. An Indian citizen who leaves India during the previous year for employment outside India. Why am I going out of India, sir? Because I got an employment opportunity outside India. I want to do a business outside India, or as a crew member of Indian ship. In such cases, in these 2 cases, check only first basic condition, which is 182 days condition. If I satisfy 182 days condition only, then I am a resident. Why am I going outside India? Employment or a crew member of Indian ship. Please note, normally they will test you in examination. Now, if you are coming to India, if you are an Indian citizen or a person of Indian origin who visits India, who is coming to India, okay, then I will check your income. If your income is less than or equal to 15 lakhs, if your income is less than or equal to 15 lakhs, then I will see 182 days condition for you. Meaning the income from Indian sources, the person who is coming to India, his income from Indian sources is less than 15 lakhs, I will see 182 days condition. But if the income is more than 15 lakh rupees, then he will be called as a resident only if he satisfies any one of these conditions. What are these conditions? 180 days or more than the previous year, or instead of 60 plus 365, 120 plus 365 days. So, if I am a person who is there outside India, I am coming to India. If I am coming to India, then for me, the condition applicable will be 120 plus 365 or 180 days condition. Now, one more important point is, in case of an individual being a crew member of Indian ship, if you are an individual who is a crew member of Indian ship, the date mentioned in continuous discharge certificate as date of joining the ship and date of signing off should be excluded while calculating the number of days. See, normally what happens is, India is up to territorial waters. So a person has joined the ship. Now this ship is it is just roaming around in Indian waters only. It is not crossing territorial waters. So the period when it is still roaming in India, should it be counted for seeing the residential status? If you are a crew member of Indian ship, answer is no. If you are a crew member, the date when you enter in that register that I have joined the ship, it is like, for example, let us say you are coming to the classroom. While coming to the classroom and while going back home, they made a rule that you should mark your attendance. You should say, yes, I have come. Then while going, yes, I am leaving now. You should write your timing. Now in between you go for toilet. Will you write again? I hope you are understanding. Correct? No. In between you are taking some break. Say you want to drink some water, or you had come, you have to meet that person. Now, will you write that dot it is coming 5 minutes? Please give me. Correct me. So they are telling in between if you go and come, from the time when you have entered till the time you are going out, that time is there, no, should be excluded. That time should be excluded. Meaning from the time you have entered in that register as I have joined the ship. Now the ship can do anything in India. No problem. Okay, no problem. That date will not be taken into consideration. Now deemed resident means what, sir? If you are an individual who is an Indian citizen and who lives outside India, who is not staying in India, he is staying outside India, who is coming to India for a visit during the previous year and has a total income more than 15 lakh rupees from Indian sources, and he is not a resident of any other country, then he will be deemed to be resident of India. Then for HUF, residential status is based on his control and management. Control and management means the place where all the managerial decisions are taken. It does not matter where you are staying, where Karta is staying, where the HUF members are staying. What matters is where you are taking the decision. If the control and management is happening wholly or partially in India, HUF is treated as resident of India. But whereas if the control and management is wholly outside India, HUF is treated as non-resident of India. Now, once HUF becomes resident of India, I will call Karta and I will check the additional conditions for Karta. I will not check the basic condition for Karta, I will check the additional condition for Karta. So, once Karta satisfies the additional condition, HUF will be resident and ordinary resident. If Karta does not satisfy additional condition, HUF is resident but not ordinary resident. For company, Indian company is always a resident of India, and for foreign company, I will see poem, place of effective management. So if the place of effective management is in India for foreign company, it is a resident. If it is outside India, the foreign company will be treated as non-resident. And for other people, residential status for other people like firm, LLP, HUF, etc. I will see control and management, wholly or partially in India, resident, wholly or partially outside India, non-resident. If partially outside India, then non-resident, wholly outside India. You have written correctly only. No? Now, scope of total income. This is where this residential status chapter becomes important. Whether a person has to pay tax in India or not. Now, an individual and an HUF can be divided into 3 categories, whereas this category is not available for others. For a company, firm, either resident or non-resident. Okay, and individual can be divided into resident and ordinary resident but not ordinary resident and non-resident. Now, if it is an Indian income, what is important for you? You should check whether the income which is there is an Indian income or foreign income. If it is an Indian income, that on that Indian income, irrespective of who you are, everyone has to pay the taxes. On Indian income, who has to pay the taxes, sir? A resident and ordinary resident but not ordinary resident, as well as non-resident. Everyone will have to pay tax in India on Indian income. But if it is a foreign income, if you are a resident and ordinary resident, definitely you will have to pay the taxes. If it is a foreign income, resident and ordinary resident, definitely you will have to pay the taxes. But if you are a resident but not ordinary, normally should not pay the taxes. Similarly, non-resident also should not pay taxes on foreign income. But there is one foreign income on which resident and ordinary resident also will have to pay taxes in India. I will repeat. On Indian income, who has to pay taxes? Everyone. On foreign income, who has to pay taxes? Resident and ordinary resident only. But there is one foreign income on which resident but not ordinary resident also will have to pay taxes, which is the income from business controlled or profession set up in India. Okay, not okay. What is an Indian income? Income received in India is an Indian income. Whatever income you are receiving, I don't care where you are earning it. If it is received in India, it is an Indian income. Income deemed to be received in India. These 4 incomes are deemed to be received in India. Which are the 4 income? Employer contribution to RPF more than 12%. Interest credited to employee ka RPF beyond 9.5%. Transfer from unrecognized provident fund to recognized provident fund. Employer contribution to pension scheme of 80CCD. Income accrue or arise in India. income accrue or arise in India means income is getting generated from India. If the income is accruing or arising in India, then also it is an Indian income or income deemed to accrue or arise in India. Now, any income other than Indian income is foreign income. Now, if you are a person who earned income 5 years back, now you are bringing that income to India, should you pay the taxes? No. So, past untaxed income brought to India in the previous year is not taxed in India, and a resident and ordinary resident should pay taxes on his global income. Okay, yeah? Now, anyone has any question in these topics which we discussed? Just check once. Huh. 25 lakhs, 15 lakhs. 15% and 25%. See, no. Check whether your total income has crossed 2 crores. Yes. Now, if the total income is crossed 2 crores, whether Gube income has also crossed 2 crores? No. Other income, has it crossed 2 crores? Yeah. So, if other income has crossed 2 crores, then on Gube apply 15, other apply 25. Now, total income has crossed 2 crores, but Gube as well as other both have not crossed 2 crores. Then apply 15%. One second. This will be with questions. Okay. Shall we start? Online students, are you with me? Oh, online students. Aarti, Gifty, Jayashri, Kamaliga, Kauzik, Ritika, Varsha. Yes, sir. Okay. Now, we'll see one by one. Now, we'll see from which attempt, sir? From June 26 to mock test. 22 I will be see. Please note, Goobism you should not do. Okay. Like your accounts paper, costing paper, we cannot discuss past 10 years paper, past 5 years paper. For DT, IDT, if you by any chance, by mistakenly you solve that paper and go to exam, I pay only. Are you understanding? Income tax, in GST to still we can see, but income tax to never see. Okay, I am telling you, those who are writing examination in December 25, you by mistake also, if you are not clearing the paper, you write in June 26. I pay only if you study the same law, meaning entire law is changed. income tax. So 10 years. June 26, 2 papers are there. December 26, 2 papers. We are discussing mock test paper, exam paper. Yeah, June 25 and December 25 will be same. Yeah, that will be same. Now this question, Ram provides the following details of income calculated. This is your textbook question. Now one by one, fatafat, we'll just discuss, okay? We'll just discuss. So they are telling if he is an ordinary resident, whether it is taxable or not taxable, if it is a not ordinary resident and non-resident. Salary received in India. What is this income? Salary received in India, Indian income. So can I say, just mark Indian income or foreign income? Income, so taxable for everyone. Hello. Income from tea business in Nepal being controlled from India. Foreign income or Indian income? It is a foreign income, but it is controlled from India, therefore it will be taxable for resident and ordinary resident and resident but not ordinary resident. It will not be taxable for non-residents. Interest on company deposits in Canada. 1/3 is received in India. So can I say 1/3 is Indian income? So for resident and ordinary resident, 30,000 will be taxable. And for others, 1/3 which is received in India is taxable. Profit from business in Mumbai controlled from UK. Business is in Mumbai. Therefore, Indian income taxable for everyone. Profit for the year 22-23 from business in Tokyo remitted to India. So from some 22-23 ka profit, now they have sent it to India. Is it taxable? Not taxable. Income from property in India but received in US. Can I say Indian income? Taxable for everyone because property is in India. Income from property in London received in Delhi. Indian income taxable for everyone. Income from property in London received in Canada. Foreign income taxable only for resident and ordinary resident, not for others. Income from business in Zambia but controlled from Turkey. Foreign income, correct? No. Taxable only for resident and ordinary resident, others it is not taxable. Correct? We will see now. So this we have written like this. And now, we have not totaled it all. Anyways, it is your book question. Book question, exactly this is book question. So this is the answer for this question. Tea business. Now see this tea business. Now this tea business which is there, will I apply 60%, 40%, sir? Will I apply 60%, 40%? No, because this income is from Nepal. Correct? So I will take full income on. So this is your June first mock test paper. Now, June ka second mock test paper, Mr. Bharat, an Indian citizen, left India for the first time. On which date which he left? For joining a job in Tokyo. Now tell me what is the provision which I am going to see. Determine the residential state of Bharat. So here can I say this is an exception to what? Second basic condition. So if you are a person who is going out of India as for an employment, if you are an Indian citizen who is going out of India for an employment, I will see 182 days ka condition. So, for determine the residential status of Bharat. When is he leaving? 25th of September. So 25th of September this year, 24-25, how many days he has stayed in India? 30 April, May, June, July, August, September. What is the total?
178.
178 days, huh? So 178 days, is it more than 365 days? 178 days, is it more than, is it more than 180 days? No, it is not more than 182 days. Therefore, can I say he is non-resident of India? See what answer they have written. under section 6 subsection 1 and an individual is said to be resident in the previous year if he satisfies any one of the following conditions, which is 182 days or 60 plus 365 days condition. They have written 6.1 condition. Then first you should write 6.1 condition, correct, because that is the normal law. Then we should, because he is going out of India for employment, there is an exception. First you write 6.1 condition. Now in case of Indian citizen leaving for employment, the period of stay during the previous year is required to be taken as 182 days instead of 60 days. Correct? So for them that exception is there. So during the previous year 24-25, Mr. Bhagat stayed for only 178 days. Thereafter, he left for employment. He has left for employment purpose. Since he does not satisfy the minimum criteria of 182 days during the 11th year, he is treated as non-resident. See the answer, how long, how big is this answer? For 7 marks, don't you think it is very small answer? So very easy to score. First write your basic condition. Then write that there is an exception for this condition. Sir, if I directly write the exception, you will lose the marks for this. Because you know that it is an exception, but for what? They don't know. Mr. X, aged 19 years, left India for the first time on 31st of May 2024. Examine his residential status for the previous year if he has left for employment and if he has left for world tour. For the first time he is leaving. Tell me I am leaving for employment, whether I am resident or not. Sir, can I say 31st May, that means 30 plus 31, 61 days I was in India for the year 24-25. If I am going for employment, am I a resident? No, sir. Why I should see? 180 days. What if I am going for a world tour? Can I say yes, he is a resident? Why? Because he is leaving for the first time. So this year he has satisfied 60 plus 365 days in the previous. So yeah, second case he is a resident and ordinary resident because he is leaving for first time. During the previous year 24-25, Mr. X was in India for 61 days as shown below, which is 30. You don't have to write for the full year like this, okay? During the previous year 24-25, X stayed in India for 61 days. Further, he was in India for more than 365 days in last 4 years. Though that information is not given, should I compute that he has stayed in India for more than 365 days? No, I know because he has left for the first time. So since he left India for employment purpose, condition section 6 subsection 1 clause C. Now you don't have to write this section out. Okay. This you can directly write. Since he has left from India for the first time, second basic condition is not applicable directly. Second basic condition is not applicable. He shall be treated as resident only if he satisfies 182 days condition. Mr. X is not a resident in India for the previous year 24-25. Why? Because he has not satisfied 182 days condition. Since he left on a world tour, if you are going for a world tour, there is no exception, it will be applicable, which is not an exception to section 6.1. Satisfying any one of the condition will make him resident of India. Since he satisfies second condition of 6.1, he is resident. Further, he is also satisfied dual condition of 6.6. Therefore, he is resident and ordinary resident. One more question. X came to India for the first time in July 2024. From July 2024, 24 to July 2020. From 24 July 2020 to 25th December 2021, he was in India. Again, he came to India on 5th of August for employment purpose and left India on 25th of November 24 permanently. Compute his residence if he is a foreign citizen, Indian citizen. Nice question. Tell me fast. Yeah. In both the cases, the answer is same, but what is the answer? Now please note, this year means previous year, 24-25, how many days he stayed in India? 5th August he came and he left on which date? 25th of November. So how many days, sir? August 5th he came. So 5th August means 31 days in August minus 5 days plus 1 days, 27 days. August, September, October, November 25th. How many days? So this year he stayed for 113 days. So I cannot apply 182 days condition. I should apply 60 plus 365. Now I should see last 4 years. Last 4 years will come. What period will come, sir? Last 4 years for 24-25. The last 4 years is 23, 24, 22, 23, 21, 22 and 20, 21. Okay. So he came. So here he did not stay at all. Here also he did not stay. In the year 21-22, he stayed till December. Hello. A, please note. When did he come? 20th July. When did he come? 20th July. And when did he leave? 25th December. So can I say this falls in the year 2021? And this is in 21-22. So can I say from July 2020 to March 21 I will take? Correct? No. And then I'll take from April to December 2021. Yeah, are you understanding? Hello. I have come from July 24th, 2020. I was there till December 2021. I came in 2020. I was there till 2021. Can I say I was there for more than 365 days? Correct? No? See, because 1 year will be completed on 24th July 2021. I was more than 1 year. So I was more than 365 days. Without writing this only, can I say I was there for more than 365 days? So can I say I am satisfying 60 plus 365 days condition? Hello. I am satisfying 60 plus 365 days condition. So if I am a foreign citizen who is coming to India, will he be treated as a resident? Yes. For which year? 24-25. He is resident, but why is not ordinary resident? Because last 10 years condition is not satisfying. Last 7 years condition is not. And what if he is an Indian citizen? Answer would be same. Okay, because he is coming from outside India. Irrespective of who he is and irrespective of for what purpose he is coming, whether you are a foreign citizen or Indian citizen, the answer will be same. Have you understood this? Where is the answer for this? Okay, for this answer is not there because it is not released yet. Is this clear? Everyone, is this clear? Online students, anyone has any doubt? Online students. We'll take a break now, or we'll complete house property and then take a lunch break. Income from house property, very easy topic. Compulsory question will come. Okay. Income from house property, very simple and easy topic. Income from house property. Now, from a house, section 22 is the charging section, which says, again, what type of question will come? Computation only will come. Rental income or annual value of house property will be taxable under the head income from house property if two conditions are satisfied. The rental income from house property will be taxable under the head income from house property if you are satisfying two conditions. There should be a house property and assessee should be owner of such house property. What do you mean by house property? Building and land appertaining to such building. Building and land appertaining to such building. For the purpose of computation, your house property is divided into two types. One is called as let out property, another one is called as self-occupied property. Let out property is a property which will always be taxable. Why? Because it is let out. You have given it on rent. You are receiving income. And that income will be taxable under the head income from house property. Whereas if it is a self-occupied property, if it is what type of property, sir? Self-occupied property. I will see. Self-occupied means the property which is acquired by me for my own purpose. Now, whether have I kept the property for my residence purpose or for my business purpose, that is important. If it is a self-occupied property for residence purpose, I will see how many properties I have. If I have up to 2 self-occupied properties, then it will be exempt. What will be exempt? The computation of capital gain will be exempt. If I have more than 2 self-occupied properties, then lawmaker says up to 2 I will give exemption, and for remaining properties I will call it as deemed to be let out property. Now, how do I compute the income from house property? See, whatever rent I tell, no, government will not accept it. So, government will do their own calculation. So, my actual rent will be compared by government with their expected rent, and I will take whichever is higher. That will be my gross annual value. Sir, what is your expected rent, sir? First, I will take municipal value, compare that municipal value with pay rent, and take whichever is higher. That whichever is higher will be compared with standard rent, and I will take whichever is lower. That is my expected rent. Expected rent will be compared with actual rent, and I will take whichever is higher. That will give me my gross annual value. From this gross annual value, I will subtract my municipal taxes. I will get my net annual value. From this, I will subtract deductions, standard deduction of 30% and interest on loan of whatever interest on loan is there. I will get my income from house property. Okay, I will get my income from house property. Now, that income from house property for self-occupied property up to self-occupied property, because it is exempt, there will be no net annual value. Up to self-occupied property, exemption can be claimed. And for remaining properties, I will have NAV. Because I have NAV, I will have standard deduction also. And interest on loan is the interest which you are paying for the loan which is taken by you. So that is always allowed as deduction, whether the property is self-occupied or let out. But if it is a self-occupied property, there is some limit applicable. Only that is the difference. Now, deemed to be let out property will not have actual rent because you are not getting any actual rent. Now, sir, what do you mean by municipal value? Municipal value is the value of the property as per municipal records. Fair rent is reasonable amount of rent for similar kind of property in the same locality. They will not ask you anything, but just for our understanding purpose. Standard rent means what, sir? Rent as per Rent Control Act. Actual rent is important. Rent received plus rent receivable minus unrealized rent. Now, municipal tax is also important. It is allowed as reduction. It is the tax which you are paying to municipality or local authority. It is allowed as reduction only if it is actually paid. If municipal taxes are not paid, it is not allowed as deduction. And if municipal taxes is given to you in a percentage format, you should take it as a percentage of municipal value. It is allowed only if it is paid by owner of the property. If it is paid by tenant, not allowed. Now, actual rent is what, sir? Rent received plus rent receivable minus unrealized rent. Now, you can subtract unrealized rent. What is unrealized rent? Rent which you are supposed to receive, which you never going to receive. See, rent received is whatever you have actually received. Receivable is he has stayed but not paid the rent. Unrealized is he has stayed and never going to pay. Okay, unrealized rent can be subtracted if 4 conditions are satisfied. Which are these 4 conditions? Tenancy should be bona fide. You should have genuinely given the house on rent to someone. The tenant should have vacated the house property. Now, the person to whom you have given the house on rent, he should have vacated your house, and the tenant should have not occupied any other house property of the same assess. And you should have taken reasonable step to recover that unrealized rent. Now, deductions. Section 24 talks about deduction. Deduction is allowed for what, sir? Interest. Deduction is allowed for standard deduction as well as interest. Standard deduction will be given flat 30% of NAV. Whatever net annual value you get into flat, 30% will be given to you as standard deduction. So, for self-occupied property, NAV is 0. Because NAV is 0, standard deduction also will be. But for let out property and deemed to be let out property, you will have some amount of NAV. Because you have NAV, you get standard deduction. Interest on loan. Interest on loan will be allowed as deduction if the loan is taken for construction, purchase, repairs or renovation of house property. It does not matter from whom you have taken the loan. The interest will be allowed as deduction. Now, interest will be allowed as deduction under section 24B. Even if the loan is taken from any person, it does not matter. If you are taking a fresh loan for repayment of existing house property loan, then also interest is allowed. So interest on loan will be allowed as deduction under section 24B if the loan is taken for the purpose of house property. Loan can be taken from any person. Interest will be allowed as deduction whether it is actually municipal tax will be allowed only if it is paid. Interest will be allowed whether it is paid or not. Penal interest, which is nothing but interest on interest, will not be allowed as deduction. Interest paid on fresh loan which is taken for repayment of existing house property loan will also be allowed as deduction. Any interest paid to a non-resident person who is there outside India, that will be allowed as deduction if you have deducted TDS. Now, how much interest is allowed, sir? That is important. How much interest is allowed? Now, interest which is allowed as deduction, if it is a let out property or deemed to be let out property, then there is no limit. Why? Because you are computing the income, you are showing some income to me, so any amount of interest is allowed as deduction. There is no limit. But if it is a self-occupied property, normally I will give you 30,000 rupees. How much interest will I give you? 30,000. But in some special cases, I will give you interest of 2 lakh. What are these special cases? Loan should be taken on or after 1/4/2020, 1999. Sorry, loan should be taken on or after 1/4/1999. Loan should be taken for construction or purchase of house property. And if the loan is taken for construction of a house property, the construction should be completed within 5 years from the end of the financial year in which loan is taken. Now, very important point. For self-occupied property, how much interest deduction can be taken by you maximum? 2 lakh rupees. Meaning, if you have 2 properties, normally the limit is 30,000 or 2 lakhs. If you have 2 properties, is it 2 plus 2 4 lakh? No. Lawmaker says all the properties combined together self-occupied. Maximum you can claim how much? 2 lakhs. Now here there is an important point. If an assessee has opted for paying tax under default regime, then for self-occupied property there is no interest deduction. So self-occupied property interest deduction will be allowed only if you are opting for optional tax regime or old tax regime. Pre-construction period is there. Pre-construction period means what, sir? Pre-construction period interest is nothing but the interest paid by you for the period for all the years before the year in which construction is completed. So for all the years before the year in which construction is completed, whatever interest is paid by you, that interest is called as pre-construction period interest. That is allowed as deduction in 5 equal installment from the year in which construction got completed. Then concept of vacancy. Vacancy means what, sir? The house property is empty. No one has occupied the house property. Then it is called as vacancy. Unrealized is not equal to vacancy. Vacancy means what, sir? I rented the house to Virat Kohli for some period. He left the house on 30th of September. Then the next tenant came on 1st of December only. So the 2 months the property was not occupied by anyone. The property was vacated. This is called as vacancy. Now, whenever there is a vacancy, see, normally what do I do? While computing the income from house property, I'll take my actual rent, compare that with standard rent and take whichever is, sorry, I'll take my actual rent, compare that actual rent with expected rent and take whichever is higher. Now here also you should do the same. But when you are taking the actual rent, you should add vacancy period rent and then compare. As simple as that. See, normally the gross annual value is expected rent or actual rent, whichever is higher. Whenever there is a vacancy, actual rent, gross annual value will be actual or, sorry, expected rent or actual plus vacancy rent. Now, in case your expected is more than actual plus vacancy, gross annual value will be expected rent. If your expected rent is less than actual plus vacancy rent, then just take actual rent. Because vacancy period rent you have not received, just take actual. Please note, I'll repeat once again. Normally, what is my gross annual value? Expected or actual, whichever is higher. Vacancy rent is what, sir? The rent for the period when the property was vacated. Have I received that rent? No. If I have not received that rent should not be added in my computation. Correct. If I have not received that rent should not be added for my computation. But still, whenever there is a vacancy, only for comparison purpose, I will add vacancy rent to whom? Actual rent. Because if it would have not been vacated, I would have received so much. No? Now, I'll compare expected rent because expected rent will always be for full year. This expected rent will be compared with actual rent. Now, actual rent with vacancy period. If expected is more than actual with vacancy, then gross annual value will be expected. If expected is less than actual plus vacancy, gross annual value will be actual. If expected rent is equal to actual plus vacancy, gross annual will be actual. Now, partly let out and partly self-occupied property. So, what do you mean by partly let out and partly self-occupied property? See, partly let out and partly self-occupied property means the house property was self-occupied for few months and it was let out for few months in the previous year. It is partly let out, partly self-occupied. This can be area-wise or time-wise. Area-wise means what, sir? Some portion of the house was let out, some portion was self-occupied. Time-wise means what, sir? Same house was let out for some period and self-occupied for some period. Now, if it is partly let out, partly self-occupied area-wise, very simple, very easy. Compute the income from house property by taking your municipal value, fair rent, standard rent, municipal taxes, interest proportionately for let out and self-occupied. Meaning, if it is area-wise, you will have to have two columns, self-occupied column and let out column. For self-occupied, you compute separately. For let out, you compute separately by taking everything proportionately. Okay. Now, when you are taking the interest amount, be very careful. Interest amount, no. For self-occupied, maximum limit is 2 lakh. For let out, whatever amount is coming, meaning interest also you proportionate. For example, if the total interest is 6 lakh and if it is 60%, 40%, for self-occupied, it will be 3,60,000. Let out, it will be 2,40,000. Self-occupied, maximum you can take how much? 2 lakh rupees. And for let out, there is no limit. Now, if it is a partly let out property, time wise, what will you do, sir? You compute your income from house property assuming there is no let out, assuming that it was let out for full year. Meaning, if it is let out time wise, ignore that it was self-occupied. Compute the income from house property as if it was let out for full year. But when you are taking actual rent, take it only for let out period. Okay. So here interest also will be allowed for full year. You compute the income like this. Partly let out concept is important. Co-ownership, small concept. Co-ownership, time pass, nothing is there. Co-ownership, what will happen, sir? Compute the income without checking who is the owner, how many owners are there. Just compute the income normally, applying normal provision. Whatever final answer you have got, divide between co-owners in the ratio of ownership. So where the property is jointly owned by 2 or more persons, then such property is called as co-owned property or jointly owned property. The owners of such property will be called as co-owners. Computation of income from house property in case of co-ownership. Compute the income from house property. Compute the income from house property as if there is no co-ownership. Then divide the income from house property between the co-owners in the ratio of the ownership. So if self-occupied house property is co-owned, each co-owner will get benefit of 30,000 or 2 lakh rupees. Each co-owner will get that benefit separate. Now, what if I have more than 2 self-occupied property? Normally, they ask this examination in they ask this question in examination. Why? Because it is little lengthy. Okay. Normally, when you have more than 2 self-occupied property, how did we learn, sir? I can take more than 2 self-occupied property. I can take only benefit for 2 properties as remaining properties will be deemed to be let out. So, what did we learn, sir? Compute the income if everything is self-occupied. Compute the income if everything is let out. Then there will be 3 options. See, I have 3 houses. All the 3 houses are self-occupied. Correct? No. I have 3 houses. All the 3 houses are self-occupied. So here, Option number 1 is take first two house as self-occupied, third house as let out. Then house 1, house 3 as self-occupied, DLOP will be house 2. House 1 as DLOP and house 2 and 3 as S. Meaning 3 options, you just fit the amounts and do the total. Whichever option the total is less, that option is best option. Then taxability of arrears of rent and unrealized rent. Arrears of rent means what, sir? Rent which is there under dispute. And unrealized rent means what, sir? Rent which you are supposed to receive but never received. Now this rent, if you receive in future, it is taxable in the year when it is received. And how much is taxable, sir? Whatever you are receiving into 70%. Arrears of rent and unrealized rent will be taxable in your hands even if you are not the owner of the property. That also you should. Composite rent means what, sir? For house property which you have rented, you are receiving rent for house as well as other assets. So if the rent which you are receiving is for building as well as other assets, I am giving furnished house wherein furniture is there, AC is there, fridge is there, everything is there. So here my rent will be composite rent. So in such cases, tax treatment in case of composite rent. Now can you separate that composite rent? For example, I have given you a house. Rent charge is 20,000 rupees, wherein that is a fully furnished house. I say 12,000 is for the house, 8,000 is for furniture. So can you say composite rent is separable? So here 12,000 will go for income from house property and other things will go for income from business or profession or other sources, depending upon what it is for me. Okay. So if composite rent is separable, the rent from house property will be taxable under income from house property and rent from other assets will be taxable under PGBP or other sources. What if I cannot separate that? 20,000 I am receiving from you, I don't know how much is for house and how much is for other assets. Total amount of 20,000 will go under PGBP or other sources. Further, if the assessee, if the let out of house property is not possible without other assets, if you cannot let out only with the other assets, for example, hotel room, hostel room, they cannot rent without that bed, etc. Then the entire rent, the total rent will be taxable under PGBP or other sources, whether composite rent is separable or not. House property is held as stock in trade. If the house property is held as stock in trade, the income from sale of house property will go under business, of course, because it is a stock in trade for me. The income by way of renting house property will go under house property. Now, there may be a case wherein you have a property which is a stock in trade for you, but you have not sold it and you have not rented it. Lawmaker says I will wait for 2 years. Even after 2 years, if you are not selling or giving it on rent, I will call it as deemed to be let out property. Where a house property is held as stock in trade and is not let out during the previous year, the NAV of such property shall be treated as nil for the period of 2 years from the end of the financial year in which the construction is completed. Now, if the house property is located in India, can I say whether you are resident, non-resident, always it is taxable? If the house property is located outside India, resident or ordinary resident, it is taxable, but for non-resident and resident but not ordinary resident, it will not be taxable. Why? House is outside India. But for them also it may be taxable if the income is received in India. I mean, this even if you don't see it is fine because we have already studied residential status. A owner includes legal owner, beneficial owner and deemed owner. Deemed owner means what, sir? You are not the owner, but I am going to assume that you are the owner. Transfer of house property by an individual to his or her spouse without consideration or for inadequate consideration. I am giving house to my wife without any consideration. Though legally the owner is wife, I will be the deemed owner of that property. I am giving house property, transfer of house property by an individual to his or her minor child without consideration or for inadequate consideration. In such cases, individual shall be deemed as owner. Holder of an impartible estate or member of a cooperative society, the members will be deemed owner. Transfer of possession without transfer of immovable property, and you are giving an asset for a long-term lease for a period of 12 years or more. Okay, so this is all about house property. There's some extra notes are there. I mean, self-occupied property exemption is given only for individual and HUF. Then municipal taxes, even if it is paid in outside India, you can take the deduction. Roof is not necessary for treating it as a house property. Building consisting of different flats, each flat is a house property. Refund of municipal taxes is taxable under other sources. House property is acquired by a person by paying amount in installment. If you are purchasing a house property on installment, then for each installment you will have to pay interest also. That interest is allowed as deduction. Then if I give a house property to my employee so that my business is running smoothly, that income, whatever rent employee is paying me, that will be taxable under PGBP. And if a partner has given the house property to the firm for carrying on the business, then it is that is a self-occupied property for business purpose. Question we'll see. Salary question is there first. Two brothers, Arun and Bimal question, you remember? Two brothers, Arun and Bimal. This I have told you, most important question. Two brothers, Arun and Bimal. It has four concepts: co-ownership, vacancy, partly let out, and interest concept. So I told you, very important question it is. That is not there in your material, Sundari. Now, see this question. I'll read this question. Important question, okay. Two brothers, Virat and Rohit, are co-owners of a house with equal shares. The property constructed during the year 2016 and 17. The property consists of 8 identical units and situated at Kerala. Now here, what is the change? They have changed this year. In my case, it was before 142,000. So interest limit was 30,000. Here the interest limit will be 2 lakhs for each co-owner. During the financial year 24-25, each co-owner occupied 1 unit for residence, and the balance 6 units were let out for rent of 12,000 rupees. So what is happening over here? There is a house. This has 2 parts. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7, 8. 8 identical units are there. Let us say this 4 belongs to Virat, these 4 belongs to Rohit. In these 2 units were self-occupied. Balance 6 units were let out. For how much, sir? 12,000 rupees per month. Okay. Municipal value of the property is 10 lakhs. Municipal taxes paid is 20%, which were paid during the year. These are expenses. Repairs I will ignore. Insurance also I will ignore. Why? Because expenses I don't take. I directly take 30%. Interest payable on loan taken is 3 lakh rupees. Now can I say partly let out, partly self-occupied property? Yes. So co-ownership is there. Partly let out, partly self-occupied is there. So interest will be divided for SOP and LOP. Now, can I say self-occupied portion is 2 by 8, let out portion is, which is nothing but 25%, and partly let out, partly self-occupied area wise. So how much interest will be for self-occupied? 2 lakh. One of the let out unit was vacated for 4 months during the year. Acha, vacancy is also there. One of the let out unit. So tell me, what is the rent which I am going to receive in the year? My actual rent. Actual rent will be 12,000 into 12 months for 6 units. From that, 1 unit was vacated for 4 months. So my actual rent is 8 lakh. Correct? 8,16,000. And my municipal value they have given 10 lakh rupees. Virat could not occupy his unit for 6 months as he was transferred to Kolkata. He does not own any other house. No problem. He could not occupy his house. So even if it is, see, self-occupied property includes a self-occupied property includes what, sir? Your own property, or even if you have occupied it all, you are not occupied, it is still your self-occupied property. The other income of Virat is 2,35,000 and Rohit is 1,65,000 for the financial year. Compute the income under their house property and the total income of two brothers if they pay tax under default regime. Because they are paying tax under default regime, self-occupied car deduction will not be available. Hello, self-occupied interest car deduction will not be available. Apart from that, everything is also wait. Also compute the income under this head if both have exercised the option of shifting out. Problem is, don't you think very big answer it will be? First, compute the income assuming they are opting for optional regime and then default regime. Basically, what you are supposed to do is till NAV your answer will be same. After NAV the answer will change. Little lengthy question. Now we will see the answer. Have you understood the answer discussion part? Now they have done in a different way. I have taught in a different way. Okay. I will do as per my way. Okay. I'll redo this question as per my way. Just because you have learnt in my way. Just you have to know in examination whatever way you are doing in life is correct or not. See, what did we learn? Particulars, let out, self-occupied. Let out is 75, SOP is 25%. Now here municipal value, fair rent, whichever is higher. Compare that with standard rent, whichever is lower. That will be my municipal value. They have given 10 lakh rupees. Can I say 7,50,000 will go over here? And here I'll anyways ignore. So here they have not given fair rent. So whichever is higher is 7.5 lakhs. Expected rent is how much, sir? Now my actual rent is how much? You have already computed. 8 lakh 16,000 rupees. Whichever is higher is my gross annual value. Sir, there is a vacancy, no sir? Should I take, but still your actual place vacancy is only higher. So can I take actual rent only? Less municipal taxes, they say 10% of municipal value. So 75,000. So for this fellow there is no reduction. So my NAV is what, sir? 7,41,000. Here 0. Can I say this will remain same for default tax regime and optional tax regime? Correct. No. Less 24A standard deduction, 24B interest on loan. So how much is standard deduction? 30% of this? 2,22,300. Here there is nothing. Interest on loan will be 3 lakh. 2,25,000. Correct? No, 2,25,000 here only we discussed. And for self-occupied property, I'll just write 75,000. 2 lakh 22,300. Now, what is my income from house property? This is under optional tax regime. Okay, whenever you are finding income, no, better find an optional regime because that is the normal law. So, what is the answer? 2 lakh. And here it is loss of 75,000. So what is my net? 2 lakh. Now for Virat it is how much? Rohit it is how much?
1 lakh.
Okay, yeah. Now same thing, you go back. Income from house property under optional tax regime 775. Add back interest on loan not allowed for SOP. Here for this, so it is allowed, no change will be there. Here I'll add back how much, sir? So negative will become positive now. So my income from house property will be how much? So now this will be divided between Rohit and Virat. 1 lakh. This is under default regime. Default tax regime. Okay, you can do this, or what you can do, directly take NAV, then subtract this only for let out property. Okay, better to do what, sir? Compute the total income, meaning you compute this income, then add back what is not allowed. That will be simple, that will be very easy. Now what answer we have got? 1,09,000 and 1,46,850. Total income you ignore. Which regime is this? Default tax regime. Interest on loan. Interest on loan. Ayo, this cubism, they have computed 2,35,000. No, they have computed for self-occupied, they have computed over here. Let out portion, they have computed over here. Net income from house property is how much? What is the total of this?
1,66,200.
Interest on loan. Okay. Yeah, which is nothing but 75,000. Self-occupied each person will get a loss. We did a total and then we divided. Let out portion. What is the total of this? You tell me.
2,41,200.
Municipal taxes. Municipal taxes is 20%. We have done 10%. What is the answer? 20%. Yeah, this answer you tell me. 6,66,000. Stand deduction is 1 lakh. What is the difference? Now 10% is the municipal taxes in our question which we have solved in the class. So that was there in. Tell me, what is the answer? 4 lakh. 2,42,000. So net income is 1,66,000 with 83. Now you see 83,100, 83,100 we are getting. Correct? Huh? So under default tax regime, how much will be? 75,000 you should remove. Add back 75,000. 1,66,200 plus 75,000 is how much?
1,26,600.
So it is 120,600. 120,600. $120,600. Okay, yeah. Income from house property. Now total income means what, sir? Add other income, you'll get your total income. You okay? Yeah? Question? Oh, what is this big question? They must be asking you to find net annual value. Okay, nothing is there. Find the net annual value. What is net annual value? Municipal value. Oh, you gross annual value they have directly given. Gross annual value they have given. Now the question is whether, see, actually basically nothing. If you remember, I'll show you. Municipal taxes includes all the different types of taxes. Municipal taxes includes what, sir? Sewerage tax, property tax, or house tax. There are different names of municipal taxes. Correct? No, you have written this. Municipal taxes is also known as taxes paid to municipality or local authority, also known as house tax, property tax, sewerage tax, local tax. So what they have done in this question is, basically they have given you gross annual value. Now they have given you municipal taxes. What they have done, in first case they have given you 5,000. So what is the answer in first case? 95,000. No, that is only net annual value, no sir. 95,000. Second case, what they have done? They have given you gross annual value. They have given you percentage of taxes. Instead of giving you amount, they have given it in percentage form. Total this, apply the percentage. 18%. 36,000. Huh? 2 lakh? 5,000 or 14,000? A municipal value into this 18%. 2 lakh into 18% is 36,000. Subtract from 2 lakh 50,000. Correct. Then now here what you take, 10% you take. 10% if you take 30,000 plus 1,000. Are you understanding? Same we are supposed to do for other cases also. Now here in case of house 3, municipal taxes for financial year 2001-2 and 2023-24 is 2 lakhs. So now municipal taxes is allowed in the year when you are paying. So there are some cases for house 3, for last around 10-15 years you have paid the tax now. From 2001 to 2023, for last 23 years you have paid tax now, which is 2 lakh rupees. And for house 4, municipal taxes paid in financial year, whatever you are paying for future, you should not subtract. Whatever you are you can subtract only for municipal taxes paid for current year and previous year, not future years. In case of house 6, all taxes charged by municipality are paid to the extent of 80%. 50% was paid by owner, 30% paid by tenant. Meaning here, how much will I take? Only whatever paid is paid by owner. Now we'll see the answers over here. See, in first case 95,000 we got. Second case, only first 2 cases we did. So second case also I got the same answer. In third case, what is happening? The answer, we computed the municipal tax amount, which is how much? 31,000. If you see our computation, how much did we get, sir? 31,000. But I am adding this 2 lakh rupees. Hey, because previous years also, if you are paying it now, you just take into consideration. So I have added this, so I'll get a loss. So similarly for future years also, I am doing the same thing. Okay. Municipal taxes is allowed only on cash basis, but advance municipal taxes is not allowed as deduction. Municipal taxes paid by tenant is not allowed as deduction. 2 lakh rupees being municipal taxes of past years will be, past year municipal taxes also will be allowed as reduction, plus you take 5% of current year. Now compute the gross annual value they have asked you. Tell me the answer for this. Gross annual value in respect of following: value determined municipal authority, which is nothing but municipal value. Rent for similar kind of, now here they have not given you the actual name, they think you are go base. So they have given you municipal value, then this is pay rent, this is standard rent, actual rent receivable, unrealized rent. So if I subtract this, I'll get my actual rent, and they have also given you period of vacancy. Can you please compute and tell me fast? This is an exam question which they are going to ask this attempt. Yeah, they'll ask you this question in examination. Trust me. Here, first you find the expected rent. Okay, yeah. Actual rent receivable means it is for full year. Expected rent is how much? House one, it will be this or this, whichever is higher. 500 and 720. Yeah. 500 and 720 is my expected rent. Actual rent will be what? This is rent receivable. So whichever is higher, who is higher? Expected rent is higher. No, then why they have given vacancy? No, then I mean this amount will be excluding the vacancy rent. Actual rent receivable is 350 and 240. So receivable is that much, meaning that is for let out property. See, 350, that is for how many in a year? How many months are there? 12 months. This is for 7 months. So how much is my actual rent per month? Per month is 50 rupees. 540 divided by 9 months. For house 2 it is 60. Now for house 2, if I would have received for full year, how much I would have received? 50 into 12. House 1, I would have received for full year 50 into 12 minus unrealized rent 590. So what is my gross annual value for house 1? 590 will be compared with 500, whichever is higher. 500, I'll take actual rent. What is my actual rent? What is my actual rent? 340 rupees. Okay. Then second case, what is happening? 540, which is nothing but 60 into 12, 720 compared with 720. Both are equal. So what is my actual rent? If both are equal, actual rent is okay. Yeah? Yeah, have you understood this question?
Yes, sir.
Simple question only. Where is the answer for this question? 340 and 540. Correct? Now here they would have written whatever in their language which you never saw. Okay, no problem. This is also same question asked in the last time. A similar question, no? Hello. Same to same copy paste they have done. Last group to what module to whatever they have asked, same question they have been correct. Okay, yeah. Now we'll take a break. Anyone has any question? House property. Now this is fine. This way of teaching is fine. Yes. Revise, do mock test paper. Fine, no? Yes. Or else should we do questions from class materials only, because we have already done that. Okay, this is fine, I think. And it is marathon. No, we should complete maximum syllabus. Okay, we'll meet at what time? 12:40 is the time. 1:15 I'll meet. 1:15. 1:15. Online students will meet at 1:15. 1:15. 1:15 only. No, 1:15 is. Welcome back, students. Welcome back. Now, I think you would have all got message that you are absent for today's session, but no problem. I'll take photo at the end and we'll upload that photo. Okay. Google is taking my photo now. I have also sent them that QR is not visible. Okay. Next topic for discussion is income for. Income for. Capital gain. ಏನಿದೆ ಮಾಡೋಣ ಸರಿ. Okay. Welcome back, students. Welcome back. So the next topic for our discussion is what, sir? Income from capital gain. What is there in life? Income from capital gain, important chapter. Of course, there will be question from every chapter. Hey, my AC is only not on. I go, yeah.
You want
That one day.
She's already no, just standing on.
Again, answer.
Okay, income from capital gain. The next topic for discussion is income from capital gain. What is this chapter talking all about, sir? Very simple, very easy. If you have a capital asset and if you transfer that capital asset, if you have a capital asset, if you transfer that capital asset, upon transfer of that capital asset, if you get any gain, that gain is taxable under the head income from capital gain. Section 45 is the charging section of this chapter. Now, in the previous chapter, what is the section number I should remember? Income from house property, remember section 24A, 24. Deductions chapter, deductions section number you should remember. Section 45 subsection 1, charging section of capital gain. What is section 45 subsection 1 telling? Any profit or gain arising from transfer of a capital asset shall be taxable under the head income from capital gain. When will it be taxable, sir? In the year in which transfer took place. In the year in which transfer took place. Next, section 2 clause 14 gives the meaning of capital asset. Capital asset means property of any kind held by the SSC, whether connected to the business or not. Any securities held by foreign institutional investors, and ULIP which is not exempt under section 10D. But it shall exclude stock in trade, gold bonds and gold certificates, then movable personal effects except DJ Pasu BV. Normally movable personal effects are not capital asset, but DJ Pasu BV, though they are movable, they will be treated as capital asset. And it shall not include rural agricultural land. Rural agricultural land means agricultural land located in rural area. Rural area means the area which is not urban area. Now, what is an rural urban area, sir? Area whose population is 10,000 or more is an urban area. Now, if you are staying in an area whose population is more than 10,000 up to 1 lakh, then your area, of course, is an urban area. From your area up to 2 kilometers is an urban area. If you are staying in an area whose population is more than 1 lakh up to 10 lakhs, your area, of course, is an urban area. From your area up to 6 kilometers is urban area. And if you are staying in an area whose population is more than 10 lakhs, then your area, of course, is an urban area. From your area up to 8 kilometers area is also called as urban area. Now, normally movable personal effects are not called as capital asset except DJ Paso BV. DJ Paso BV means what, sir? Drawings, jewelry, painting, archaeological collections, sculptures, shares and securities, any other work of art, bullion and virtual digital asset. These things are, what are these things? Capital assets. These things are capital assets. Now, transfer. Section 2 clause 14 says transfer includes sale of a capital asset, exchange of a capital asset, relinquishment of capital asset, extinguishment of capital asset, conversion of capital asset into stock in trade, compulsory acquisition of capital asset, allowing possession of immovable property as per Transfer of Property Act, transfer of share in cooperative society, and redemption of zero coupon bonds. These are all treated as what, sir? Transfer. This is the meaning of transfer. Now, there are two types of capital asset. One is called as long-term capital asset, another one is called as short-term capital asset. If you transfer long-term capital asset, the gain which you get is called as long-term capital gain. If you transfer short-term capital asset, the gain which you get is called as short-term capital gain. Now, for checking whether it is long-term or short-term, we see period of holding. Period of holding is the period from the date of purchase till the date of transfer. If the period of holding is more than 1 year, 2 years or 3 years, it is long-term. If it is less than 1 year, 2 year, 3 year, it is short-term. So 1 year or 12 months time limit will be seen for any securities other than units listed in recognized stock exchange of India or units of equity oriented mutual fund, unit of business trust of India, unit trust of India, and zero coupon bonds. For these items, I am going to see period of holding of 1 year, and 2 years period of holding will be seen for immovable property and unlisted shares, and then 3 years period of holding will be seen for all other capital asset. But if the transfer is made on or after 23rd July, then the 3 years period has been now removed. This is an amendment. The 3 year period has been now removed. Now, while computing capital gain also, what will I do, sir? I will take full value of consideration, subtract expenses incidental to transfer. Then I'll take net sale consideration or cost or indexed cost of acquisition, cost or indexed cost of improvement. I'll get my capital gain. From that, I'll subtract exemptions if any. I'll get my taxable capital gain. Now, here, when I'm taking cost of acquisition or cost of improvement or index cost of acquisition, index cost of improvement, I should make sure that if it is a long-term capital asset, I should take index cost of acquisition and index cost of improvement. But if it is a short-term capital asset, I should take only cost of acquisition, cost of improvement. Now, in long-term capital asset also, one change is there. If the transfer is happening on or after 23rd July 2024, what will not be available? Indexation benefit is not available. Indexation benefit is not available. So note, index cost of acquisition. How do I calculate index cost of acquisition? Sir, you said if the transfer is after 23rd July, then only indexation is not available. Correct, sir? Correct. Sir, what if I am making a transfer before 23rd July? Now, in such cases, indexation is available? Yes, of course, indexation is available. So tell me, sir, if indexation is available, how will I calculate index cost of acquisition? Take your cost of acquisition. Whatever is your cost of acquisition, take that. Multiply it with what? Index for the year of transfer, divided by index for the year of acquisition. That will give you indexed cost of acquisition. By the way, what is indexed cost of acquisition? They are giving the benefit of inflation. They are increasing the cost of that particular item by giving you the benefit of inflation. Indexed cost of improvement. What is indexed cost of improvement? Index cost of improvement is your cost of improvement multiplied by index for the year of transfer divided by index for the year of improvement. Okay. Now, if the capital asset is acquired before 1/4/2001, see, normally my cost of acquisition is actual cost of that asset. But if the asset is acquired before 1/4/2001, my cost of acquisition should be taken as actual cost of that asset or fair market value as on 1/4/2001, whichever is higher. Actual cost of asset or fair market value of that asset as on 1/4/2001, whichever is higher, should be taken as my cost of acquisition. Should be taken as my cost of acquisition. This will be applicable if the asset is acquired before. If the asset is acquired after 1/4/2001, can I say whatever actual cost or purchase price is there, that will only be taken as cost of acquisition? Note, fair market value as on 1/4/2001 should not be more than stamp duty value as on 1/4/2001. While discussing stamp duty value, there is one concept called as stamp duty value. If you remember, for immovable properties, we are supposed to take stamp duty value. Now they say that if the asset is acquired before 1/4/2001, what is your cost of acquisition? Hello. If the asset is acquired before 1/4/2001, what is the cost of acquisition? Actual cost or fair market value, whichever is higher. Now they say that the fair market value as on 1/4/2001 should not be more than stamp duty value as on 1/4/2001. So if any immovable property is acquired before 1/4/2001, I should compare stamp duty value and fair market value and take whichever is less. That should be compared with actual cost, and I should take whichever is higher. If any improvement is done before 1/4/2001, what will I do? Ignore. Just like your. He does not say that. Ashish sir does not say that. Okay. Amendment applicable for transfer of capital asset on or after 23rd July. No indexation benefit will be available if you are transferring any capital asset on or after 23rd July 2024. Now, what is the amendment applicable from 23rd July, sir? See, for long-term capital asset, okay, now long-term capital asset, it is applicable only for long-term capital asset. You would have written this chart. I'll come directly to this chart. Okay. Tax rates applicable for capital gain. Capital gain can be of two types: long-term capital gain, or it can be short-term capital gain. If it is short-term capital gain, I'll discuss first because it is very easy. If, see, short-term capital gain is taxable under 111 or 111A, correct? If it is 111, always slab rate. If it is 111A, then can I say 15% and 20%?
Yes.
15% if the transfer is before 23rd July and 20% if the transfer is on or after 23rd July. Okay. Whereas long-term capital gain is also taxable under two sections, 112 and 112A. For 112A, again, no indexation, never it is allowed. Okay. Now, long-term capital asset is transferred before 23rd July. If the long-term capital asset is transferred before 23rd July, if the long-term capital asset is transferred before 23rd July, then tax rate will be, if it is taxable under section 112, then the tax rate will be 20% and you will also get the benefit of indexation. But if the transfer is, if the capital gain is taxable under section 112A, tax rate will be 10% for gain in excess of 1,20,000 rupees, and no indexation benefits will be given under 112. If the transfer is on or after 23rd July, for 112A, tax rate is 12.5% for gain in excess of 1,25,000 and no indexation benefit is given. Basically, for 112A, indexation benefit is never given. However, if the transfer is on or after 23rd July 2024, and if it is not 112A, if it is taxable under 111, then I will see the type of capital asset which is transferred by me. If the capital asset which is transferred by me is an immovable property, if it is an immovable property, and if I am an individual, for me the tax rate applicable will be 20% with indexation or 12.5% without indexation, whichever is less. And for all other people, it is 12.5% and no indexation benefit. And for other capital assets, if it is any other type of long-term capital asset, then for me, what will be the tax rate applicable, sir? 12.5%. I will not get indexation benefit. Now, then we saw what, sir? Section 45 subsection 1. Section 45 subsection 1 talks about what, sir? Exception to the general rule. What is the general rule? Capital gain is taxable in which year? In the year in which transfer took place. Correct? No. But there are some exceptions for this. There are some exceptions. There are totally how many exceptions, sir? 4 exceptions. There are totally, there are many more exceptions, but majorly important is these 3 exceptions only. Okay. Exception number 1, conversion of capital asset into stock in trade. So whenever conversion of capital asset into stock in trade is happening, conversion of capital asset into stock in trade. So if you are converting a capital asset into stock in trade, it is treated as transfer. When will transfer take place? In the year in which you are converting, that year will be treated as the year of transfer. However, capital gain tax you will have to pay when you sell the stock in trade. Please note, I'll remember. I'll revise. We'll repeat once again. Whenever there is a capital asset which you are converting into a stock in trade, the year in which you are doing the conversion, the year of conversion will be taken as the year of transfer. However, capital gain tax you have to pay when you sell the stock in trade. So, in the year when you sell the stock in trade, 2 types of income will come. Which are this income? Capital gain income and business income. What is capital gain income? You take the full value of consideration. Now, what is the full value of consideration? Because the item which you have sold is stock in trade. So, full value of consideration for capital asset will be the fair market value as on the date of transfer. Whatever is the market value of the asset as on the date of transfer, that should be taken. Fair market value as on the date of transfer, that should be taken by you. From that, subtract expenses incidental to transfer, you'll get your net sale consideration. Subtract your indexed cost of acquisition, you will get your capital gain. Now please note, here, even if the stock in trade is sold after 23rd July, I will take index cost of acquisition because transfer takes place in the year in which conversion is happening. Hey, when is the conversion happening? That is very important over here. Okay, conversion will happen in the year when stock in trade is converted. That year transfer will happen. So capital gain, I should take for computing capital gain, my full value of consideration will be the fair market value as on the date of conversion. What is the fair market value as on the date of conversion? And when I am taking indexed cost of acquisition also, I should take only till the date of conversion. Okay, not okay? Now for computing business income, my sale price will be 90 lakhs, which is nothing but sale price of business asset. Now, do I have any expenses for making this sale? Like conversion cost is there, any type of expenses should be taken and subtract by subtract cost, I'll get my business income. I'll get what, sir? I'll get my business income. Sir, what if the stock in trade is sold in installment? Capital gain amount will remain same, but it will be taxable as and when the stock in trade is sold. For example, if out of 100 acres of land, I have converted entire 100 acres, but only 70 acres is sold, my gain amount will remain same, but taxable gain will be only 70%. So, as per section 2, clause 47, conversion of capital asset into stock in trade is regarded as transfer. Transfer takes place in the year in which conversion has happened. However, capital gain tax is payable in the year in which stock in trade is sold. Therefore, in the year in which stock in trade is sold, two incomes arises. One is income from capital gain and income from business or profession. If the stock in trade is sold in installment, capital gain shall also be taxable in the installment as and when the stock in trade is sold. Compulsory acquisition of capital asset under any law. Now, compulsory acquisition means what, sir? Say this is a house which is purchased by me. Now this house is compulsory acquired by government. So the compulsory acquisition is happening in the year. See, transfer will take place in the year when compulsory acquisition happens. And when will I have to pay capital gain tax? When compensation is received. Okay. Transfer will take place in the year in which compulsory acquisition is happening. However, capital gain tax is payable by me in the year when compensation is received. Now, sometimes what may happen, if I am not happy with the compensation, I can ask for extra compensation. For that extra compensation, I should pay the taxes. Okay, that extra compensation pay tax I should pay in the year in which that amount is received. And while taking indexation, I should take indexation benefit only till the date of compulsory acquisition. See, compulsory acquisition of a capital asset. Compulsory acquisition of a capital asset is regarded as transfer, and transfer will take place in the year in which compulsory acquisition is happening. However, capital gain is taxable in the year in which compensation is received. So if the compensation is received in installment, now check what is that compensation. If it is the initial compensation which is received in installment, total capital gain tax shall be payable when you receive the first installment. However, if the additional compensation is received in installment, capital gain shall be taxable as and when the installment is received. The initial compensation is received in installment, pay full tax amount when you receive first installment. Okay. Computation of gain, you take your full value of consideration less expenses, you will get net sale consideration less cost and index cost of acquisition, cost and index cost of improvement, you will get your capital gain. Correct. Now here indexation benefit will be taken only till the date when it is compulsorily acquired. While taking additional compensation, full value of consideration you should take, meaning whatever additional compensation you have received, subtract expenses. Expenses is only one expenses, which is legal expenses. Now, I also receive sometimes because the government is paying the money to me late. Sometimes because the government is paying me money late, what may happen? I may receive interest amount also. Because government is paying me the money late, I may receive interest amount also for delay in payment of consideration. That interest amount is taxable under income from other sources. And how much is taxable? 50% of amount received. Now, if there is any damage and destruction on capital asset, if there is any damage and destruction of capital asset because of natural calamities, riots, enemy attack or fire explosion, then it will be regarded as transfer. And transfer will take place in the year in which damage or destruction has taken place, and capital gain tax is payable in the year when insurance claim is received. Okay, here condition is very important. Two major condition is, first, there should be damage and destruction because of 4 reasons: natural calamities, riots, enemy attack, fire explosion, and you are receiving insurance claim for the damage and destruction. Now, how will you compute the capital gain, sir? You should take full value of consideration, which is your insurance claim received. Insurance claim received means take money plus fair market value of assets received by you. You take that amount less expenses incidental to transfer. You take net sale consideration. Cost or index cost of acquisition, cost or index cost of improvement. You take your capital gain. Now, next important thing, which is section 50C. What is 50C? Section number also you should be knowing. What is 50C, sir? Stamp duty value in case of immobile property. See, normally for immobile properties, whatever sale price is there, no, that sale price will always be compared with one value called as stamp duty value. For immobile property alone, whatever sale price is there, that sale price will be compared with stamp duty value. So, concept of stamp duty value. Normally, full value of consideration is taken as the price at which you have actually sold the capital asset. However, if the stamp duty value is more than 110% of full value of consideration, sale price, then the stamp duty value will be taken as full value of consideration. See, normally what is my full value of consideration for computing cap gain? Whatever price I have sold the asset. But if the stamp duty value is more than 110% of sale price, I will take that stamp duty value as my full value of consideration. Okay. Now, if I'm not happy with the stamp duty value, I can always go to the valuation officer. Valuation officer will give his value. If that value is more than stamp duty value, I'll take stamp duty value. If valuation officer ka value is less than stamp duty value, I will take officer ka value. If valuation officer ka value is less than or equal to stamp duty value, less than selling price or equal to selling price, I will take sale price only as full value of consideration, because that is the price which I am telling that is my sale price. Now, stamp duty value as on which date should be taken? Date of agreement or date of transfer, sir? Which date ka stamp duty value should I take? Normally, you should take the stamp duty value as on the date of transfer. The date of transfer, meaning the date when the property is registered in somebody's name. However, if the amount is paid on the date of agreement through account pay check, account pay demand draft, or any other electronic clearing system, meaning if the person who is selling the property, if he is receiving any money through account pay check, account pay demand draft, or any other electronic clearing system, then the stamp duty value as on the date of agreement should be taken. Now, please note, cash, bearer check, cross check, they are all not allowed. Advance money forfeited. Do you remember this advance money forfeited? A. Who came to me? A. Who came to me? Karina came to me. Deepika came to me. And finally, Katrina came to me. What you are, nothing you remember. I told them that I'll do. Nothing you remember, Bhubesh. I told them, Karina, hey Karina, I'll do anything for you. Something. Anything for you. Yeah. Section 51, advance money forfeited. So if you are receiving any advance money, and if that advance money is forfeited by you means what, sir? For example, you came to purchase my house and you gave me some advance for purchase. Now you did not purchase the house. That advance which you gave, I kept it for myself. So if that advance money is forfeited before 1/4/2014, then it should be reduced from cost of acquisition before taking indexation benefit. However, if advance money is forfeited on or after 1/4/2014, then it will be directly taxable under section 56(2)(9) under income from other sources. Now, if the advance money is forfeited by previous owner, it should be ignored. What does this mean? If you receive the property from someone else, meaning in no transfer cases, if the previous owner has forfeited the advance money, for you, it will be ignored. Where an capital asset becomes a property of an assessee on distribution of asset by partition of HUF, or gift or will by individual or HUF, succession, inheritance, devolution, etc., distribution of asset under liquidation, transfer under irrevocable or revocable transfer, or holding companies giving it to subsidy companies, subsidies companies giving it to holding company, or amalgamating companies giving to amalgamated company, or vice versa, or there is a merger demerger happening and demerged companies giving it to resulting company, or conversion of individual properties, individual is giving his own property to HUF. In all such cases, the cost to the present owner will be the cost to previous owner. The period of holding of present owner will be period of holding of present as well as previous owner. The cost of improvement of previous as well as present owner will be taken. Indexation benefit will be given from the date when the present owner has become the owner. But please note, if you would have seen your institute material, indexation benefit is also given from previous owner. So now, normally indexation benefit will be given from the date when the assessee becomes the owner. However, we saw a case law, Manjula aunty, Manjula Jesha. What is the Bombay High Court in Manjula Jesha case told? That indexation benefit should also be given from previous one. Okay, while classroom, okay, in the classroom, for you students only, not for other students, for you students, I have thought what's an indexation benefit also from when Nayantara, present owner, we have taken. We have not taken from previous owner. But in your institute material, they have taken the benefit of Manjula Jesha. Okay? But we have done one question with Manjula, other questions we have done with non-Manjula. Yeah, but Manjula we have done only one question. So, what should you do in examination? Follow Manjula. A. Take the indexation also from previous one. Section 50B, slum sale. Slum sale means what, sir? You are transferring an undertaking without assigning values to individual assets and liabilities. So in case of slum sale, very easy. Capital gain computation is easy. Take full value of consideration, subtract expenses incident to transfer, you will get net sale consideration, subtract cost of acquisition, you will get your capital gain. Now, what is full value of consideration, sir? It is fair market value as per Rule 11 UAE. So, which is nothing but fair market value 1, fair market value 2, meaning fair market value of unit transferred, compare that with fair market value of consideration received, take whichever is higher. Now, subtract expenses, you will get net sale consideration. From this, you should subtract net worth. Net worth is nothing but assets minus liabilities. Assets, you should take depreciable assets at WDV as per income tax law, and other assets you should take at book value. Meaning, if it is an asset which is depreciated or depreciable, then you should take WDV as per income tax law. For other assets, you should take only the book value of that asset and subtract the liabilities. You should subtract all the liabilities excluding shareholders fund. That will give you net worth of the company. Now, while taking cost of acquisition, you should not take indexation benefit. Indexation benefit should not be taken by you. How will I come to know whether the capital gain is long term or short term, sir? You should see period of holding of the business which you are transferring. Period of holding is more than 2 years, long term, less than equal to 2 years, short term. Now, if you transfer stock under slum sale, that stock also will be taxable under capital gain only. Revaluation of asset should be ignored. No indexation benefit will be given. No indexation benefit will be given in case of slum sale. And if section 35 AD asset is transferred in slum sale, cost of acquisition should be taken as nil. And in case of intangible assets being goodwill, plant, patent, etc., cost of acquisition, if it is self-generated, take it as nil. If it is purchased, take it as purchase price. Now, indexation benefit ka point, though we have seen this in amendment also. For Devgan's indexation benefit is never allowed. And if the transfer is made after 23rd July, indexation is not allowed for anything. Capital gain in case of shares and debentures. Shares and debentures capital gain calculation is normal only. Whatever you do normally, that same thing you are supposed to do. But in case of bonus shares, the cost of acquisition. See, bonus shares means the shares are received by me for free. So the cost of acquisition should be taken as 0. However, lawmaker says in case of bonus shares, I will see when is the bonus issued. If the bonus is issued before 1/4/2001, cost of acquisition will be actual cost or fair market value as on 1/4/2001, whichever is higher. Whereas if the bonus is issued on or after 1/4/2001, after that date, then cost of acquisition will be nil. And in case of right shares means what, sir? You are getting a right. Right means right. But what does right mean? What is not left is right. You are getting an authority, or you are getting a right, Guves. You understand my emotion, yeah. Right shares. So right shares means the company gives us a benefit that before I go to other people for asking money, I want, like for example, Janvi says, before I get married to others, I am giving the option to you. If you want to get married to me, you get married. Or else. Now, so as a shareholder, what option he has? He can exercise the right. Correct? No. He can say, yes, I am interested in getting married to you. He can exercise the right. Or what he can do, sir? He can ignore. Or he can transfer his right to someone else. Correct, not correct. Or he can transfer his right to someone else. So in such cases, right shares. Now have you understood what is right? The classroom only we didn't understand, sir. Today we are understanding. Okay. Right shares means what, sir? Shareholder can exercise the right. Shareholders has exercised the right. If he has exercised the right, the cost of acquisition of those right shares will be whatever right issue price companies charge. Shareholder has renounced the right, meaning he is transferring his right to someone else. Whatever amount he is going to receive, that is going to be taxed as short-term capital gain. Whatever renouncement price he is going to receive is taxable as short-term capital gain. Now, renouncement of right is treated as renouncement of right is treated as relinquishment of capital asset. Therefore, it is treated as transfer. Now, if someone else is purchasing the right, let us say he has transferred his right to Charan. Now, he will ask some money from Charan. Correct? No? He'll ask some money from Charan, and he'll also have to pay some money to the company. Correct? Whoever is the manufacturer of that particular, he'll also have to pay some money to the company. So in this case, for Charan, what is the cost of acquisition? The amount paid by him to Charan as well as the amount paid by him to the company. Okay. So cost of acquisition will be the right issue price plus renouncement price. This you remember. This they'll not ask in examination. First proviso to section 48. Now, in case of non-resident, they give you an option to compute the capital gain in foreign currency. Only if you get a gain in foreign currency, then only they have to pay the taxes, or else they will not have to pay the taxes. Now, you take full value of consideration, which is nothing but exchange rate as on the date of transfer. From that, subtract expenses incidental to transfer, you will get net sale consideration. From that, subtract cost of acquisition, which is nothing but cost of acquisition is what, sir? Cost of acquisition, you will get your capital gain. Now, what is important is you are supposed to compute the entire capital gain by taking the amounts in foreign currency. So, for full value of consideration, I would have sold the asset in Indian market, which is I would have got the money in rupees, but you should convert it into foreign currency. What will I do, sir? You take the exchange rate as on the date of transfer. Exchange rate is what, sir? Buying rate, TT buying rate, TT selling rate divided by 2. Okay, TT buying rate, telegraphic transfer buying rate, telegraphic transfer selling rate divided by 2 is the average exchange rate. For cost of acquisition, you take exchange rate as on the date of acquisition. For cost of expenses of sale or FOV, you take the exchange rate as on the date of transfer. For acquisition, as on the date of acquisition. Now this they will not, not required. For unquoted shares, just like section 50C, for unquoted shares we have 50CA. For normally full value of consideration of unquoted shares will be sale price. However, if unquoted, if the fair market value is more than 110% of the sale price, then fair market value will be taken as full value of consideration. Section 50D, full value of consideration, where consideration is non-determinable. Full value of consideration, fair market value of capital asset transfer, if consideration is not determinable. Then amalgamation, merger, demerger, etc. is not there. Then we have exemptions. Section 54, exemption for residential house property. Exemption for what, sir? Residential house property. Exemption means what? From your capital gain amount, you can subtract something. Okay, from your capital gain amount, if you subtract exemption, you don't have to pay tax on that exempted amount. Only the net amount left over after exemption, on that you will have to pay taxes. Section 54, 54 EC, 54F are important section. Remember them with section number. 54, 54 EC and 54F. 54, 54 EC and 54F. Remember these things with section numbers. Now, section 54. It is applicable if you are an individual or an HUF. If you have a residential house property, if you transfer that residential house property, upon transfer of that residential house property, if you get any gain, and if that capital gain is a long-term capital gain, then only this section is applicable. So if you are an individual or an HUF, if you have a residential house property, if you transfer that residential house property, upon transfer of residential house property, if you get a long-term capital gain, that long-term capital gain will be exempt if you acquire another one residential house property in India. Now for acquisition, there is a time limit that the new house property should be acquired within 2 years from the date of purchase or within 3 years from the date of construction. You can purchase it before also, but purchase should be done 1 year before the date of transfer. Okay, now this new residential house property should be transferred within, now there is this new house property has a lock-in period. This new house property should not be transferred within a period of 3 years. If it is transferred within a period of 3 years, then whatever exemption was given to you earlier will be reduced from cost of acquisition of that new asset. How much is the exemption? Whatever capital gain is there or amount invested by you, or limit of 10 crores, whichever is less. Now the amount invested can be in new capital asset or it can be in capital gain account scheme account. CGAS, capital gain account scheme account. Then section 54B, urban agricultural land. This section is applicable to an individual or an HUF if they have any urban agricultural land, and if they transfer that urban agricultural land. If you are an individual or an HUF, if you have an urban agricultural land, if you transfer that urban agricultural land, then what, upon transfer of that urban agricultural land, whatever gain you get, whether it is short term or long term cap gain, that will be that will be exempt. That will be exempt if you acquire another one agricultural land in India. Now exemption will be the capital gain amount or amount invested in the new land or capital gain account scheme, whichever is less. Now the time limit for purchasing the new property is within 2 years from the date of transfer. Now the new property which you have purchased, there is a lock-in period of 3 years. If you transfer this newly purchased land within a period of 3 years, then whatever capital gain exempted earlier will be, whatever capital gain was exempted earlier will be reduced from cost of acquisition. Yes, sir.
And in turn buy a rural land, which is not a capital asset, and then sell within the lock-in period.
No problem.
Capital asset from capital.
No capital gain. Yes, sir. Loophole in the law. Section for that, first you should have an urban agriculture. Section 54D. Section 54D. Compulsory acquisition of industrial land or building or both. Compulsory acquisition means government is acquiring your property. This section is applicable to all types of assessee if they have any industrial land or building or both, and if that industrial land or building or both is compulsory acquired, then I will call it as transfer. That transfer, upon the transfer, whatever type of gain it is, because it is compulsory acquired, whether the gain is long term or short term, it does not matter. That gain will be exempt if you acquire another industrial land or building or both within a lock-in period of 3 years. 3 years from which date? Because it is compulsory acquired, 3 years from the date of receipt of compensation. So when you receive the compensation, from that date 3 years will be calculated. Now what is important is another industrial land or building or both should not be sold within lock-in period of 3 years. If it is sold within the lock-in period of 3 years, then while computing the capital gain for that new asset, you should reduce the cost of acquisition. Section 54 EC, exemption for section 54 EC, exemption for transfer of immovable property. Exemption for transfer of immovable property. Very important. Section 54 EC. Now, what is this point telling? This section is applicable to all types of assessee, irrespective of whether you are an individual HUF, AOP, BOI company or firm. It does not matter. This section is available to all the types of assessee if they have any immovable property. Immovable property means land, building or both. If they transfer that immovable property, upon transfer of that immovable property, if they get any long-term capital gain, okay, if they get only long-term capital gain, then that long-term capital gain will be exempt if they are investing the money in some bonds, some notified bonds, which is NHAI bonds, RECL bonds, PFCL bonds and IRFCL bonds. So how many bonds are there? 4 bonds are there: NHAI, RECL, PFCL and IRFCL. Now they have added one more bond in that. One second, I was making notes for the new, for the next year. See, we have studied RECL, Rural Electrification Corporation, PFCL. What is this? Power Finance Corporation, IRFCL, Indian Railway Finance Corporation and NHAI. NHAI is there. Where is that? Now this bonds have been added. Which bonds are? 2 bonds called as Huduko. Huduko. Huduko bond is covered. Huduko means what, sir? Housing and Urban Development Corporation. Now NHAI has been removed. What are they telling? NHAI has been removed, but if you have already invested, no problem. Now they have added new bonds called as HUDCO, Housing and Urban Development Corporation Limited, and IRDA, Indian Renewable Energy Development Agency. So by any chance, if they add, in the examination, if they give an exemption for 54 EC and if they talk about these 2 bonds also, exempt it. Okay, yeah, are you understanding? Because this is not an amendment in Finance Act. This is a regular amendment. So this is a regular amendment, so they may ask. IRDA. NHAI is, yeah, of course you can take exemption, no problem. But these bonds are only not there. NHAI concept is only gone, they are telling. Everyone was teasing government, hey, nine bonds. Right. So these are 2 bonds which is newly added. HUDCO bonds and okay. Exemption for transfer of immovable property. Available to all the types of assessee if they have immovable property being land, building, goodwill. If they transfer that, upon transfer, whatever capital gain they get, if it is a long-term capital gain, that long-term capital gain will be exempt if they invest their money in government bonds. Now, this investment should be made within 6 months from the date of transfer of immovable property. Investment should compulsorily made within 6 months from the date of transfer. Now, the new bonds which is there, no, the new bonds which is there, they have a lock-in period of 5 years. They should not be sold or converted into money within a lock-in period of 5 years. Okay, sir. But sir, how much exemption will I get? That is also important over here. Exemption which I am going to get will be the capital gain amount or the amount invested by you, or 50 lakh rupees, whichever is less. 50 lakh rupees is one more limit over here, whichever is less, whichever is less. Sir, what will happen if I violate the lock-in period? Whatever exemption you had got earlier will be taxable. Here it will not be reduced from cost of acquisition, but whatever exemption you have got earlier, that will be taxable. Section 54F, important. Exemption for transfer of any long-term capital asset. If you are an individual or an HUF, if you have any type of long-term capital asset, if you transfer that long-term capital asset, upon transfer of that long-term capital asset, if you get any long-term capital gain, then that long-term cap gain will be exempt if you acquire one residential house property in India. Now the time limit for acquisition of that residential house property is within 2 years from the date of transfer, or 1 year before the date of transfer you can purchase. If you want to construct, within 3 years from the date of transfer. Now, why is this section important? Because the exemption is little different. How much is the exemption? Amount invested by you is more than or equal to net sale consideration. Then full net sale consideration will be, full capital gain amount will be exempt. If the amount invested by you is less than net sale consideration amount, if the amount invested by you is less than net sale consideration, please note, people will still get confused. They will take capital gain amount. No, you should see net sale consideration. If the amount invested by you is less than net sale consideration, then exemption will be taken proportionately. Capital gain exempt will be capital gain amount into amount invested divided by net sale consideration. Okay. Now, maximum amount exempt under section 54F shall be restricted to 10 crores, and assessee should not have more than one residential house property on the date of transfer if they want to claim exemption of this section. Section 1037, they say if any urban agricultural land is compulsory acquired by government, whatever gain amount is there, that is fully exempt. You don't have to invest anywhere. Now, we saw one more point. If any shares are purchased by you, listed shares are purchased by you before 1 February 2018, then the cost of acquisition of those shares will be actual cost of acquisition or fair market value as on 31st of January 2018, full value of consideration as on full value of consideration is required, sale price. So first you should compare fair market value as on 31st of January 2018 with sale price, take whichever is less. That you compare with actual cost, take whichever is higher. This is for cost of acquisition only for one asset called as listed shares. Rajat. Now see this question. On 23rd June, date is important. 23rd June, so it is before. Rajat sold gold. Sale consideration is 15 lakh rupees. So full value of, see, capital gain is one of the easiest, nothing to do in life. 15 lakh rupees is sale value of consideration. He acquired this gold on, what is this date? This is a question which we have solved in the classroom. For 4 lakh rupees, fair market value is 3,60,000 rupees. So what is my cost of acquisition? Whichever is higher. Compute the capital gain amount chargeable to tax. Now they have not given any expenses incidental to transfer, therefore net sale consideration is 15 lakhs. Now my cost of acquisition, index cost of acquisition I will take. Why, sir? Because the transfer is why 4 lakhs into 363 divided by 100. 14 lakh. This is your. So what is my capital gain? Long-term capital gain is 48. Now their question is compute the capital gain if the asset was transferred on 23rd December. Can I say 15 lakhs minus 4 lakhs is equal to 11 lakhs? 7 marks, nothing is there in the. So in first case 48,000 we got. And on the tax amount is how much? 20%. If the asset is acquired before 1/4/2001, so they have written one note also. Then if the transfer is made after 23/7, capital gain amount is 11 lakhs and tax amount will be disbursed. Okay, yeah. Odd questions they are asking it. In examination, they'll ask like this only. Sunil has a house property. Oh, this also we have solved in the classroom. Now I want you to solve. I want you to solve this question we have solved in the classroom. Question. Okay, Sunil has a house property acquired on 7/7/1995 for 3 lakhs. He incurred improvement expenditure on such property for 70,000 on 16/8/2000 and 50,000 rupees on 17/7/2010. Sorry. Market value of such property as on 1/4/2001 is 4,50,000 rupees. And the such property was compulsorily acquired by government and compensation decided was 21,50,000. 20% of compensation is received on 31st of March 2025 and balance on 2nd June 25. On further appeal, 16/8/25 enhanced compensation is declared by government of 2 lakh rupees and expenditure incurred for this was 11,000. Such compensation was received on 18/8/26. Compute for now. Now they have not given indexation. That is the problem over here. You will just need indexation for 2010-11. Other things too you are supposed to remember. For base year 2001-2, how much is the indexation?
2,100.
And for your examination? For 2010, what is the indexation? Check. This question we have solved in the classroom. Check no, what is the index value? See, this question we have solved in the classroom. Figures they have changed. For 2010-11 it is 167. A same question, no Sunil. Figures they have changed. So what is the for 10-11 it is 167. Tell me the answer first. I'll tell you again. Index value is 100, 167 and 363. Hey, wait, compulsory acquisition happened on which year? 2020. This also is required. 2020. 2020 engage. Compulsory acquisition. No, I think here there is a different date. 16/2020.
Which papers was this?
Cost of June second paper. 2020 is 301. Tell me the answer fast. ಆನ್ಲೈನ್ ಸ್ಟೂಡೆಂಟ್ಸ್ ಕರಾಟೆ ಗೂಬೆ ಹೆಸರೇ ಚೆನ್ನಾಗಿದೆ. ಕರಾಟೆ ಗುಣಾಲ್ ಅಂತೆ. Oh, Paulami is attending online. She attended after my class. Paulami, enna pandre Paulami? Where are you, Sundri Paulami? Kolkata, she has gone after my class. My class also last, I think, 2 or 3 days she didn't attend. How are you? ಅಯ್ಯಯ್ಯೋ ಅದು ಅದಕ್ಕೆ ಅಯ್ಯೋ ಪ್ರಾಬ್ಲಮ್ ಇತ್ತು. Has she raised a ticket? I don't know. Paulami. After me, Alan sir came. How was his class? Maja was there. Then who was there? Only Pranav attended. Only you attended. Why? Why? Why, Charan? You too should be. And Rashish sir was there last. Completely offline.
One day.
2 days. Huh? Only one student thought. Crazy. Why?
You bunked, don't tell me, but
Your daughter did come, huh? Her name is Sahana, no? What is her name? Yahavini, yeah. Yarini. No, her sister's name is Sahalini. Shamini. See, everything you remember except subject. What is the answer, you tell me? Yamini, Shalini ante, Goobes. Okay. Full value of consideration is how much? 21 lakh 50,000. Is there any expenses incident to transfer? So net sale consideration is my index cost of acquisition is how much? Sir, it will be 4,50,000 into 301 divided by 100. 13 lakh 54,500. Then is there any improvement? Yes, index cost of improvement. I'll ignore the improvement done before 1/4/2001, which is 70,000. I take only 50,000. So 50,000 into 301 divided by 167. 90. 1. 7 lakh 380. Then I got, what is this amount? This is called as long-term capital gain. So this is for case number 1. Correct? Now it does not matter when you are receiving the compensation, it is fully taxable. Then 2 lakh rupees you receive next year. From that you will subtract only
expenses.
11,000 rupees. Total is okay. Yeah? Everyone got this? Hey, did they also get the same answer? Hey, how come we can here don't know Gubel can't silva? The same answer they got. Second answer also 1,89,000. Now see what are the notes which they have written. First note is what, sir? Initial compensation decided by government shall be treated as sale consideration. Ew. See, now nodi, see your book, no, how goobism they have done. Nodi, now see, they have taken this value. What we have done in classroom. Correct, huh? They have taken this value. Copy paste also, when your institute is doing, they are doing mistake in that. What is the sale price? Here they have added 10 lakhs extra. Enge poi. See, here they have taken sale price as 21 lakh 50,000. Now here they have written sale price as what? What is it? That's why you don't trust her. Her name is Institute. Everyone comes and studies and goes on. They go away. Initial compensation decided by government. Then cost of acquisition, you should write, of course, note. Actual cost or fair market value, whichever is higher. Cost of improvement done before 1/4/2001, ignore. Though the property was compulsory acquired in the previous year 21-24, tax is recorded to be paid in the year 24-25 when compensation is received. Okay, this is done. Oh, what is this, sir? ABC and company are three partners. This is capital gain question, partnership firm they have added. ABC are three partners, A, B and C sharing profits and losses in the ratio 5:3:2. They admitted D as a new partner on 31/3/24 for 1/5 share, and D is to bring 2,000 rupees as his capital, 2 lakh only I told, which he brought in the form of furniture worth 50,000 and further brought a jewelry whose market value was 2 lakh rupees on when did he get this jewelry? 2nd of August 2024. However, such assets was recorded in the books as 1,80,000 rupees. Now see, please understand. Now see how they twist the question. What are they telling? Actually, the partnership story they have created. Actually, they have created a story. What is happening over here? Some asset he has, which he has introduced in the business as a capital. Correct? So personal asset, jewelry, I will ignore furniture. It is not a capital asset. Jewelry is a capital asset, which was my personal asset. Now I am converting it into business asset. Okay. So what will I take? Book value will I take, or will I take 2 lakh rupees of fair market value? D had acquired such jewelry for 45,000 on 7/7/2001. Compute capital gain in the hands of Mr. D. So can I say indexation, will it be taken or not taken? Indexation, will it be taken or not taken? Please note, jewelry was bought in the firm when, sir? 2nd of August. Can I say afterwards? So I'll directly go over here. See, sale consideration is 1,80,000. Please note, sale furniture being a personal effect is not treated as capital asset, and jewelry is treated as capital asset. Now, because you are introducing in the business is recording 1,80,000. Full value of consideration is taken as what, sir? 1,80,000, which is because that is the consideration received by me. Okay, expenses is nil. Sale consideration will be 1,80,000. Cost of acquisition is 45,000. Cost of improvement is not there. Now, please note, cost of acquisition, I will not take any indexation benefit because the transfer is on 2nd of August. Long-term capital gain will be 1,35,000 rupees. Sale consideration shall be the amount recorded in the books of the firm, and the market value is not relevant. Okay? Asked that question, they have given 7 marks. Now, see this question. On 15th of November 2024, Ishita, 15th of November. 15th of November means after 23rd of. Ishita sold a flat for 58,50,000 rupees. So 58,50,000 rupees, I will directly write. Fast I will write. This is my full value of consideration. She acquired the flat on 11/12/2012 for 36 lakhs. Expenses on sale of flat was 50,000. Therefore, my net sale consideration became 58 lakhs. She purchased a residential house on 25th of January 2025 for 20 lakhs. Meaning this is section 54. Correct? It is 54. Compute the capital gain and tax thereon. Okay? Before surcharge and cess. You don't have to calculate surcharge and cess, just tax amount. Assuming her other income exceeds basic exemption limit. So this is done. I will take subtract my cost of acquisition. What is my cost of acquisition? 36 lakhs. Will I take indexation? No, because the transfer was afterwards. How much is the difference? 32. 22 lakhs is my long-term capital gain. Correct? Less what? Exemption, how much did I invest? So my taxable long-term capital gain is how much? Correct, not correct, students? 2 lakh ka, can I say without indexation, what is the tax rate? 12.5%. 25. Now please note, this is my tax amount without indexation. Now if I take with indexation, no, straight away without seeing only I can tell I will make a loss. Why? See, when was the property acquired in the year 2011, 12 or 12, 13?
11.
No, 12, 13. So for 12, 13 it is 200. Correct, no. So I will take index cost of acquisition 36 lakhs into, please note, this is my actual answer, main answer. I should find tax amount with indexation because it is an flat immobile property. 36 lakhs into 363 divided by. So can I say 65 lakhs, whatever it is, anyways it is a loss only. I have made further investment, further loss. Correct, no. So can I say, if their question is what is my taxable capital gain, my answer is 2 lakh. What is the tax? My answer is 0. Why? For computing tax amount, I will take with indexation, without indexation, whichever is high, less. With indexation, it is 0, tax amount is 0. Without indexation, tax amount is 25. Why with indexation the tax rate is tax amount is 0? Because 65 lakhs is my cost, my sale price is only 58 lakhs. I am making a loss. Correct? No, I am making a loss. Therefore, it is 0. Correct? Not. I hope you have understood this one.
Sir, where was
I delete things.
आप ये मगर काली आदर अल कलागड़े ना मुझे इधर
ये okay? For this we will not have answer. But it is a good question. Okay. Shall we continue with the next chapter?
Is that possible to select? If it's going into loss, I can choose tax as 0.
No, what is there in choosing? That is the law, right? You are not choosing anything. One second. Hello. Hi, madam. ಇವತ್ತು ಕಳಿಸ್ತೀನಿ ಮ್ಯಾಮ್ ಕಳಿಸ್ತೀನಿ ಎಸ್ ಸರ್ ಹೆಲೋ ಓಕೆ ಅಯ್ಯೋ ವಜಾರಾಯ್ತು please note last question, and the question is good. Okay, the question is good. They have not given the answer for this because they have not given. We have computed the answer. Do you want me to recompute this answer? I see this answer to everyone got correct. Yes, only people have confusion in, sir, how can I get a loss? Why will I get a loss? My Net sale consideration is 58 lakh. Till here everyone knows. Correct? Now, because it is a immobile property, the tax which I have to pay is with indexation or without indexation. With indexation, it will be 20%. If I calculate my gain with indexation, my cost is coming to 65 lakhs. My sale price is 58 lakhs, cost is 65 lakhs. Therefore, I am getting a loss. Now, because I am getting a loss, will I pay anything? Will I pay any tax? No. I hope you understand. Online students, are you with me? Are you with me? Income from other sources. You had classes till 8 o'clock every day.
Yes.
Yeah.
Not every day.
Yeah, that's all. 1 o'clock you used to start. So only he never used to come. Yeah, I know. Income from other sources. Small topic, easy topic. Now, if there is any income which is not taxable under any head, it will be taxable under which head, sir? Other sources. Section 56 to 10 talks about taxation of gift. Section 56 to 10, gift received by any person. Section 56 to 10 talks about gift received by any person or asset acquired by any person for inadequate consideration. Hey, before that, I'll just check once whether that website is whatever working or not for sharing attendance with you guys. Okay, section 56 to 10, gift received by any person or asset acquired for inadequate consideration. Okay, now if you are receiving the gift at the time of your marriage or from your relative or in contemplation of death, from inheritance, will, local authority, trust, university, hospital, no transfer cases or COVID cases, then it will be exempt. If you are receiving gift in all the cases, that gift will be taxable. Now, who is a relative? Marriage and relative is majorly asked point. Okay, you are receiving at the time of your marriage or at the time of from your relative. Marriage anniversary is not marriage. My daughter's marriage is not my marriage. Okay, relative means relative. Relative means what, sir? For Dilip's brother, sister, father, mother, son, daughter, spouse का father, mother, spouse का brother, sister, and my father, mother's brother, sister. They are all my relatives, and all these people का spouses are also my relative. Meaning my son's wife is my relative, my daughter's husband is my relative, my sister's husband is my relative, my spouse's husband is me only. Spouse of all above people are also my relative. For this is possible. I mean, my spouse's children are my relative. Yes, step children are also covered. Step husband ಹೆಂಗಿರುತ್ತೆ possibility is there? I don't know. Spouse of all above people are also my relative. Huh? Brother, sister, kids ille. No, because in your case, brother, sister. No. Why? Because in your case, their kids can become your spouse. No. So if they become, yes, relative. sisters and yeah, I mean no yaar gottu, he may change the trend following the new generation. Okay, now you are receiving Praveen, you are receiving Praveen ante now you are receiving money. Now we are talking about what's gift not in exempt cases. In other cases, gift received is taxable. What are you receiving? Money. If the total money received by you is more than 50,000 in a year, total money received from any number of people is more than 50,000. Total money is more than 50,000 in a year, fully taxable. If you are receiving movable property means DJ, Paso, BV. Without consideration, if you receive, aggregate market value is more than 50,000, then it is fully taxable. If you are receiving it for inadequate consideration, aggregate difference between market value and consideration is more than 50,000, then such difference is fully taxable. And in case of immovable property, please note, I'll repeat once again, money which you are receiving, total money received is more than 50,000. For one person, illa, total. From how many other persons it is. Sir, how much is taxable? Fully taxable. So if it is 55,000, how much is taxable? Full 55,000 is taxable. If you are receiving movable property means DJ, Paso, BV only. I am receiving TV, ille. I am receiving car, ille. iPhone, ille. So if you are receiving movable property without consideration, movable property without consideration means, what are movable property without consideration, sir? Movable property means this thing, DJ, Paso, BV. Without consideration means for free. If the aggregate fair market value is more than, if the aggregate fair market value is more than 50,000, oh, Ibro, I just start. No, I am increasing the temperature. Don't worry, you'll not feel hot. 28 degree. Aggregate, okay, then fully taxable. If it is for inadequate consideration, meaning a jewelry worth 1 lakh, I am receiving for 80,000. In such case, difference, if it is more than 50,000, it will be taxable. Can I say in this case difference is 20,000, not more than 50,000, therefore not taxable. So if it is for inadequate consideration, aggregate difference is more than 50,000, such a difference is fully taxable. Immovable property I am receiving. What am I receiving? Immovable property. Immovable property I am receiving without consideration. If the stamp duty value is more than 50,000, then it is fully taxable. If you are receiving immovable property for inadequate consideration, for what, sir? Inadequate consideration, then the difference between stamp duty value and consideration is more than 50,000, and stamp duty value is more than 110% of consideration, such difference is fully taxable. Please note, for immovable property, I will see stamp duty value. If I am receiving it for free, stamp duty value is more than 50,000, fully taxable. If I am receiving it for inadequate consideration, if I receive it for inadequate consideration, then what will I see, sir? Difference between stamp duty value and consideration. If the difference is more than 50,000 and if the stamp duty value is more than 110% of consideration, the difference is fully taxable. Section 56(2)(10) is applicable only when movable and immovable property is held as capital asset by the recipient. When is section 56(2)(10) applicable? When for you the item which you are receiving is a capital asset. If it is a stock in trade, you will normally want it to be received in a lesser price only. So section 56(2)(10) is not applicable if the movable and immovable property is held as stock in trade. Now you remember this Chota Bhim point. Normally Chota Bhim giving gift to Chutki is not a transfer for Chota Bhim because it is covered under section 47 under capital gain. Therefore, no capital gain for Chota Bhim because he has gifted. But for Chutki, can I say 56(2)(10) is applicable? A Nayantara, that case this is correct. No, Rashmika. Now for Chutki, because she has received something for free, for her it is a gift income. So she will have to pay tax under section 56(2)(10). Okay. She will have to pay tax under 56(2)(10). Now, because she is paying a tax under 56(2)(10), should I take cost of acquisition for Chutki as cost to previous owner? Lawmaker says no. See, normally you should take cost of acquisition as cost to previous owner, but if Chutki has paid taxes under 56(2)(10), the amount on which she has paid the taxes under 56(2)(10) will be taken as her cost of acquisition. Okay. If any capital asset is received as gift or for inadequate consideration, the recipient assessee has paid, and if the recipient assessee has paid taxes under 56(2)(10), then the stamp duty value of such capital asset will be taken as cost of acquisition of that capital asset for the recipient. Now, stamp duty value concept, you remember section 50C is applicable for capital asset. Same to same copy paste is applicable for stock in trade, 43CA. Section 43CA, if the stamp duty value is more than 110% of sale price of stock in trade, then stamp duty value will be taken as sale price for that stock in trade. Now remember taxation of dividend. Normally dividend is taxable in the hands of, in whose hand? Dividend is taxable in whose hand? Dividend is taxable in the hands of shareholder. Dividend is taxable in the hands of shareholder. Shareholder will have to pay the taxes. And we have also concept of deemed dividend. Section 2, clause 22, subclause A. Distribution of any asset by the company to its shareholder. If any domestic company is distributing asset to its shareholder, then it will be deemed as dividend. How much will be deemed as dividend? To the extent of accumulated profit, whether capitalized or not. Okay, to the extent of accumulated profit, whether it is capitalized or not, it will be deemed as dividend. Section 222B says distribution of debenture or debenture stock or deposit certificate to any shareholder or bonus shares to preference shareholders will be deemed as dividend to the extent of accumulated profit, whether capitalized or not. Then section 222C, distribution of asset by a company on its liquidation. Important this is. So if any domestic company is distributing asset to its what, sir? Shareholder upon its liquidation, then it will be deemed as dividend to the extent of accumulated profit, whether capitalized or not. Now we took an example. So what will be taxable in the hands of company? In the hands of company, there is no capital gain because distribution of capital asset by a company at the time of liquidation is not a transfer. But whereas in the hands of shareholder, there will be a capital gain tax applicable, and there will also be deemed dividend. Deemed dividend will be taxable in the hands of shareholder. How much will be deemed dividend? To the extent of that shareholder ka share in accumulated profit. So whatever accumulated profit a company has, and what is the share of the shareholder in that accumulated profit. Now there are 5 shareholders, 1/5 share belongs to one of the shareholder. Correct? Because there are 5 shareholders, 1/5 each shareholder will get. So total accumulated profit is 15 lakh rupees into 1/5 is the share of a shareholder, Mr. A, which is 3 lakh. Now Mr. A has received 7 lakh from the company at the time of liquidation. 3 lakhs will be taken as deemed dividend. The balance amount of 4 lakhs will be taken for computation of capital gain for the shares which is transferred by him. We have done this question, very good question, important question. Okay, this is an important concept, important question. Now taxation of buyback of shares. If the buyback is happening before 1/10/2024, then in the hands of company it will be taxable, and the taxable amount will be buyback price minus issue price. And in the hands of shareholder it will not be taxable, it will be exempt. However, if the buyback is happening on or after 1/10/2024, in the hands of company there is no tax treatment, but in the hands of shareholders it is taxable under income from other sources. What is taxable, sir? The total buyback price is taxable under income from other sources. And capital gain will be computed in the hands of shareholders. See, in the hands of shareholders, whatever amount is received by him, if the buyback is happening on or after 1/10/2024, whatever amount is received by him will be taxable in the hands of shareholder under income from other sources as deemed dividend. And will there be any capital gain? Yes, it will be a capital loss because cost of acquisition will always be taken as 0. So full value of consideration will always be nil if the buyback is on or after 1/10/2024. Now deemed dividend, one more point is there, 222E. If a closely held company is giving any loan or advance to a shareholder who is having 10% or more equity shareholding, or if the closely held company is giving any loans or advances to a concern where the shareholder is having substantial interest, that is 20% or more equity shareholding or profit sharing ratio, or if the closely held company is giving loans or advances to any person on behalf of the shareholder, then that loan or advances will be treated as deemed dividend to the extent of accumulated profit of company. Now it does not matter. It does not matter even if the loan is called off during the same year. You have paid the loan. Now the shareholder has given back that loan. No problem. It is still taxable. However, if the company's business is only giving loan, this section is not applicable because it is a bank. My business is only giving loan, or if it is a business advance, if it is a loan given with respect to your business. Now, what are the other incomes covered under income from other sources? Income taxable under other sources. Now, following income are always taxable under other sources. Which income? Dividend income. Always taxable under other sources. Who is receiving it does not matter at all. It will always be taxable under other sources. Casual income, which is whatever games you are playing, etc. That is casual income. Gift income. Gift income we have studied. Share premium if some shares are issued at the price more than its market value. Interest on compensation or enhanced compensation for compulsory acquisition of capital asset. Advance money forfeited on or after 1/4/2014. And business, if you have a business of owning and maintaining resources. Following incomes are taxable under income from other sources if they are not taxed under PGBP. Which incomes are? Employees' contribution to PF, ESIC, superannuation fund, interest on securities, or income from letting out of plant, machinery, furniture, and any composite income. Following incomes are taxable under income from other sources if they are not taxed under PGBP or salary. Which other incomes are? Some received from key main insurance policy. If it is received by not by employee or employer, any other person, other sources. Or compensation received for termination of employment or modification of terms of employment. Now other incomes which are there, just a summary, list it is given. You can have any other income also. Income from subletting business, interest on bank deposits, remuneration for paper checking, renting of a land, undisclosed income, private tuitions you are conducting, interest on income tax refund, family pension, sitting fees of a director, stipend, agricultural income from a land outside India, royalty income, income of an MLA, MP, etc., family pension. Family pension, you will get an exemption also, 1/3 of family pension or 15,000 rupees. This 15,000 rupees is 25,000 for default taxation. Awards, if you are receiving from government, it is exempt. Other types of awards will be taxable. Now, what is important is interest income. Majorly, there will be one point with respect to interest income in your question. Okay. If it is an interest on compensation, delayed compensation for compulsory acquisition of capital asset, whatever interest you are receiving into 50% only will be taxable. If it is an interest from post office saving account, then exempt amount will be 3,500 rupees. Whatever amount is received by you into 3,500 rupees. Following interest are always exempt. Gold bonds, deposit certificates, public provident fund ka interest, Sukanya Samriddhi ka interest. Now what is important is this last interest. Any other type of interest you are receiving, whether it is a fixed deposit interest, saving bank account deposit interest, or interest on whatever loan is given by you to someone, that interest is fully taxable. What you should remember is, if it is a saving account interest, you will get a deduction under 80TTA. How much, sir? Up to 10,000 rupees ka interest deduction will be allowed. And if you are a senior citizen, the limit will be 50,000 rupees. That is one point which you will do mistake. Now, deductions. Section 57. If the income is taxable, see, deductions means while computing the income under the head other sources, can I subtract any expenses? Can I subtract any expenses? Lawmaker says yes. If the income is taxable, you can also subtract any expenses incurred by you for earning that income. Whereas if the income is exempt, that expenses should be ignored by you. If the income is a casual income, expenses should be ignored by you. Dividend income or income from UTI or mutual fund, only interest expenses is allowed as deduction. That also to the extent of 20% of income earned. This is important. How much interest will be allowed from dividends, sir? Only the extent of 20% of interest earned. And there are some expenses which can never be taken by you. Which are these expenses? Your personal expenses, expenses for casual income, expenses which is made in cash more than 10,000 rupees in a single day to a single person, any unreasonable expenses paid to a related person, or interest paid to a non-resident without TDS. Okay. Then we discussed a concept of grossing up. Whenever they give you any income on which TDS is deducted, if they give you on net income after deduction of TDS, what should you consider, sir? The gross income. For example, I won a lottery ticket of 10 lakh rupees. Now that lottery person who is giving me the money, he will give me only 7 lakh rupees after deducting TDS of 30%. So what is my income? Taxable under other sources? 10 lakhs or 7 lakhs? 10 lakhs. Full income should be taken. Though they will give in my books only 7 lakhs, I should take 10 lakhs. Following Mr. Jyotia. Jyoti boy name can be there. Could be only these people. We'll understand. If somewhere they have written her, no, that means it's go by some. Mr. Jyoti received the following gifts and amounts during the year. Gift of sculpture worth 51,000 on his birthday from his friend. What will happen? Sculpture, is it considered as DJ Paso BV? Yes, sir. So can I say this is, she has received it free. Gift means free. So yes, taxable. 51,000. Received a car from his cousin on payment of 3 lakh rupees. Market value is 3,60,000. Difference is 60,000. Is it taxable, not taxable? Not taxable. Why, sir? Car is not a capital asset. A DJ Paso BV, important. Received cash gift of 20,000 each from 3 of her friends. ABC. 60,000 rupees total. Can I say taxable?
Yes.
20, 20, 20, 60. Acquired an office. Acquired an office building on 12/12/24 from his friend Raj for a consideration of 12 lakh. Stamp duty value is 3 lakhs. 15 lakhs. Can I say 3 lakh rupees is taxable? Why, sir? Inadequate consideration. In respect of land of Mr. Jyoti acquired by government in 2015, he received the following amount on 15/12/22, interest on enhanced compensation relating to these different years. Can I say these are all taxable? How much is taxable? 50% of this. So 125 ka half is 625. 160 ka half is 180 ka. 57. This will be taxable. Plus, along with that, what else is taxable, sir? 3 lakh rupees for immobile property, cash money, 60,000, and so what is the total? 6 lakhs 13,500. Oh wow, how come our answers are right? Maja is okay. ಅಷ್ಟು ಈಸಿ ಇತ್ತ ಅಂದ್ರೆ ಅಷ್ಟು ಈಸಿನೇ ಇರುತ್ತೆ. A examination, trust me, if you have studied whatever I have discussed in class, I mean, and if you have understood, studied ಅಂದ್ರೆ ಸುಮ್ಮನೆ 60 to any person will get minimum. I mean 60 minimum. Okay, you share me your answers. Answers marks. You share me your marks. 60 to aram se you'll get. Okay, aram se you'll get 60. Or else, as soon as you get question paper, okay, MCQ part, someone just send me the photo you send me. I'll just tell whether what are the answers. Confidence you'll get in life. Will clear or not clear? Correct. Attempt will come or not come. Will come. Why? No. They don't give answers to question paper to you. Then only you can think like this, Andre. Mommy only you. No, you write the answers. But for you to cross check, because you are not supposed to write any reason for MCQ, you just have to tick the right answer. Correct? Mrs. Ranjini, who draws salary of did anyone check when can we write examination CMA? If I want to register, when can I write?
9 months.
No, sir. You can write it in June.
I can write. How do I register? Anyone has idea? Yeah, if I go to Bangalore chapter, they will help. Because the Bangalore chapter is right next to my house only. Huh? They only
Sir, online is best.
Okay, I'll go. It is anyways near my house only, so. Oh wow! I'll go pizza party then. Okay, past tense. Mrs. Ranjini. One degree I'll get now. I should not fit. That is one I will be there. Mrs. Ranjini, who draws a salary of 18,000 per month, received the following gifts. This is the first question which we solved in our classroom during the year. Gift from sister-in-law. Sister-in-law is sister-in-law is what? My brother, husband's brother. Sorry.
Your wife, sister, and sister.
A for my wife, who is sister-in-law? My sister. A, I am Rajani. So for me,
I have brothers my sister.
then what is my sister for her? My sister for my wife is what? Na 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 na.
Sir, maybe brothers.
Anyways, relative. 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 Gift of 21,000 from her husband's. Oh. Husband's friend is giving gift to. This is taxable. We should see the total. It is anyways taxable. 51,000 each from her two friends on occasion of her marriage. ಮಜಾ ಪನ್ನು. Marriage ಮುಂಚೆನೆ husband friend ಇಂದ gift ಬಂದ್ಬಿಡ್ತಾ. Gift of jewelry worth 3 lakh rupees from her fiance. If fiance is not husband. What is this? Actually, I think chronology is wrong. Correct now. So this is, can you say taxable? Because fiance is not husband. 51,000 for her father's sister. Father's sister is relative. Yes, she is relative, not tax. 11,000 rupees from her brother's. 1,50,000 from her close, very close friend. So can I say 1,50,000 plus 11,000 plus 3 lakh plus 21,000? Yeah, are we right? 4,82,000. How did they get this answer? Yeah, I know, Gubes, you are laughing. 18,000 salary also she is receiving now. Into 12 months she will receive the salary also now. Minus how much, sir? 75,000 you have taken. Gube only they have done. They have taken 60,000 deduction. You can take 75,000. Default tax regime, extra benefit. Extra is better, no? I mean, if you subtract 50,000, you'll get the same answer. If you subtract, but anyways, my income from other sources answer is same. Wait, have they given in the question that she has opted? Assume she's opted out of default tax regime. They are right. Hey, go miss. Mr. JJ, JJ received following gifts. Gift of bullion worth 68,000 on his birthday. Bullion andre? Yeah. So is it taxable, sir? Received a car. Maja padno. Received cash gift of 25,000 each from three of her 75,000. Yes, it will be taxable. Acquired an office building from his friend Q, 15 lakh rupees. Value is 10 lakh rupees. What is the income? Eh? 11 lakh 43,000. 11 lakh 43,000. Hey, wow. No, I heard 1 lakh 43,000. No, you are. I am supporting your dot. Because they told were you thinking about your dot. So I am supporting dot. Hey, go back, concentrate and tell that. Following details have been furnished by Mrs. Jaya pertaining to the year ended 31st March. Cash gift of 51,000 received from her friend. Oh, by the way, one second. See, answer, don't you think hardly it is taking not even 1 minute? We are discussing the answer. Answer we will be able to write, but you should write the note also. What is the note? Bullion is DJ Paso BVR. You write? Bullion is mobile property whose value is more than 50,000. Therefore, it is taxable. What they have done, since bullion is included in the definition of mobile property, when bullion is received without consideration, the same is taxable under 56(2)(10) if the value is more than 50,000. So see, because there are only, you should use your brain. There are only 4 points for 7 marks. Who will give 7 marks for 4 points? Gobe will give. So for that marks which you are getting, the 4 marks, you will get extra marks for your note. The following details are furnished by Mrs. Jaya. She received cash of 51,000 from her friend on the occasion of her 25th wedding anniversary. On the above occasion, a diamond necklace worth 2 lakh was presented by her sister living in Dubai. What will happen? Sir, sister Majapanno, friend no Majapanno. 51,000 is tax. When she celebrated her daughter's wedding on 21/2/2025, her friend assigned in Mrs. Jaya's favor a fixed deposit held by a friend in scheduled bank. The value of fixed deposit is 51,000. She acquired an immobile property through will from her deceased uncle. Value of the property is will, gift will, inheritance. Hello. A gift will, inheritance. You receive something on your marriage from your relative. In case of gift, will, inheritance, not taxable. So how much, sir? 1 lakh? 2,000. Inge poi. Oh, answer inge poi. Income from salary. Income from salary. Very easy chapter. Now this is not easy. Yeah, but as of now, whatever you have discussed, have you understood something? Don't you think it is easy? Now you understand the flow in which I have taught in the class. This subject is actually a lengthy subject, but I have started with house property. Subject. So that feeling should come for students. If I start with salary, easy. Correct. No? Start vomiting when I income from salary. Only 3 sections are there, but none of the section is important for us except section 16. Section 15 time pass, 17 time pass. Meaning of salary here antane gottilla. income from salary. What is important in life? Praveen, relationship is very important in here. What type of relationship? Employer-employee relationship, master-servant relationship, and the payment should be made in the capacity of employer, and the payment should be made in the capacity of employer. Now, contract of sale is an employment contract. Contract of sale ante group. Contract of service is an employment contract, and contract for service, of service, for service employment, of service. Hey, you are not listening properly. Concentrate. I'm just checking how many of you are listening. Yeah. Contract of service is an employment contract. Contract of service is an employment contract. Contract for service is what, sir? Service contract. Okay. Contract for service is an service contract. Contract for service is a service contract, not covered under salary. Salary is taxable on due basis or on receipt basis, whichever is earlier. Salary is taxable on due basis or on receipt basis, whichever is earlier. Salary can be in cash or it can be in kind. Salary forgone is also taxable. Salary which is forgone by you is also taxable, except the salary which is forgone by you to central government or state government. I think today only we'll be able to complete income tax. ಸ್ವಲ್ಪ stretch ಮಾಡಿದ್ರೆ. Now, wait. How many hours we have done? Around 8 hours is required for me. We have discussed first is to
Sir, 3.5.
as of now.
3.5. Like, you started at 10, 11, 12, 40.
Ignore whatever hours it is. Okay.
1, 2, 3, half an hour. 5 minutes.
Taken 5.5 hours. Hey, that person, Papa, so you can extend. Okay. Yeah. Components of salary. Format for. Yeah. Format for computation of salary. Basic pay is there. Nothing, Sudhir, out of syllabus. Example barala. Now, see, these are the different components of salary: basic pay, dearness allowance, bonus, commission, advance salary, arrears of salary, retirement benefit like gratuity, pension, leave salary, retrenchment, VRS, allowances, provident fund, superannuation fund, ATC, pension fund, perquisites, gross salary, deductions under section 16 such as standard deduction, entertainment allowance, and professional tax. Then net salary or taxable salary. Now, basic pay. Basic pay means what, sir? That is your base component of salary. That is your base component of salary. Base component of salary means base component of salary. It is a tax. It is a taxable component of salary. See, normally what happens is whatever salary they give will have different components. The base component of salary is called as basic pay, which is the minimum amount of salary which you are going to receive, irrespective of what is the case. Basic pay, it is your base salary. It is a taxable component of salary, and how much is taxable? It is fully taxable. Now, in the question, you should check for date of joining, date of retirement, and date of resignation. Okay, grade pay or grade scale pay. Sometimes the salary will be given on grade pay or grade scale pay. You will do mistake over here. Please be very careful. So, for example, if the question says your basic pay is 20,000, 2,000, 30,000, that means when you join, they will give you 20,000. For every 1 year you complete, how much they will give you? 2,000 rupees extra they will give you. So, maximum they will extend till 30,000 rupees. So, I gave this question. Now please note, very important, this question, mostly you have done mistake, but make sure that you don't do mistake now. 20,000, 2,500. Now, I mean, even now if I ask you to do this, you'll do mistake, I know. So 20,000, 2,500, 25,000, 5,000, 50,000. Now, I have joined the company on 1st of January 2021. They are asking you the salary for previous year 24-25. So they are asking you salary from 1st of April 2024 to 31st of March 2025. Now, if you see, my salary will increase by 2,000 up to 25,500. Okay. So 20,000 for the first year, 22,500 for the second year, 25,000 for third year, and then 25,000 plus 5,000, 30,000 for fourth year. Now here, if you see 24-25, this period which was there, no, that falls in between third year and fourth year. So for 3 months I will receive 25,000, and for balance month I will receive 30,000. So that important calculation is there. Okay. So 3 months I will receive 25,000, balance I will receive 45,000. Now dearness allowance is the salary which is given by you for meeting your inflation cost. So whatever amount is given to meet your inflation cost, that is your dearness allowances. So it is a taxable component of salary and it is fully taxable. Now dearness allowances, it can be in terms or it can be not in terms. If DA is in terms, that means DA is forming part of retirement. If DA is not in terms, that means DA is not forming part of retirement or salary. This is one more name for DA not forming part of pay, DA not forming part of retirement, DA not forming part of salary is DA not in terms. Now the importance of this will come only when we are seeing formula of salary for computation of few different things. We take basic pay plus DA in terms and turnover commission, something like this, correct? So now sometimes DA will be given in percentage form. When the DA is given in percentage form, then you should take DA as a percentage of basic pay. Bonus is a taxable component of salary, but it's taxable on receipt basis. Bonus can be contractual or it can be voluntary. Now bonus, now check if they give bonus paid, take it. If they give bonus only, nothing else, take it. If they give bonus declared, ignore it. Commission or fees. If you are receiving any commission or fees, then also it is taxable component of tax salary and is fully taxable. Commission can be based on turnover, etc., etc., any type of commission. Now, see the question carefully. If the question is silent, what is the type of commission? And if they are told that turnover is some percentage of commission is certain percentage of turnover, that means it is a turnover commission. Okay, whenever they say commission is certain percentage of turnover, that means it is a turnover commission. When they have not mentioned that, then just write a note telling it is not a turnover commission. Advance salary or arrears of salary. Advance salary is the salary which is received by you in advance. That is a salary which is taxable and it is taxable on receipt basis. Now advance against the salary, if they give in the question, that is not a salary. It is advance against salary. That means it is a loan. Arrears of salary is a past increment in the salary from retrospective effect. Any increment in the salary with retrospective effect which was not taxable in the earlier years. It is a taxable component of salary and it is fully taxable and it is taxable on receipt basis. Now retirement benefit, we have different retirement benefit. First retirement benefit is gratuity. What is gratuity, sir? When the company, because of the services which is rendered by you to the company for a very long period of time, you would have worked in the company, for the services which is rendered by you, the company is going to say you thank you. How will the company say you thank you, sir? By giving you something called as gratuity. They will say thank you to you by giving gratuity to you. That gratuity which you are receiving is taxable. When is it taxable? It is taxable if it is received during employment. If it is received during employment, that gratuity is fully taxable. Irrespective of how much amount you have received, gratuity is fully taxable. But if it is received by your legal heirs, if the employee dies and the legal heirs are receiving gratuity, then it is fully exempt. But however, gratuity is received at the time of retirement. If the gratuity is received at the time of retirement, then it will be exempt under section 10(10). How much will be exempt, sir? Please note, gratuity received at the time of retirement is exempt. If you are a government employee, if you are a non-government employee, I am going to check whether you are a person employee who is covered under Payment of Gratuity Act or not covered under a Payment of Gratuity Act. If the question is silent, take it not covered under Payment of Gratuity Act. If question does not say whether the employee is covered or not covered, what will you take? Not covered. So if you are a POGA employee, then take 15/26 into salary per month into completed year of service, actual gratuity received, or statutory limit of 20 lakh rupees, whichever is less. However, if you are a non-POGA employee, I will take half of average salary per month. Wait, I'll first cover the POGA employee completely. POGA employee, what is the exempt gratuity for POGA employee? 15 by 26 into salary per month into completed years of service or actual gratuity received or limit of 20 lakhs, whichever is less. Now, what do you mean by salary per month over here? It is the last drawn salary. Last drawn salary means what's that? Basic plus DA interns plus, not salary per month, that is only salary per month. Basic plus DA in terms and not in terms. For POGA employee, you will take DA, whether it is in terms or not in terms, full DA will be taken by you and basic pay will be taken. Now, sir, what do you mean by completed years of service? Completed years of service means the number of years you have completed working in the company. Completed years of service. If there is any fraction in completed years of service and the fraction is more than 6 months, then consider it to be a full year. So, if the fraction is more than 6 months, you should take it as what, sir? Full year. If the fraction is more than 6 months, take it as full year. If it is exactly 6 months, same, don't extend. Okay. Now, if you are a non-POGA employee means what? Non-POGA employee means what, sir? Non-POGA employee means what? You are not covered under Payment of Gratuity Act. If you are an employee not covered under Payment of Gratuity Act, then if you are an employee who is not covered under Payment of Gratuity Act, then take half of average salary per month. Instead of salary per month, take average salary per month into completed years of service or actual amount received or 20 lakh rupees, whichever is less. Sir, what is average salary per month? Last 10 month ka average. You should take average of last 10 months, which will include your basic pay, dearness allowance and turnover commission. Average salary per month will be this amount, whatever you receive. Fraction in completed years of service. If you have any fraction in completed years of service, you should completely ignore it. Now, for calculating salary per month or average salary per month, the month of retirement should be ignored, and the statutory limit of 20 lakhs will be applicable for one single individual as an employee throughout his lifetime. Then, if the question is silent about type of employee, assume it to be non-POGA employee. Then pension. Pension pension can be of two types. It can be either commuted pension or it can be uncommuted pension. Commuted pension means what, sir? The monthly pension which you are receiving. Commuted pension means what, sir? Lump sum pension, and uncommuted pension means monthly pension. That uncommuted pension or monthly pension which you are receiving, it is always taxable. It is fully taxable whether you are a government employee or non-government employee. But the commuted pension, the lump sum pension which is there, that will be exempt under section 10(a). If you are a government employee, fully exempt. If you are a non-government employee, have you received gratuity? Yes, 1/3 of total pension. First, see, don't take commuted pension ka 1/3. No. First, from that commuted pension, find the total pension. Find the total pension. The total pension ka 1/3 will be exempt. And if you are if you are not receiving gratuity, then half of total pension will be exempt. Sir, what is total pension? For example, in this question, see, Mr. Sagar, who retired on this date, received 5,000 rupees as pension. He commuted 60% of his pension and received 3 lakh rupees. Meaning, 60% pension he commuted and received 3 lakh rupees. So, 60% of what he would have commuted? Total pension. Correct, no? So, what is my total pension? Total pension is 3 lakh divided by 60%, which is 5 lakh rupees. Now, this 5 lakh ka 1/3 and 5 lakhs ka half should be taken as exemption. Then I have what, sir? Leave salary. Leave salary means what, sir? Leave salary means the salary which is paid by the company to you even on the days when you have not worked, when you were on leave. That is leave salary. Leave salary or leave encashment or leave credit encashment. Leave salary or leave encashment or leave credit encashment. Section 20. So, for example, I have 24 days leave in a year. My company says I can take 24 days leave in a year. So, this 24 days leave which I can take is called as leave allowed by the company. I take leave of 4 days. That is leave taken by me or availed by me or utilized by me. So, balance 20 days is unutilized leave, or that is the leave credit available with me. Now, this leave credit is nothing but leave allowed minus leave taken. So, leave salary means what, sir? This leave credit ka payment they are doing. So, leave salary means encashment of leave credit. Note, as per Income Tax Act, only 1 month leave is allowed for a completed year of service. For every year I complete in service, how many months leave is allowed as per income tax law? 1 month. So, now leave salary, how much is taxable, how much is exempt? Leave salary, if it is received during employment, fully taxable, whether you are a government employee or non-government employee, it does not matter. Yeah, and if it is received at the time of retirement, it is exempt under section 1010 AA. If you are a government employee, fully exempt. If you are a non-government employee, leave credit into average salary per month, 10 months into average salary per month, actual amount received, and limit of 25 lakhs, whichever is lower. Now, note number 1. What is average salary per month? Last 10 month ka average till the date of retirement, which includes basic plus DA interns plus turnover commission. Then leave credit is calculated, should be calculated as per income tax law. Fraction in completed year of service should be ignored, and month of retirement should also be considered. Then retrenchment compensation and
Yes.
retrenchment compensation is exempt under section 1010B. How much is exempt, sir? 15 by 26 into average salary per month into completed years of service, actual amount received, or limit of 5 lakh rupees. Average salary per month is what, sir? Basic plus DA in terms plus turnover commission. Fraction in completed year of service should be ignored. And for retrenchment compensation, now wait, for fraction should not be ignored. Fraction, if it is more than, it should be taken as 1 year. VRS compensation, section 1010C. VRS compensation, how much is exempt, sir? Salary per month into 3 months into completed year of service, salary per month into remaining months in service, or actual amount received or statutory limit of 5 lakh rupees, whichever is less. Now, salary per month is what's the basic plus DA in terms plus turnover commission. Fraction in completed year of service should be ignored. Now, allowances also important. Allowances. See, actually salary, if you study in installment, no, it is a good chapter. Meaning, you will not feel that it is very big. What are those installment? Retirement benefit is one part. Allowances is one part. Allowances with rent, what is that? PF and superannuation fund, that is one part. And perquisites is one more part. So if you study this chapter in 3 installment, that will be more beneficial for you. Okay. So if you study everything at once, you may feel, oh, confusion ಆಗ್ತಿದೆ life ಅಲ್ಲಿ. Okay. So you study in installment. Now do you have very less. When is your exam, by the way? 10 only. Yeah. Mine is 14th. Sunday. ಮಜಾ ಇತ್ತು. 7:30 exam time.
He's asking you.
Yeah, I'll have class. Not required. That much is not required. Trust me. Meaning, as of now, what I am feeling is, whatever you have studied till now, because you are able to answer, I feel that you will clear. I mean, I'm not worried about whether you will clear or not. By your reaction, what I feel is that your feeling is wrong, answer. Huh? Law is like that. Hey, you can, I mean, you can give review and all you can do, no?
told 6 years of experience.
Yeah, but
Manage.
not you, Praveen. Okay, no problem.
Only law.
Cheat you. Is exempt based on limit. Cheat you is exempt based on limit. Duck hat is exempt based on how much you actually spend. Allowances. Allowances are monetary benefits given by the company to employee to meet a particular kind of expenditure. Now they are giving you something called as commutation allowances, also called as transport allowance. Now if commutation allowances is given, normally it is fully taxable. Commutation means transportation from office to home, home to office. It is fully taxable. However, if you are a handicapped employee, then 3,200 rupees per month will be exempt. Children hostel allowance will be exempt. How much, sir? Maximum 300 rupees per month per child will be exempt. How many children can you take the exemption, sir? 2 children. Children education allowance, how much is exempt? 100 rupees per month per child for a maximum of 2 children. Tribal area allowances, maximum 200 rupees per month will be exempt. Truck driver allowance, also called as allowance for employees of transport company, actual amount cost 70% or 10,000 rupees, whichever is less, will be exempt. Underground allowance, 800 rupees per month if you are working somewhere in KGF. Underground is that only, no. Duck hat means what, sir? Exempt based on limit. Daily allowance, uniform allowance, conveyance allowance, helper allowance, also called as assistant allowance, academy allowance, also called as research and development allowance or professional development allowance, traveling allowance or tour or transfer allowance. All these are exempt based on whatever money you are actually spending. Amount received or amount whichever is less. Now HRA is one item which they normally ask in the examination. HRA is house rent allowances, that is exempt under section 1013A. How much is exempt? 10% of what is this? 40% of salary or 50% of salary or actual HRA received or rent paid minus 10% of salary, whichever is less. What is salary over here? The salary is basic plus DA in terms plus turnover commission. Note, 50% limit is for metro cities. Normally it is 40%, 50% is for metro cities. What is metro cities, sir? Delhi, Mumbai, Chennai and Kolkata. Now where you are residing, that is important, not the place where you are working. So if you are staying in and working in, limit will be, if you are staying in Mumbai, working in Bangalore, then what is the limit? How will you up and down every day, Gube? In such cases, please note, I am staying in Chennai, working also in Chennai, 50%. I am staying, let us say, Kathpadi, some place near Chennai, and working in Chennai. What is the limit? 40%. Where I am staying is important, not where I am working. Any other type of allowances is fully taxable. Tim. Provident fund. Statutory provident fund, not asked in the exam, will not ask. Why, sir? Everything is exempt in life. Statutory provident fund, your contribution and employer ka contribution exempt. Interest on your contribution, interest on employer ka contribution exempt. Whatever lump sum amount you receive at the time of retirement, that is also exempt. Recognized provident fund, important. Now, recognized provident fund, whatever contribution is made by you, this contribution you will make from your salary only. So it is not taxable. You should ignore it. You should not consider this. However, you can claim deduction under section 80C. Now, employer makes the contribution to this fund. Employer ka contribution is exempt up to 10% of salary. 12% of salary. Salary means basic plus DA in terms plus turnover commission. Now, for your contribution, you are receiving interest. Even for employer ka contribution, you are receiving interest. That interest, if the interest amount is up to 9.5% per annum, then it will be exempt. Now, so what we have understood? Your contribution, interest on your contribution. My contribution, interest on my contribution. Your contribution, ignore. Deduction you claim under 80C. My contribution is exempt up to 12% of salary. Interest on your contribution as well as interest on my contribution exempt up to 9.5% of salary. Separately for you 9.5%, separately for me 9.5%. Now we are receiving lump sum amount. From this fund I will receive lump sum amount. Lump sum amount received on retirement will be exempt. When will it be exempt? If minimum 5 years of service is completed. If you have completed minimum 5 years of service. Now it will be exempt if these 3 conditions are satisfied. What are these 3 conditions? Now, meaning minimum 5 years you should complete. In the following cases, even if you don't complete 5 years, exemption will be given. If you are leaving the job because of your ill health, or because the company only is closed, employer has discontinued business, or you are leaving the job and transferring the amount in another employer's ka recognized provident fund account. Now please see the interest on recognized provident fund. Interest on employer contribution more than 9.5% is taxable, correct? Interest on employee contribution also more than 9.5% is taxable. Now further they have told, if the employee has made the contribution more than 2,50,000 in that fund, then any interest earned on that extra money which is contributed by you is fully taxable. Now recognized provident fund. What's a recognized provident fund? Recognized provident fund. This is to completed now. Again, copy paste. Unrecognized provident fund. Unrecognized provident fund is a good fund, and they normally ask also sometimes in examination. Contribution made by you, ignore, and you will not get deduction under 80C. And then employer ka contribution is exempt. Interest on your contribution exempt. Interest on my contribution also is exempt. Now the lump sum amount which you receive, that will be taxable. Can I say lump sum amount will have 4 people's money? Employee ka contribution, employer ka contribution, interest on employee ka contribution, interest on employer ka contribution. Now employee ka contribution, this contribution which is made by you is made from your salary. Okay, so please ignore it. You have 3 more things, which is interest on your contribution. That interest on your contribution is taxable under income from other sources. Now 2 things are left. My contribution and interest on my contribution. These both are taxable under salary. Superannuation fund. If it is approved superannuation fund, it is just like statutory provident fund. Meaning your contribution, my contribution, interest on your contribution, interest on my contribution, and lump sum amount, everything is exempt. However, my contribution, there is a maximum limit of 7,50,000. And unapproved superannuation fund, exactly like unrecognized provident fund. Meaning your contribution is exempt, my contribution is exempt, interest on your contribution is exempt, interest on my contribution is exempt. Lump sum amount withdrawn by you at the time of retirement will be taxable, wherein it will have 4 money. Employee ka contribution, not treated as income, therefore ignore. Interest on your contribution, taxable under other sources. Employer ka contribution and interest on employer ka contribution is taxable as salary.
Deduction under 80C.
Deduction under 80C is not available for unrecognized fund. Yeah, but in your book you have not written like that.
Same, written the same thing. So
You know, what have you written in your book? Don't have book only.
for unapproved provident and superannuation, 80C.
Unapproved any fund not allowed.
But for superannuation,
Allowed, not allowed, you have written. Sir, what have you written? No idea, sir. Recognized provident you have found. After that, it is unrecognized provident fund. After that, it is superannuation fund. In that superannuation fund, what you have written? One is approved. Unapproved, what you have?
same as
Yeah, approved also same as unrecognized provident fund only. I have made you right, but I have told one limit is there. 7,50,000. Yeah, I know what I have made you right. Yeah. Deductions, section 16. Deductions. Section 16 talks about deductions. Standard deduction. Standard deduction. Standard deduction. What is standard deduction telling, sir? So from your salary, now gross salary is done. From the salary, you can subtract few things. What is that few things which you can subtract? First thing is deduction. Section 16(1) capital A talks about standard deduction. It is available for all types of employees. Amount of standard deduction is, how much of reduction is how much, sir? It depends on what option you have selected. Optional regime or default regime. If you have selected optional regime, then 50,000 is the standard deduction. If you have selected default regime, 75,000 is the standard deduction. And deduction will be allowed only once. Entertainment allowance deduction. Entertainment allowance, first it will be added to your salary. Then deduction will be allowed only for government employees. How much deduction, sir? 20% of basic pay or actual amount or limit of 5,000 rupees per annum, whichever is less. No entertainment allowance deduction will be allowed for default tax regime assessees. Then professional tax. It is a tax on employment collected by the state government. It is allowed as deduction only if it is paid by employee. If professional tax is paid by employer, first add it to gross salary, then claim it as deduction. Amount of deduction is 2,500 per annum. Deduction is allowed on payment basis, meaning only if it is paid, it is allowed as deduction. This deduction will not be given under default regime. Next is perquisites. Perquisites is what, sir? Extra benefit given by the company. Perquisites is an extra benefit given by the company. Normally, it is a non-monetary benefit. However, sometimes it can be in monetary terms also. Reimbursement of expenses or expenses incurred by the company on behalf of employee is also treated as perquisites. Leave travel concession. Hey, by the way, the section numbers which you are supposed to remember: 10(10) gratuity, 10(10)A, 10(10)AA. Gratuity, normally they'll ask gratuity and pension. Sometimes they may ask leave salary also. 10(14) is the section for you cheat duck hat. But what you should remember is 10(13)A HR. 10(13)A HR. A HR. Okay, leave travel concession exempt under section 10(5). Leave travel concession means what, sir? It is a travel benefits given by the company for travel anywhere in India for an employee. Now, it is exempt under section 10(5). If you are traveling by air, how much is exempt, sir? It depends on how you are traveling. If you are traveling by air, exempt amount will be actual expenses or economic class fare, whichever is less. If you are traveling by any other mode, it can be car, bike, train, boat, walk, or whatever mode you want to go. Okay, if you are traveling by any other mode, then check whether the place where you are going railway facilities available or not available. If the place where you are going railway facilities available at that location, exempt amount will be actual expenses or first class AC rail fare, whichever is less. No, sir, railway facility is not there. Then for actual expenses or deluxe class ka bus fare, whichever is less. Sir, if nothing is there, meaning rail is not there, public is also not there. Then take your actual expenses, compare that with first class AC rail fare for similar distance, whichever is less. Note number 1, leave travel concession exemption is available for, you can go yourself with your spouse, children and dependent relative, mother, father, brother, sister. You can claim exemption for 2 children born on or after 1/4/1998. And multiple birth in second pregnancy is considered as 1. You can take 2 Jabnika exemption in a block of 4 years. Medical facility is given. Now the treatment is happening in India. If the treatment is happening in government hospital, government owned hospital or employer ka hospital. If it is happening in government hospital, government approved hospital or employer ka hospital, then it is exempt. If it is happening in any other hospital, lawmaker says it is fully taxable. Then treatment happens outside India. For transportation, for treatment and stay, exemption is available based on RBI ka limit, provided only patient and 1 attendant is going. However, for travel, normally exemption is not available. Exemption will be available if your salary is up to how much, sir? 2 lakh rupees. If your gross salary is up to how much, sir? 2 lakh rupees. Gross total income, not salary, sorry. Gross total income is up to 2 lakh rupees. Note, exemption is for, you can take treatment of yourself, spouse, children or dependent relative. Medical insurance is covered. Health insurance is covered, but life insurance is not covered. Now tell me, I am going for treatment in a nursing home. Taxable, not taxable? Nursing home. My, what is that? Family doctor is there. Taxable. When will it be exempt, sir? Only in 3 cases: government hospital, government approved hospital or employer owned hospital. You are giving gift. Gift is given by employer. Cash gift is given by the employer. Any amount, even 1 rupee, it is fully taxable. If gift is given in kind, then I'll see the value of that item which I am receiving. It can be any type of item, including DJ Pasu BV. Even if car is given, it is taxable by employer. Okay. The fair market value of the gift is more than 5,000 or equal to 5,000, it is taxable. If it is less than 5,000, it is exempt. Loan is given by the company for a lesser price, meaning free of interest or without interest or concessional rate of interest. If the loan is given for medical treatment of specified disease, it is exempt. If the loan is given for any other purpose, then I'll see the loan amount. If the loan amount is up to 20,000 rupees, it will be exempt. If the loan amount is more than 20,000, it will be taxable. Now, taxable perquisites will be how much, sir? Loan outstanding at the end of the month into SBI ka interest rate as on first day of the previous year, less interest charged by employer. Now, ESOP, if you are receiving, ESOP means the shares of the shares offered by the company to employees at a concessional rate. Taxable perquisites will be what, sir? Market value of the shares on the date of exercising the option minus issue price into number of shares. So whatever is the market price of the shares on the date when I am purchasing the shares, exercising the option, minus what is the price at which the company is giving me these shares. Capital gain also will come. For capital gain purpose, the cost of acquisition will be taken as fair market value as on the date of exercising the option, and the period of holding shall be taken from the date of allotment till the date of allotment of shares till the date of transfer, and gifting of these shares will also be regarded as transfer. Then education facility is given. String. Yes, sir.
If I teach here, my full value of consideration will become 0. So I'll get a loss.
No. If you are gifting these shares, then full value of consideration should be taken as the market value as on the date of transfer. On the date when you are gifting it, no, what is the market value? Education facility you are giving to employee. If you are giving education facility, no benefit benefit is there to the company, therefore no perquisites, therefore exempt. If you are giving it to employee ka child, if you are giving employee ka child, employer ka own institution or employer ka tie-up institution, If the value is less than 1000 or equal to 1000, exempt. If the value of the education is more than 1000 rupees, it is taxable per month. Any other person, if you are giving, fully taxable. Any other institution, it is fully taxable. Yes, sir.
1000 per month fully taxable.
Fully taxable if it is more. Now the company is giving you movable asset except car. Now whether that movable asset is given, like movable asset means AC, TV, fridge, anything company is giving you movable assets except January. If the company is giving you movable assets means what, sir? Car, bike, even chair, table, AC, fridge.
Yes, is fixed.
Yeah, but it is movable. No, you can purchase and sell. TV, anything. If the company is giving you movable assets, if the company is giving you movable asset except car, now whether it is owned or it is rented, that is important. If the asset which is given by the company is owned by them. Now, for example, let us say company is giving me this mic. Company is giving me this mic. Now, whether this mic is owned by the company or they have taken it on rent. If it is owned by the company, what is the perquisites value, sir? 10% of cost is the value of perquisites for me. If it is taken on rent, whatever rent they are paying will be taken as value of perquisites. Note, amount recovered by the employer from the employee should be reduced, and laptop or computer is also exempt. If they sell any movable assets, now company told Dilip, you are using it from so many years, you are using it from so many years, you only keep maja pano. So sale or transfer of movable asset by the employer to employee. Now if you are selling what, sir? Laptop or a computer, perquisites will be WDV minus consideration which is paid by you. If you are selling a car, perquisites will be WDV minus consideration. If you are any other assets, WDV minus consideration. Basically everything is WDV. Perquisites is how much? Whatever is the return down value of that item into minus consideration paid by you. Now the question is, what is the return down value? For laptop and a computer, the return down value will be computed by you by taking depreciation at 50% per annum under WDV method. And for car, you should take depreciation at 20% per annum WDV method. And for all other assets, take depreciation at 10% per annum under straight line method. Now, depreciation should be calculated for completed year only. Part of year should be ignored. Completed year shall be calculated from the date of purchase till the date of transfer to the employee. Lunch facility or meal facility they are providing. If the value of meal is up to 50 rupees, then it is fully exempt. If it is more than 50 rupees, then excess amount will be taxable. In case of refreshment, snacks, non-alcoholic beverages, fully taxable. And if you are at exempt only, I told, fully exempt. And if you are at a remote location or on offshore duty, then it will be fully exempt. Now, very important is rent-free accommodation. Rent-free accommodation is provided by the company to you. Rent-free accommodation, you are a government employee. You are who, sir? Government employee, taxable as per license fee given by government. You are a non-government employee. You are a non-government employee. Check whether the property which is given to you, is it owned or it is taken on rent. If it is owned, then the value of perquisites will be 5% or 7.5% or 10% of salary. If it is rented, then value of perquisites will be 10% of salary or rent paid to the employer, whichever is less. Now, in all other cases, value of perquisites, if it is owned, then it is 10%. If it is rented, then it is the rent which is paid by. Meaning, please note. Meaning. Wait. If rent-free accommodation, if the property, the house which they have given to you, if that house is a owned house, what is the value of perquisites? 5%, 7.5% or 10% of. If it is taken on rent by the company, 10% of salary or rent which they are paying. Now, with this house, if they are also giving you furniture, whether that furniture is owned by you or it is, if that furniture is owned, 10% of cost. If it is that is taken on rent, higher charges or rent charges paid. Now, from this, if they are charging something from the employee, reduce it. Amount recovered by from the employee by the employer shall be reduced. population as per latest census should be taken. If the population is up to 15%, I should take 5%. Meaning here I should take 5%, 7.5%, 10%, but what should I take? Depends on population. If the population is up to 15 lakhs, 5%, 15 lakhs to 40 lakhs, 7.5, more than 40 lakhs, 10%. Now here salary means what, sir? BDMC. Basic pay, dearness allowances, bonus, commission, monetary benefits and commission. Now exemption for 90 days. If you have been allotted 2 houses for more than 90 days, then one of the house will be exempt for 90 days. After 90 days, both will be taxable. If they are giving you hotel benefit, then it is whatever rent they are paying for the hotel or 24% of salary. And if the house is given for more than 1 year, you should take indexed value of the first year. Then car facility is given by the company. Car facility, last point I think. Car facility is given by the company, last important point. Car facility is given. Now car you are using it only for personal purpose. If you are using car only for office purpose, sorry, are you getting any benefit? No. If you are using only for personal purpose, yes, you are getting benefit. If the car is owned by the employer, 10% of car will be taken as perquisites. If the car is taken on rent, then the rent charges paid to the employer will be taken as value of perquisites. Now, along with car, if they are also giving you running and maintenance charges, add it. Along with car, if they are also giving you driver salary, add it. That will give you total taxable perquisites. Car is used for personal purpose, partly personal purpose and partly office purpose. If it is partly, see only office, no perquisites. Only personal, yes, perquisites is there, 10% if it is owned, 10% of cost. If it is rented, whatever rent they are paying. Now, if the car is used partly for office purpose and partly for personal purpose, then the value of perquisites will be, if it is owned by the employee, meaning you are owning the car and running and maintenance charges are also paid by you. What benefit you are getting? Nothing, therefore no perquisites. If the car is owned by you and running and maintenance charges is paid by me, there is a benefit which you are getting. Yes, you are getting a benefit. So whatever running and maintenance charges I am giving you, subtract from that value of car. What is value of car, sir? If the car cubic capacity or engine capacity is up to 1600 cc, 1800 per month. If it is more than 1600 cc, 2400 per month, that should be reduced. If it is owned by the employer, running and maintenance charges is paid by the employee. Owned by me, you are paying running and maintenance charges. So value of perquisites will be up to 1.6 liters, 600 per month. More than 1.6 liters, 900 per month. If owned by me, running and maintenance charges also by me, 1800 or 2400, depending upon the capacity. Now, if I am also providing driver salary at 900 rupees per month for the above. Now, if there are more than one car which you are using partly, one will be taken as partly purpose and all the cars will be taken as fully personal purpose. Month should be completed month. Month should be completed month. Path of month should be ignored. Any amount recovered by the employer from the employee should be reduced. Gas, electricity, water facility fully taxable. Servant, gardener, watchman taxable. Now these 2 points, if it is a facility provided by the company, taxable only for specified employees. If the money is reimbursed by the company, it is taxable for all employees. Credit card facility, if the credit card is used for office purpose, exempt personal purpose, it will be taxable. Club facility fully taxable, except corporate club, sport club, health club. Employee ka obligation, your obligation is met by me. Your expenses is incurred by me, taxable as perquisites. Employer ka contribution to these funds, recognized provident fund, approved superannuation fund, 80cc pension fund in excess of 7,50,000 in total is fully taxable. Meaning how much is taxable? Excess amount more than 7,50,000 is taxable as perquisites. Transport facility is given to an employee of a transport company. So if you are an employee of railway or airline, exempt. Any other transport company, it is taxable. Any other type of employee, transport facility given is always taxable. But if they are giving transport facility from office to home, home to office, exempted. Following will always be exempt: laptop, computer, mobile, tea, coffee, snacks, goods given at concessional rate, health insurance, medical insurance. These are always exempt. Okay, this is all about your chapter called as salary. Salary. We'll take a break after this. Okay, wait. Bharat of Siliguri is offered an employment by Vimal and Company. Oh, Vimal and Company is offered an employment by Vimal and Company at Kolkata on a basic pay of 5,500 per month. Dearness allowances are. Please see the questions carefully. Inge par everyone. Praveen inge par. Basic salary is how much, sir? 5,500 per month. Other allowances are dearness allowances not forming part of retirement, 4,000 rupees. Medical allowance, 1,000 rupees. Can I say this is taxable? This is taxable. This is taxable. Hello. Bonus being 1 month ka basic salary, which is 5,500. That is also taxable. The company gives him an option either to take rent-free accommodation in Kolkata for a rental of 1,000 rupees per month, or to accept cash for house rent allowance of 1,000 rupees. He decides to accept house rent allowance and takes a house at a monthly rent of 1,000 rupees. He has opted for old regime. Discuss what with reasons whether he has made a wise choice or not. Basically, very good question. This is what is this question telling? Here they have not asked you to compute. They have not at all asked you to compute salary. They are telling whether HRA is good or rent-free accommodation is good. Now, for HRA, how much is the exemption? Basically, you are supposed to calculate his salary. Wherever my salary is less, that is more beneficial for me. Right. Correct, no? So, let us calculate the salary. Calculate panno. Now tell me, what is his basic pay? 5,500 into 12, how much, sir? 66,000. Then dearness allowances, 4,000 into 12 is medical allowance, 12,000. Bonus, 5,000. Fine. Any other thing he has received? Okay, what is the total of this? 31,500. Okay, now please see. Now we will take first rent-free accommodation. Rent-free accommodation, how much is exempt, sir? Can you say because he's in Kolkata, 50% of salary or actual amount received or rent paid minus 10% of salary. So 50% of salary. What is salary for rent-free accommodation? Can I say here I should take DA. Now DA in terms should be taken. Correct? No? DA in terms is not there. Correct? No? So can I say salary will be only 66,000 into 50%, which is actual HRA received is how much? 1,000 into 12.
Even this is different direct pay different. You are doing direct or which one?
HRA. HRA. Actual rent is how much, sir? Sorry, actual rent is?
1,000.
No, actual HRA we are writing. Actual HRA is how much?
12,000.
12,000. Rent paid is 12,000. minus 10% of salary, which is 3,300. How much is it? 8,700 rupees. So my HRA amount, taxable HRA will be how much? 12,000 minus 8,700, which is 3,300. So my salary, gross salary will be 1,34,800 rupees. If it is what? HRA. Now, because I'm in Kolkata, the population will be more than 40 lakhs. Can I say I'll take 10% of salary? Now, this property is owned or rented? Wait. What is the, where is this? Yeah. The property, rent-free accommodation in Kolkata for fair rental value of, or to accept allowances. He decides to accept. The company gives an option to him, rent-free accommodation in Kolkata of a fair rental value of 100 rupees. So it is rented. It is rented. So how much will be HRA? Tell me HRA. Sorry, not HRA. Rent-free accommodation. How much will it be? 10% of salary. Salary is how much? I'll take basic plus DA. A DA should be taken only in terms. Basic plus DA in terms plus taxable allowances I should take. Wherein I'll take this, I'll take, and this I'll take. What is the total of this? 83,500. Uska how much percent? 10%. 8,350 or 12,000, whichever is less, is 8,350. This will be my rent-free accommodation taxable. So now to this 31,500 add this 1,39,850. Yeah. 39,850. So how much am I getting? 1,39,850 if it is rent-free accommodation. Now, only 50 rupees I am saving. 50 I say. Wait, you'll see now our answer is correct or not. Bharat gross salary. Yeah. This is fine, this is fine, this is fine, this is fine. This is how they will give you marking. Now, when you are taking HRA, when you are taking RFA, they have done separately, no problem. They'll give marking. Okay, this is correct, half marks. This is correct, half marks. This is correct, half mark. This is correct, half mark. For salary chapter, for all the chapters, basically, they'll give you marking like this only. PGBP chapters. So even if your main answer is not correct, one of the adjustment is correct, you'll get marks. HRA, how much is exempt? So this we got 1,38,000. What was our mistake in this? 66 for 4,80,000. 48,000 is 48,000, 5,000. Yeah. Rent-free accommodation minimum of this 50% of salary, actual received. Rent paid over 10% of salary. How much did we take? 10% of salary is. Oh, 10% of salary we should take, not 50% of 6,600. 5,400. So I should have subtracted only 5,400, which is 6,600. Hey, did you understand what did I do? I took 50% of this. How much? 1 lakh? 100, which is okay. Second answer we have got this only. So what is best? The above computation indicates that if the assessee chooses rent-free accommodation, then his gross salary would be increasing by 1,750, which increases his tax bill. Assessee's decision is right. Have you understood this? We are comparing two people and telling what is best. Sir, Now what is happening in this? Basic pay. I'll do the computation on this side. Basic salary. I'll read the question first. We'll understand what they are asking. Compute the income from salary. Okay. Basic pay. How much? 15,000 per month. How much is the total? 12 months. 1,80,000 rupees. Dearness allowance is 60% of this. 1,08,000. Huh? Medical allowance 600 per month. Actual expenditure I don't care. 612s are 7,600 into 12 months is 7,200. Then house rent allowance 6,000 per month. He pays a rent of 7,200 per month in her house in Durgapura. Where is Durgapura? We don't know. So we'll take 40%. So 40% of salary. Wait, city compensatory allowance is there. Turnover commission is not there. They have not told anything about DA. So if the question is silent about DA, what should you assume? In terms or not in terms? In terms. So what is the total this thing? 2,88,000. Uska 40%. How much? 1,15,000. Yeah, I feel that I have done this question somewhere. Anyways, 1,15,200 or 40% of salary, or actual HRA received is how much? 6,000 into 12, 72,000, or rent paid is how much? 7,200 into 12 minus 10% of salary is 2,88,000. 57,600. So how much is exempt? 57,600. So 57,600, subtract it from 72,000. 14,400. I hope you got this answer. At least you see. You just tell me, calculate and tell me amount. Okay. Then city compensatory allowance 12,000 plus 6,000. How much? 18,000. Yeah, 1,500 into 12. Fully taxable. She owns a car which she is using for office purpose. Her employer reimburses 300 rupees per 3,000 rupees per month. 3,000 into 12, 36,000. 36,000 minus, because she is owning the car, value of car will be subtracted. How much, sir? CC they have not given. No. Only they have. If they are not given, 1,600 only will take now. Based on our salary we are taking. Anyways, what is this? 1,600. 1,600. How much? Yeah, how much is the amount? 1,800 per month. 14,400. She is contributing 2,100 per month towards recognized provident fund. Employer also contribute the same amount. Interest credited in the fund is 11%. Oh, very good question they have given. Big question. She has contributed 2,500 per month. Her contribution, ignore. Employer contributed 2,100. So 1,80,000 ka 12% he can contribute. 21,600 he can contribute. How much is he contributing? 2,100 into 12. 25,200 minus 21,600. So 3,600 is the taxable component for employer ka contribution. Hey, please note, her contribution to will ignore. Employer ka contribution is exempt up to 12% of salary. So more than 12% of salary is 3,600. We are taxing that. Now interest is how much, sir? 22,000 divided 2,02,000 divided by 11% is how much amount is there? 1 lakh rupees. 2200 divided by 11%. So 20,000 rupees is there. 20,000 rupees is there. On 20,000 rupees into 9.5%. 1,900 is allowed. How much she has received? 300 rupees is taxable interest. She paid professional tax. Okay. The total of this you should tell me first. 3 lakh 3,45,900 rupees. Correct, huh? Okay, and you will get income from salary. You will have they told here if he opts for old regime means 50,000 and professional tax 2,90,100. We'll see the answer. 2,75,000. This is correct. This is correct. This is correct. This is correct. This is also correct only, no? Then what is the problem? Yeah, this is correct. This is correct. This is correct. House rent allowance 14,400. 18,000. This is also correct only. Rent free accommodation. Wait, this is done. Okay. Car facility share not taken only. What reason they have given? Good, yes. Okay, ignore, no problem. We'll ignore that for the time being. Then apart from that,
No, sir, they have not mentioned the CD, so
yeah, but still she is contributing. Where she owns a car which she is using for office purpose. Hey, okay, that wait. She is using.
official operation.
She is using it for office. Yeah, but still reimbursement is there. No, she is reimbursing. No, if she reimbursement is there, that means yeah. But they would have taken it like she is using only for office purpose. If it is used only for office purpose, ignore. They have done like that. If it is only for personal purpose, fully taxable. If it is only for office purpose, ignore. But if it is my car, anyways, no problem. Okay, we'll ignore. We'll accept our mistake over there. Sometimes we should. Now this mistake is there, I think. Yeah, why they have taken up to 9%? 9.5. Writing mistake. Sometimes. No, we got 1,900. We got, meaning 0.5% they have not taken. God knows for what reason. This is the mistake. No problem. Please note, online students, your institute while giving recommended answers also they can make mistakes. It is 9.5%. Loss is that. So this one problem is there. 12% of salary. Now DA, when question is silent, what is DA? DA is taken as in terms. So you are getting more than that. Hey, why did you tell me 21,000 then? Why did you tell this 21,000? No. 12% of salary. Salary should have taken both the things. 1,80,000 plus 1,800. 2,88,000 into 12%. So yeah, so this is not taxable at all. What is not taxable? Rent free accommodation. Why, sir? 2,88,000 into 12%. Correct, no? 2,88,000 into 12% is how much? 34,000. How much is my contribution? 25,200 is my contribution minus 34,000. It is negative, so it is not exact. So here 300 rupees, which is correct. Institute is wrong. Yeah? Now, Sonam, this is the question. We have solved this in the classroom. Sonam has provided a car of 1.7 liters by employer Vikas. The cost of the car is 3,50,000 and the maintenance cost of the car is 30,000 per annum. Chauffeur 3,000 rupees per month. So annually it is 36,000. Calculate the value of perquisites. If it is only for office purpose, nothing. Only for personal purpose, how much is the value of perquisites? 10% of car, how much? 35,000 plus 30,000 plus 36,000. How much? 60? 90, 1 lakh 1,000. 1 lakh 1,000 For both purpose, if I am using partly office, partly personal purpose, if it is partly, the company car, company only reimburses. So I'll take 2,400 per month into 12 plus 900 rupees per month into 12. Why is that 900? For driver. 39,000? 39,600. Ashtena. Okay, 39,600. So from this, they are telling in case 2 and 3, if the employee is charged 15,000 per month, subtract 15,000 per annum. Sorry.
Third case 24,600.
24,600 and 86,000 rupees. Okay. 86,000 one answer, 39,600, and first case it is nil. Miss Sonal is an citizen of India, government employee. Government employee. Okay, basic pay. Compute the gross salary they are telling. She has opted for old region. Basic pay, tell me the total amount fast. 6 lakh 24,000. Dearness allowances 2 lakh 76,000. Dearness pay 12,000. Fees is 6 lakh 50,000 per annum. House rent allowance is 15,000. Rent paid is 20,000. House rent allowance, basic pay plus DA in terms. What is the total of this? 70? You should not do. 9 lakh rupees. Huh? So 50% of salary is how much? 4 lakh 50,000. Actual HRA 15,000 into 12, 1 lakh 80,000. Rent paid 20,000 into 12, 2 lakh 40,000 minus 10% of salary, which is 90,000 rupees. 1 lakh 50,000, whichever is less, 1.5 lakhs. How much am I receiving?
180.
Actual HRA receipt is 180 minus 1.5 lakhs. How much is taxable? 30,000 rupees. Children, he has one adopted child. No problem. You can take benefit for adopted child also. How much education allowance? 100 rupees only will be taking. So 3,000 into 3,000 minus 100 into 12. 34,000. Yeah. Subtracting also 1,100 rupees per month. 2,900 into 12. Children allowance. What is children allowance? I don't know. So it is fully taxable. Hey, unless until they mention children education allowance, children hostel allowance, unless until they mention children education, children hostel, you should not take it as children. Now, this is 12,000. This is 24,000. Hostel allowance, I don't know what again. What hostel? Dress allowance. Dress allowance is uniform allowance. Now, uniform allowance is not dress allowance. I don't know why they have given dress and uniform separately. Now, Tarkurism they are doing in life. Correct? No? They have given uniform in life and they have given dress also. Maybe dress you wear in night time, uniform you wear in morning. I don't know what it is. Okay. Under the dress you wear, I don't know. So, dress allowance, can I say fully taxable? Uniform allowance is how much? Actual spend is also there, which is 12,000. Tiffin allowance fully taxable. Education of her own education allowance for her own education. Anyways, ignore. What is the total?
Total is 11,46,800.
This is the gross salary. This is the gross salary. Let us take a break. 100% wrong is Antia. Hey, why you say like this, Gove? Question what it is telling you or not? Yeah, so I mean, no problem. That mistake.
They can give whatever.
No, we should chill. Unless until they mention, no, you should not take. So only if you see, I have made you write. If they have three, four names, I have written all the names. Like uniform allowance is not dress allowance.
Right.
Like assistant allowance is not. Helper assistance is same. Some worker allowances will be there. That is not same. Okay, we'll take a break. We'll meet at what time? No, how many? Half an hour break you want? 20 minutes break you want? You tell me.
PGBP.
And the deductions, yeah. No. I need some break. Half an hour will give. I'll take till maybe 6:30, 7. That is fine. No, okay. We'll meet at what time? 4:45. 4:45. Welcome back, friends. Welcome back, online friends. I hope I'm audible and also the screen is visible.
You are asking dot.
Yeah.
How many dot?
No, one dot name it is ನನಗೆ.
Change day by day.
Oh, hanga. Monday, Tuesday, Wednesday. More than one residential house property if you have, deemed to be let out. How to do it is fine. Okay, patience, friends. Very long break I have given. Almost 45 minutes break I have given in my life. Profits and gains from business or profession. Okay. Now, what do you mean by business? Business includes trade, commerce. Trade, commerce or manufacture, and profession includes vocation. Methods of accounting. There are two methods of accounting. One is called as cash system of accounting, accrual system of accounting. This method is required to be used for finding income under either IFRS or under PGBP. There is something called as income computation and disclosure standard, about which you are going to study in finance. Now, section 28 is a charging section of this chapter, which says what income is taxable under this head. Any profits or gain from business or profession during the previous year. So if you are doing any type of business or profession during the year, that income will go under this head. Any amount received by any person from termination of his office or for modification of terms of his contract, or amount received for not carrying on business or for not sharing technical know-how or patent. Income from services by an association to its own members. Export business. If you are doing export business, what is this? Duty entitled passbook you are receiving for export business, or duty drawback you are receiving, or you are receiving cash compensatory support. Any benefit or perquisites arising from business or profession. Interest, salary, bonus, remuneration. Please note the interest, salary, bonus, remuneration or commission which are paying to partners by a partnership firm, that is also taxable under this particular head. Some received under Keyman insurance policy or fair market value of stock in trade upon conversion of stock in trade into capital asset. Now, set off and carry forward. What is set off and carry forward containing, sir? Normally business is divided into three categories basically. For set off and carry, normally business is normal business, whatever you are doing, but there is one more type of business called as what, sir? Speculation business. One more type of business called as what, sir? Speculation business. Speculation business means buying and selling of shares and securities without taking its actual delivery. Buying and selling of shares and securities without taking its actual delivery. Now, section 29 says, while computing the business income, please see all the sections from section 30 to 43D. Section 30 talks about expenses. From section 30 to 37 talks about the expenses which are allowed while computing business income. They say section 30 talks about rent, rates, taxes, repairs and insurance of building. If you are paying any rent or rates, taxes and repairs and insurance of building, then that is allowed as deduction. Now please note, if the building is owned, then rent, whatever you are paying, not allowed because you don't pay any rent. However, if your building is taken on rent, rates, taxes, insurance, all are allowed as deduction. And expenditure which you are incurring on the building, whether it is revenue expenditure or capital expenditure, that you should see. If it is a capital expenditure, add it to the cost of building, and claim depreciation. Sir, it is not my building at all. Yeah, create an asset called as deemed building. Then insurance and repairs on plant, machinery and furniture is also allowed as deduction. Insurance and repairs. If it is a capital repair, add it to the cost and claim depreciation. Now, section 32 talks about depreciation, one of the most important section under the PGBP's depreciation section, section 32. Depreciation is allowed as deduction. Depreciation is allowed as deduction if two conditions are satisfied. Assessee should be owner of the asset and that asset should be used for business or profession. You should be owner and the asset which is there for which you want to claim depreciation should be used by you for your business or profession. Now, depreciation is allowed from the date when the asset is put to use and not from the date of purchase. From the date when the asset is put to use. Now, classification of assets. Assets are classified into two categories: tangible assets and intangible assets. Tangible assets are building, furniture and plant and machinery. Intangible assets includes patent, copyright, trademark, except goodwill, whatever type of assets are there. Methods of depreciation, there are basically two methods of depreciation: SLM method and WDV method. SLM method is followed only by power people, whereas WDV method is followed by everyone. Every assessees, including they also can follow if they want. Now, SLM method follows a system called as individual asset system, wherein depreciation will be given for each and every asset separately, individually. And WDV method follows a system called as block of asset system. Now, block of asset system means what, sir? You are grouping the assets into a block which has same rate of depreciation and which are falling under same class. Now, for example, same rate and same class. There are how many classes of assets, sir? There are totally 4 classes: building, furniture, plant and machinery and intangible assets. Now, whatever items are having same rate of depreciation and falling under same class will be one. For example, now cars and plant and machinery. Okay, they have the same rate as same rate of depreciation, which is 15%, and they fall under the class plant and machinery. So they will be forming one block. Similarly, books, laptop and computer have the same rate of depreciation and they fall in the class of plant and machinery. They will be one single block. Now, what are the rates of depreciation, sir? If it is a building, normally the rate of depreciation is 10%, and if it is a residential building, 5%, and if it is a temporary structure, 40%. For furniture, including electrical fitting, 10%. Intangible assets, excluding goodwill, 25%. For plant and machinery, for motor vehicle, it is 15%. For shipboat, 20%. Aircraft, 40%. Pollution control equipment, 40%. Computer, 40%, including computer peripherals and computer software. And 40% for windmill, oil wells, 15%. Books and periodicals, 40%. All the types of plant and machinery, 15%. If there is an asset which you are not able to classify anywhere, treat it as plant and machinery and give 15%. Computation of depreciation, you should take opening WDV and assets purchased by you during the year. Now, whatever assets you are purchasing during the year, divide into 3 categories. At least asset purchased by you during the year, used for 182 days or more. Asset purchased by you during the year, used for less than 180 days. Asset purchased by you during the year and not used at all. Now, you'll get some amount. From that, you subtract the sale proceeds of assets sold by you during the year. Whatever sale has been made by you, you'll get WDV for depreciation. From that, you subtract depreciation, you'll get your closing WDV. Now, depreciation will be given on what amount, sir? WDV for depreciation. Meaning, take your opening value plus purchases minus sales will give you WDV for depreciation. That amount should be divided into 3 categories. First, you give it to asset which is not put to use. Meaning, from this total amount, whatever total you are getting, first you should give it to asset which is not put to use. Then you should give it to put to use for less than 180 days, and whatever is left over, that is put to use for 180 days or more. So WDV for depreciation shall be divided into asset not put to use, asset put to use for less than 180 days, asset put to use for 180 days or more. If the asset is not put to use, no depreciation. If it is put to use for less than 180 days, 50% depreciation is given. 50% of whatever rate is there. And if the asset is put to use for 180 days or more, then 100% depreciation will be given. Now, please note, 50% depreciation will be given only if the asset is purchased and put to use for less than 180 days in the same year. If the asset is purchased in this year and put to use for less than 180 days in this year only, then what will I do, sir? 50%. If the asset is purchased in this year and put to use in the next year, whether it is more than 180 days or less than 180 days, 100% depreciation will be given. Now you also get something called as additional depreciation. Sir, when will I get additional depreciation? Additional depreciation will be given when additional depreciation will be given if you are power people or manufacturing businessman. If you are a person who is in the business of manufacturing, if you are a person who is in the business of generation, distribution and transmission of power, or if you are a person who is in the business of manufacturing, then you will get additional depreciation. Meaning, additional depreciation means whatever normal depreciation you are getting, no, on top of that some extra depreciation will be given to you called as additional depreciation. How much it will be given, sir? 20%. 20% additional depreciation will be given. Additional depreciation will be available only if the assessee has opted for WDV method of depreciation. Only if you have taken WDV method of depreciation, you can take this additional depreciation. Additional depreciation is available only for plant and machinery. No additional depreciation for building, furniture, intangible assets. And additional depreciation is not available if, in case of following. In case of used or second-hand plant and machinery, additional depreciation will not be given. If the plant and machinery is a vessel, vehicle, aircraft, not given. If the plant and machinery is used in residential accommodation, if it is used in office premises, or if it is a plant and machinery for which you have already claimed 100% deduction. In such cases, additional depreciation will not be given to you. Now, if you are a person who is opting for 115 BAC, then you will never get additional depreciation. It will never be given to you. Additional depreciation is allowed in the previous year in which plant and machinery is put to use. In the year when plant and machinery is put to use, in that year, additional depreciation will be allowed. If the plant and machinery is put to use for less than 100 days, then 50% will be given this year, meaning 10% will be given in this year and 10% will be given in next year. Capital gain in case of depreciable assets, normally this topic will not be asked in the examination. Anyways, capital gain will be calculated. When will capital gain come, sir? In case of WDV method, capital gain will come if a depreciable assets, the capital gain of depreciable assets will always be short term. And when will capital gain come, sir? Capital gain will come if you don't have assets but have WDV, or if you don't have WDV but you have asset, then you will get capital gain or capital loss. For example, I don't have WDV, I don't have assets, you will get capital gain. I have WDV but no asset, capital gain will come. I have asset but I don't have WDV, capital gain will come. Okay, so normally capital gain which is coming on depreciable assets will always be short term. And capital, for computing capital gain, what is the cost of acquisition? Before sale price, whatever amount is there, no, that is the cost of acquisition. And in case of SLA method of depreciation, if the for SLA method of depreciation, the amount of depreciation will remain same over a period of time. Now, in case of SLA method of depreciation, you see what is the cost of asset. If the asset is sold at a price more than its cost, actual cost, whatever cost is there more than that, if they are selling the asset, then the cost minus sale price, the difference amount will be taken as capital gain. If the asset is sold at a price less than its cost but more than its WDV of the asset, cost of the asset. If the WDV of the asset is this, cost of the asset 80 rupees is WDV, cost is 100 rupees. I sold it for 112. Asset is sold at a price more than cost, that amount will be taken as capital gain. And the difference between the WDV and the cost will be taken as balance charge. It is deemed as business income. If the asset is sold at a price less than its cost but more than WDV, the difference between WDV and sale price will be taken as balancing charge. If the asset is sold at a price less than its WDV, the difference is called as terminal depreciation. Section 43A. What is section 43A? The consequences of change in exchange rate. So whenever you are purchasing an asset from outside India, there may be change in exchange rate. I mean, you have to make the payment in foreign currency. So in such cases, whenever you are making the payment, because of fluctuation in foreign currency, the price of the asset may increase or decrease. So what should I do when the price of the asset is increasing or decreasing? You should increase or decrease the value of your capital asset. In your books, you should increase or decrease the value of your capital asset, either the cost or WDV, whatever is there. So if you are paying more, add it to the cost. If you are paying less, subtract it from the cost. Now, what about amalgamation? What will happen in case of amalgamation? How will I compute capital gain in case of amalgamation?
Frankly,
Now you calculate the depreciation normally whenever there is an amalgamation. For example, there was a company. Now that company A Limited was there, that is now taken over by B Limited. So there will be an asset which will be used by A Limited for some period, and now it will be used by B Limited. So you compute the depreciation normally, ignoring whether that there is amalgamation, merger, demerger. Ignore everything. Just compute the depreciation normally. Now whatever answer you have got, that answer you take. You compute the depreciation normally. Whatever answer you have got, you take that answer, divide between old company and new company in the basis of number of days the asset was used by old company and new company. Now there is this concept called as unabsorbed depreciation. What is unabsorbed depreciation, sir? If the current year business income is not fully adjusted against current year depreciation, then that unadjusted depreciation which is there, if your current year business income is not able to fully take over current year depreciation, then that unadjusted depreciation will be taken as unabsorbed depreciation. This unabsorbed depreciation can be carried forward. This is a loss actually. It can be carried forward for indefinite years, and it can be set off in future years against any type of income. Section 43(1) talks about actual cost. What is the actual cost of assets, sir? Actual cost is cost of purchases. To that cost of purchases, you add some expenses which are directly attributable to asset. What are those? Like installation charges, transportation charges, transit charges, or these are some examples. Okay, duties and taxes if ITC is not claimed, interest on loan till the asset is put to use. Subtract subsidy or grants, subtract sale proceeds for trial rent. Actual cost will be given. Now, if you are incurring any expenses in cash more than 10,000 rupees, that will not be allowed as deduction unless until it is incurred by account paycheck, account by demand draft, or any other electronic clearing system. If you are converting stock in trade into business asset, market value as on date of conversion will be taken as actual cost. Then, if any asset was used by you for personal purpose, now you are putting it to your business use, actual cost will be whatever your cost is there minus notional depreciation. Now, this is only when someone has given you the asset by way of gift or inheritance. Okay. Now, if any asset is purchased by an assessee at a higher price so as to claim higher depreciation, the actual cost will be determined by assessing officer. Where any asset is sold by assessee and is repurchased, then the actual cost will be repurchase price or sale price, whichever is less. Where an asset is purchased by an assessee and if such asset is given on lease to the same person, then WDV of such asset at the time of transfer will be taken as actual cost. Actual cost of building which is used for personal purpose. So if I had any building which I was using for personal purpose, now I am using it for business purpose. Actual cost will be actual cost of business, that building minus notional depreciation from the time I was purchased till the time it was used for business purpose. Now, if the asset is used partly for business purpose, partly for personal purpose, what will I do, sir? Take depreciation also proportionately only for business purpose. Now, section 35 talks about scientific research. Now, scientific research means what, sir? You are incurring some expenditure for research activity for extension of knowledge in the fields of natural or applied science. Now, scientific research can be of two types: in-house scientific research or donation to research association. If it is an in-house scientific research, in-house scientific research means assessee is doing research for his own business, then it is in-house scientific research. Now, the expenditure is incurred before commencement of business or expenditure is incurred after commencement of business. If the expenditure is incurred by you before commencement of business, so after commencement of business, it's simple. If the before commencement of business, after commencement of business means what? For example, I am a person who is making bun. Now, I first started making bun. Now, I am starting, see, bun I made. How I made, sir? However I wanted to make, I made. Now, so before making that bun, I would have done some research and development. I should put atta, I should put ujala, something and all we should put, and that bun will be made, correct? So I made that bun. Blue color bun, I made a blue color. Ujala, you will get blue color only, no? Did you know Ujala was there? Now it is not there. It is there. It is still there, huh? Yeah, but I'm there. No, in our childhood days, our parents used to wash our White shoe, that only. And also that white uniform was there. Targuri, that used to become. Maja is there, no? Yeah. Yeah, so I have incurred expenses. Now, before making the first bun, I would have incurred some expenditure, no? Before starting the business only, I would have bought a machinery for mixing that atta, okay, for making that bun dough, etc. So, have you incurred the expenditure before starting the business or after starting the business? Now, I am already doing the business. I am selling buns. Now, I thought, let me start selling cream bun. Correct? Let me start selling cream bun. So, now what am I doing, sir? I am incurring an expenditure after commencement of business. Bun is already made by me. I am going to put cream and give it to you. So, expenditure is incurred after commencement of business. What type of expenditure I am incurring? Capital expenditure or revenue expenditure? Sir, it is a capital expenditure, sir. 100% deduction is allowed except on land. Sir, it is a revenue expenditure, sir. 100% deduction will be allowed. Whether it is capital expenditure or revenue expenditure, it does not matter. 100% deduction will be allowed. Except on land. Now, if it is an expenditure incurred before commencement of business, then I can go back only 3 years before the commencement of business. If it is an expenditure incurred before commencement of business, then how many years I can go back, sir? 3 years I can go back. If it is a capital expenditure, 100% deduction will be allowed except on land. If it is a revenue expenditure, then for material and salary excluding perquisites, deduction will be allowed, and for any other type of expenditure, no deduction will be allowed. Now, where any deduction under section 35 is allowed for any asset, depreciation on that asset will not be allowed. And if there is any building which is purchased along with land, then market value should be seen. Fair market value of building will be allowed as deduction and land will be ignored. Unabsorbed capital expenditure is treated on par with unabsorbed depreciation, meaning it will be carried forward for indefinite year, etc. Now, if you sell the capital asset for which you have claimed a deduction under section 35, then what will happen, sir? Business income will come. What is business income? Deduction claimed by you or sale price, whichever is less, is your business income. Where sale price is more than the cost, business income will be cost or deduction, and capital gain will be the price above its cost, actual cost. Now, donation to research association or organization. Now, please note, all the donation point can be asked as one single adjustment in your main question. Okay. So, donation to research association or researchers. You are donating money. You are giving money to those people who are doing research. Now, you are giving money to an approved research association, approved institution, approved college or university for doing scientific research, social research or statistical research. 100% deduction will be allowed. Now, you are giving money to an approved Indian company which is engaged in the business of research and development for scientific research. For that also 100% deduction will be allowed. You are giving money to a national laboratory which is undertaking approved scientific research. 100% deduction will be allowed. Now, for donation, deduction will not be allowed under section 35 if you are a person who is opting for 115 BAC. Now, section 35 AD talks about 14 businesses. There are totally 14 businesses, specified businesses. These 14 businesses, if you are any type of assessee starting these 14 businesses, then if you incur any capital expenditure for starting these businesses, 100% of that expenditure is allowed as deduction. Yeah, when I say it is allowed as deduction, that means what, sir? While preparing your profit and loss account, you can claim that expenditure. Now, 100% of capital expenditure will be allowed as deduction except on land, goodwill and financial instruments. Meaning 100% will be allowed except on LG fridge. Now, section 35 AD is an optional section. If a person wants to follow 35 AD, he can follow or it's ignore. New business should be taken over here. Here, what is included, sir? New business. Such business should be not be set up by splitting up or reconstruction of existing business. Then the plant and machinery which you are using should be a new plant and machinery. Plant and machinery used in these businesses should be new plant and machinery, except 20% of total plant and machinery can be old. And if you are importing a plant and machinery from outside India, even if it is a second-hand plant and machinery, it will be treated as new plant and machinery. Then, how much is the deduction? So, this is what they are going to ask. So, deduction will be 100% of expenditure, whatever you are incurring. Now, When have you incurred the expenditure? I have incurred the expenditure after commencement of business. Deduction will be given in the year when business is commenced. I have incurred the expenditure before commencement of business. You should capitalize that expenditure in the books of accounts, and it will be allowed as deduction in the year when you are capitalizing. No double deduction will be given. If you have already claimed deduction under this section, you cannot claim deduction under any other section for the same expenditure. No depreciation will be given if you have claimed deduction over here. Lock-in period is there. The asset for which you are claiming deduction under section 35 AD should not be sold within lock-in period of 8 years. If it is sold, then deemed business income. How much will be deemed business income? Whatever was the deduction given to you minus depreciation. Set off. Now, the loss of specified business can be set off against the profit of specified business. Losses can, which is not set off by you can be carried forward and set off in future years for indefinite period. You will have indefinite period. You can carry forward and set off in future years. Section 36, I think next is 35D. Preliminary expenditure. Preliminary expenditure means the expenditure which is incurred by you before commencement of business. This section is applicable if you are a resident assessee. If you are a resident assessee, then only this section will apply to you. Expenses incurred by you before commencement of business can be allowed, will be allowed to be expenses incurred before commencement of business is preliminary expenses, or expenses incurred by you after commencement of business for starting a new unit or extension of existing unit. This expenditure, preliminary expenditure, will be allowed as deduction in 5 equal installments from the year when business is commenced. Now, amount of deduction is how much, sir? If you are an Indian company, if you are any other resident assessee. If you are an Indian company, amount of the deduction which will be allowed to you will be actual expenditure or 5% of capital expenditure, capital employed, or 5% of cost of project, whichever is higher. That you compare with actual expenditure, take whichever is less. And for all the type of assessees, actual expenses or 5% of cost of project, whichever is less. Now, capital employed is what's a share capital excluding reserves, debentures, and long-term borrowing. Basically, the money which you have invested in the business is capital employed. Then cost of project is what's a amount invested in the fixed assets of the new project as per the books of accounts as on last date of the previous. Now, when I say preliminary expenses, only these expenses are covered over here. FM less, which is preparation of feasibility study report, or MOA, AOA preparation, legal expenses, engineering expenses, market survey expenses for public issue. 35 DDA, expenditure incurred under voluntary retirement scheme. It is applicable for all types of assessees. Expenditure is incurred in connection with voluntary retirement of employees. Expenditure is allowed as reduction in 5 equal installments. Now, 36 is important, section 36(1). Section 36(1). Section 36(1). Insurance premium paid on stocks and stores and health of employees. If you are taking insurance on the stock, for example, Priya Sarees is taking insurance on sarees, I can claim deduction on that insurance premium paid by me. Similarly, if I am taking insurance on health of employees, employees are very important for me. If on health of employees I am taking health insurance for employees, I can claim deduction of that. It is allowed as deduction if it is the premium should not be paid in cash. Now I am paying bonus and commission to my employees. Is it allowed as deduction? Yes, subject to 43B. What is 43B telling? That expenditure should be paid within the due date of filing income tax return. What is the due date of filing income tax return? 31st of July or 31st of October. It should be paid within this date, then only deduction will be allowed. Then interest on loan. Any interest paid on loan taken for business or profession. If the loan is taken from bank, it can be scheduled bank, cooperative bank, public financial institution, state finance corporation, state industrial investment corporation, or NBFC, then deduction will be allowed if it is paid within the due date of filing income tax return. If the interest amount is paid within the due date. If you are taking loan from any other person, deduction will always be allowed whether it is paid or not. Discount on zero coupon bonds. Amortized over the useful life for zero coupon bonds on pro rata basis. Meaning whatever discount is there, meaning bond value is 1 lakh, I issued at 80,000. So discount is 20,000 rupees. That discount should be amortized over the useful life of bond. employer का contribution to employee का welfare fund. So if employer is contributing to recognized provident fund, approved superannuation fund, approved gratuity fund, statutory provident fund, or any other approved welfare funds, then deduction will be allowed subject to 43B, meaning that expenditure should be paid. If you are contributing to pension scheme of ETCCD, actual contribution or 14% of salary will be allowed as deduction. Now this was the amendment which we saw in the amendment class also. Okay, now employee ka contribution to welfare fund. Employee ka contribution should first be treated as income. It should be added to your business income, and then deduction be allowed only if it is paid within the due date of that respective act. Security transaction tax and commodity transaction tax will be allowed as deduction if you are in trading business. If you are purchasing any animal, then deduction will not be allowed. However, deduction will be allowed when the animal becomes dead or permanently useless. Deduction will be cost minus scrap value. Now, family pension only for Indian, not family pension, family planning expenditure incurred by you. Only for Indian company, this deduction will be allowed. Revenue expenditure, 100% deduction is allowed whenever you are incurring. Capital expenditure allowed in 5 installments. Bad debts is allowed as deduction. Bad debts, if it is related to your business, then only it is. I have given money to someone and I am incurring bad debts. Is it allowed as deduction? Answer is no. If it is loan related, not allowed as deduction. Provision for bad debts is never allowed as deduction. Condition for deduction. Debt should be treated as bad. Debt should be treated as income before treating it as bad, and the debt should be written off in the books of account. Recovery of bad debts is taxable as business income in the year when it is recovered. Then we have this explanation part. Section 37 talks about general deductions. This section allows deduction of all other types of business expenditure, provided condition is that expenses should not be covered under 30 to 36. Expenses should be wholly and exclusively for business purpose. Expenses should not be personal, not be capital, and it should not be an offense prohibited by law. Now, penalty for breach of law, not allowed. Breach of contract is allowed. Then life insurance is never allowed as deduction. Advertisement expenses is allowed as deduction, except where you put an advertisement in the newspaper of political party. CSR spend is not allowed as deduction. Corporate social responsibility spend not allowed as deduction. Direct taxes allowed as deduction. Indirect taxes is never allowed as deduction. Indirect taxes is allowed as deduction subject to 43B, meaning you should pay those expenditure. Now 43B talks about what, sir? Some expenses which are allowed as deduction only if those expenses are paid within the due date of filing income tax return. Which are these expenses? Flood bonus, meaning you are paying any fees. What fees, sir? F for is what? Fund. Contribution to fund. Statutory provident fund, recognized provident fund. L for leave salary you are paying. I for you are paying interest to scheduled bank, public financial institutions. R for you are paying money to any Indian Railway. T for tax duty cess you are paying, and bonus or commission you are paying. This will be allowed as deduction only if it is actually paid. Now above will be allowed as deduction. Sir, what if it is paid after the due date? If it is paid after the due date, it will be allowed as deduction in the year. If it is paid after the due date, it will be allowed as deduction in the year when payment is made. If the interest is converted into loan or debenture, then it is not treated as actual payment. If any interest is converted into loan, is it payment, sir? No. Interest shall be allowed as deduction as and when such installment is paid. Now, with respect to payment made to MSME, here only micro and small enterprises are covered. A new point has been added. As per section 43B, any amount payable for an expenses to micro or small enterprises, if it is paid within the number of days agreed, which should not be more than 45 days. If that no agreement is there, you should pay it within 15 days. If you don't make the payment within that time, that expenses will not be allowed as deduction. That will be allowed whenever you make the payment. Section 40, expenses which are specifically disallowed. These 2 points are important. If you are paying interest, technical fees or royalty outside India, or to a non-resident or a foreign company in India, on which you have not deducted TDS or after deducting TDS that is not paid to the government within the due date of 130. You have not deducted TDS in the previous year, or you have deducted but not paid the TDS amount within the due date. In such cases, that expenses will be disallowed 100%. If you are making any payment to a resident person for which TDS is not deducted by you, or after deducting TDS you have not paid the TDS, then 30% of that expenditure will be disallowed. Now, however, subsequently, sir, it will be disallowed in this year, but what if I pay it in the next year, sir? It will be allowed in the year when you are making the payment. Then, if you are paying any income tax surcharges, not allowed as deduction. Wealth tax, not allowed as deduction. Please note, 40 talks about expenses which are specifically not allowed. Then, if you are making a payment of salary outside India or to a non-resident person in India, if you have not deducted TDS in the previous year, or after deducting it is not paid within the TDS due date, then that expenditure will never be allowed as deduction. Even if you pay in future, it will not be allowed as deduction. Then, see, if you make any contribution to welfare fund, if TDS arrangement is not made, that deduction will not be given. And tax on non-monetary perquisites, if it is paid by employer on behalf of employee, not allowed as deduction. Now, 40A, 40B. 40A2, important section, they will normally ask this item. 40A2 is what? You are making any unreasonable or excess payment to your related person. Whatever excess payment you have made is disallowed. Who is a related person? For individuals, spouse, father, mother, brother, sister, linear incident, linear resident. And for HUF, members of HUF and their relative. For firm, partners and their relative. And for company, directors and their relative. Holding company, it is subsidiary company. Any person having substantial interest in the concern will also be treated as related person. Substantial interest means 20% or more voting rights. 40A3. 40A3 talks about what? 40A3 talks about payment in excess of 10,000 rupees. Payment made in excess of 10,000 rupees for single expenditure in a single day to a single person by any mode other than account pay check, account pay demand draft, or any other electronic clearing system, then such expenses will be fully disallowed. Okay. Now, please note this limit is 35,000 if you are making the payment to a transporter. Now, cash, bearer, check, cross check is not allowed as deduction. 40A7 says if you make provision for gratuity, I will not allow it as deduction. 40A9 says if you make contribution to any unrecognized or unapproved fund, deduction will not be allowed. Taxation of firm. Firm taxation, again, important point. Sometimes they may ask you question directly on this firm taxation. Taxation of firm, section 40A, 40B. Remuneration and interest paid to partners of partnership firm. Remuneration means what, sir? Salary, bonus, commission, or any other amount paid to them. Interest means interest on loan or interest on capital. Remuneration and interest is allowed as deduction only if it is authorized by partnership deed. Remuneration and interest is allowed as deduction, is allowed prospectively and not retrospectively. Okay, remuneration and interest. Remuneration paid to working partner is allowed, to sleeping partner is not allowed. Interest paid to working partner is allowed, paid to sleeping partner is also allowed, because interest is on money, remuneration is for work. How much is the maximum interest allowed as deduction, sir? It is 12% per annum. 12% per annum for each partner. So whatever interest is given in the deed, or 12%, whichever is less, will be allowed. How much remuneration will be allowed, sir? Remuneration allowed as per 40B will be, remuneration under section 40B depends on the book profit of the firm. How much is the book profit of the firm? The book profit of the firm is up to 6 lakhs of book profit. Whatever book profit, uska 90%, book profit 90%, or 3 lakh rupees, whichever is higher. And for excess amount, balance book profit into 60%. So you add both of this, whatever total you get is the total remuneration which can be paid by you. What is book profit? Book profit is net profit of the firm before remuneration. So you find the net profit of the firm before remuneration and interest. First you find the net profit before remuneration and interest by applying the income tax law, all the provisions which we have studied. Subtract the interest as per 40B. Whatever you get is book profit. Now income of the firm and partners. Whatever firm earns income, whatever profit is earned by the firm, firm has to pay tax at a flat rate of 30%. And taxability of income earned by partners from the firm. Now, whatever share in profit the partner is getting, now partner will get money from the firm. Whatever share in profit they get, that is exempt under 10(2)(a). Partner will get remuneration and interest. Now the remuneration and interest which partner are getting, whether it is within the limit or more than the limit. If the remuneration and interest is within the limit of 40p, it is allowed as deduction for the firm and taxable in the hands of partners as business income. If the amount of remuneration and interest is more than the limit, then up to the limit of 40b is allowed as deduction for the firm, and that amount what is allowed for the firm is taxable in the hands of partners. And for whatever more than that limit is there, that will be disallowed for the firm and not taxable in the hands of partners. 41 talks about deemed business income, remission or cessation of trading liability, meaning if any trading liability which you had to pay, now the person whom you are supposed to pay the money says I don't want the money. So that is business income. Balancing charge in case of SLM method of depreciation. Sale of scientific research asset, recovery of bad debts. They are all deemed business income. Or if there is any brought forward losses of a defunct closed business, and if you recover some money today, then that will be deemed business income. There are two methods of finding, solving PGBP question. One is called as direct method, another one is indirect method. Direct method, what you do, sir? Direct method, what you do? You take the income, subtract expenses, that will be the business income. Indirect method, what you do? You take the net profit as per whatever is given in the question. Subtract whatever is allowed, add whatever is not allowed. Subtract the income which are taxable under other heads. Then add back expenses related to that other incomes. Add expenses debited to profit and loss account but not allowed. Subtract expenses not debited but allowed. Add business income which is not credited to profit and loss account will give you business income. This you will see from your mock test paper questions. Presumptive taxation. Income under presumptive taxation. Now, presumptive taxation, section 44 AD. Section 44 AD is applicable for a businessman or a non-specified profession. Who is a non-specified profession? Those who are not specified profession. Yeah, but who is specified professions? I lift come, accountant, etc. Now, if you section 44 AD is applicable if you are a businessman, if you are a resident individual, HUF or a firm excluding LLP. If you are a resident individual, resident HUF, resident firm excluding LLP, and you are doing any type of business except agency business, commission business or 44 AD or 44 AE business, and if your total turnover is more than, up to 2 crores. If your total turnover is up to 2 crores, in such cases, what can you do, sir? You can take your business income to be turnover ka 8% or turnover ka 6%. So if the sale proceeds of the previous year is realized or received through account pay check, account pay demand draft or any other electronic clearing system within one due date. Please note, normally I should take what, sir? Turnover ka 8%. But I can take 6% if the money, whatever sales I have made, that sales ka money I should receive, that money is received by account pay check, account pay demand draft or any other electronic clearing system. Now, for those people who are opting for this, what is that, sir? Presumptive taxation. For those people who are opting for presumptive taxation, no deduction will be given under section 30 to 37. 40B ka benefit also will not be allowed in case you are a firm. And if you have a higher income, then you can declare if you want. Meaning more than 8%, 6%, if I want to declare, definitely you can declare. If the assessee wants to declare a lower income than the rate prescribed under section 44 AD, then he can do so subject to the following conditions. What are the conditions? He will have to maintain books of accounts and get it audited. Normally, you should declare 8% or 6%. If you want to declare less than that, get your books audited by a chartered accountant. Then against this income, you can claim deduction under chapter 6, and brought forward losses can also be adjusted. And you have a lock-in period. What is the lock-in period? For a period, if you are opting for 44 AD for 1 year, for next 5 years, you should opt for 44 AD only. But if you come out of 44 AD, for the next 5 years, you cannot opt for 44 AD. And please note, this limit will be 3 crores. The limit will be 3 crores if the total receipts, if the total cash receipts, is less than, if the total cash receipts is less than 5% of total receipts, or total cash payments is less than 5% of total payments, then the limit will be 3 crores instead of 2 crores. Section 44 ADA, presumptive taxation for specified professionals. Who are specified professionals? I, lift, come. Accountant, chartered accountant, cost accountant, architect, interior designer, legal professionals, then IT professional, film artist, technical professional, company secretary, medical professional, and E for engineers. Now, if you are a resident individual and a resident firm, then only you are included over here. And you are doing any type of this specified profession, and your gross income is up to 50 lakh rupees, and your income is up to how much, sir? 50 lakh rupees. Then you can select for this. Then your business income will be gross receipts into 50%. Note, no deduction under section 30 to 37 will be given to you. 40B benefit is not allowed in case of firm. And higher income, if I want to disclose, can I disclose, sir? Yes, you can declare the higher income. If the assessee wants to disclose a lower income than the rate prescribed under 44 AD, then can he do so, sir? Yes. But for that, he will have to maintain books of accounts and get it audited. Yeah, basically, these points are same. Deduction under chapter 60 can be taken, brought for losses can be adjusted. 44A, important. 44A, presumptive taxation for goods carriage businessmen or transporter. So if you are a person who is in the business of paying, hiring, leasing, renting of goods carriage, and if you have up to 10 goods carriage at any time during the previous year, then this section will be applicable to you. Now I will check what type of goods carriage it is, heavy goods vehicle or normal vehicles. If it is heavy goods vehicle, what is a heavy goods vehicle? That vehicle which can carry more than 12,000 kg, gross vehicle weight is more than 12,000 kgs or more than 12 tons. For that, the business income will be 1,000 rupees per ton, per vehicle, per month or part thereof. And for other vehicles, I will take 7,500 per month, per vehicle, per month or part thereof. Now, month should be considered from the date of purchase of the vehicle and not from the date of put to use. This is all about this chapter, business income. Now, maintenance of books of accounts is not relevant, but yeah, auditing of your books of accounts. Now, books of accounts, if you are a businessman and if your turnover of gross receipt is more than 1 crore, your books of accounts should be audited by chartered accountant. Limit will be 10 crores if the total cash receipts and total cash payments is less than 5% of total receipts and payment. For professionals, the gross receipts should be up to 50 lakhs, and limit will be 75 lakhs if the receipts is total cash receipts and cash payments is less than 5%. And person covered under presumptive taxation if he wants to declare lower income. Penalty, if no audit is done, penalty of 0.5% of turnover of 1.5 lakhs, whichever is less, is required to be paid by you. Now, for maintenance of books of accounts, for specified professional, the limit is 1.5 lakhs, and for businessmen, it is 1.2 lakhs, or turnover limit is 10 lakhs. Clubbing of income. ಬನ್ನಿ ಅವ್ರ ಕೆಳಗಡೆ ಒಂದು ಕ್ವಶನ್ ಇಸ್ ಓನ್ಲಿ ಸೋ ಬಿಗ್. ಯಾವ ಚಾಪ್ಟರ್ ಅಂತ ಕೇಳ್ತಿದ್ದೆ ನಾನು. Hey, this question is big, Gube. Next attempt, you see, not even 1 page question it is. See, they have asked you to compute depreciation. Gube question. Anyways, from the following particulars of Sri Kote, for the year ended 31st March 2005, calculate his taxable income for the business. Opening stock purchases, salary is given, legal expenses, bad debts, rent, interest on loan, depreciation, income tax paid is not allowed as deduction. Custom duty is allowed as deduction. Outstanding custom duty. Yeah, outstanding means if it is paid, then only it is allowed as deduction. Advertisement expenses, legal expenses, contribution to unrecognized provident fund. You directly see, you can tell here only. See, depreciation, you should remove this and take as per income tax law. Income tax never allowed as deduction. Then outstanding custom duty is not allowed as deduction. Advertisement, legal, contribution to unrecognized fund is not allowed. Traveling expenses, general net profit. Gift received, okay. Import license, okay. And closing stock, sale proceeds, okay. In computing the income, the following facts: interest on loan is paid to brother of Sri Kote for loan taken for payment of advance income tax, not allowed as deduction. Now why? See, whatever amount is related to income tax is never allowed as deduction. Okay, so this is not allowed. During the previous year 2021, assessee had claimed 45,000 bad debts, out of which 35,000 was allowed. During the previous year, he received 25,000. How much will be taxable now? Now please note, that day I claimed 45,000, income tax officer allowed only 35,000. So can I say I would have paid tax on 10,000 rupees? I would have paid taxes on 10,000 rupees. Today I have recovered 25,000. On what I should pay the taxes? Because I have already paid the taxes on 10,000, I will pay only on 15,000 rupees. So recovery of bad debts, how much will be taxable, sir? 15,000 rupees will be taxable. Okay, this is an extra. This is a bad debts amount. This is recovery of bad debts deemed business income 15,000. Contribution to unrecognized provident fund was made within the time limit. I don't care. Not allowed as deduction. Legal expenses include 2,000 paid for preparation of income tax return. Not allowed as deduction. So from this 2,000 rupees you will add back. Stock is undervalued by 10%. Now please note this point which they give. No, that is one kind of mistake which normally student will get. We'll see that point later. Gift received was for supplier for achieving the sale target. It is okay, taxable. Outstanding custom duty was paid on 31st December. So not allowed as deduction. During the previous year, he comes to know that his former employer had embezzled cash of 5,000 rupees which was not accounted for. Meaning someone has stole the money. Loss, business loss. Someone has stole the money. He has stole 5,000 rupees. Business loss. So what will happen, sir? It was not accounted for. What will happen, sir? That loss you can claim it now. Traveling expenses include 50,000 rupees being cost to Singapore by an employee for 10 days. Only 8 days were for business purpose. 2 days maja panna. 2 days has been allowed as holiday of employee. So because only 8 days was business purpose, only 8 days will be allowed. 2 days. So 50,000 into 2 by 10, which is 10,000 rupees will be disallowed. Rent includes expenditure for on extension of, what is this? Shed in rented building. Extension of shed, can I say this is capital expenditure? So what should I do, sir? Claim depreciation. However, such extension is completed on 1/5/2025 and total cost is 50,000 rupees. Gotcha. So from this rent, whatever rent is there, rent includes expenditure on extension of shed. Okay, expenditure amount is how much? 26,000. So from rent I should subtract 26,000. I can claim only 24,000 rent. General expenses, so big question now. General expenses include 1,200 rupees paid to domestic servant. No, not allowed as deduction. Why? Personal expenses. A domestic servant means Charan, you are made compensation of 2,000 rupees paid for retrenchment of employment. Retrenchment compensation. Oh, okay. Now we'll see. What I'll do is I'll see if I can do something in life. No, solving and all this. How if you start solving, then 2 years you'll lose this one. Just imagine what will we do in exams. 2 years ille madre. Exam alli maja ಮಾಡಿ ಅಷ್ಟೇ.
ಹೌಸ್ ಪ್ರಾಪರ್ಟಿ ಸ್ಕಿಪ್ ಮಾಡೋಣ ಅಂತ ಕೇಳಿದ.
Hey, beta, हमको. Hey, you should not skip this topic at all. View. Yeah. Right side. Yes, sir. ಬರ್ತೀವಿ ತಿನ್ನಕ್ಕೆ. ಇಲ್ಲಿ ವೆಜ್ 3 ದಿನ ಆದ್ಮೇಲೆ ಬೇಗೂರು ಊಟ ಇರುತ್ತಲ್ಲ, ಅದು ಮದುವೆ ಆದ್ಮೇಲೆ. ಅವನು ವೆಜಿಟೇರಿಯನಾ? ಓಕೆ. ಓಕೆ, ಹಿಂಗೆ ಪಾರ್. ಇದು 2 ಸ್ಕ್ರೀನ್ ಕಾಣಿಸ್ತಿದೆಯಾ ನಿಮ್ಗೆ? ವಿಚ್ ಒನ್?
On the left corner.
ಓಕೆ, ಏನೋ ಮಾಡ್ತಿದ್ದೀನಿ ನಾನು ಬೇರೆ. ಓಕೆ, ಯು ಶುಡ್ ಟೇಕ್ ದಟ್. ಈ ಕಡೆ ಬರೆಯಕ್ಕೆ ಆಗ್ತಿಲ್ಲ. ಓಕೆ, ಎನಿವೇಸ್, ವಿ ಆರ್ ನಾಟ್ ಏಬಲ್ ಟು ಸಿ ದಿಸ್ ಫಿಗರ್ಸ್. Now you are able to see what you are able to see. Little bit also you are not able to see. Online students, are you able to see something? Because one side I opened question.
So question will open so you should answer.
Online students ಏನು ಮಾಡೋಣ? Sir, it is blur ante. Anyway, now net profit they have taken 2,58,000 is given over here. This you ignore. This is just question for my reference. You see the answer, okay? 2,58,000 net profit they have given. Okay, sir. Now in our question, no, one point was income tax paid. Income tax paid. One was the point income tax paid. Correct. Income tax paid is there. One point. See over here, income tax paid. It is not allowed. And outstanding, this is also not allowed. We have directly subtracted these amounts. Correct. They should add it back. So income tax paid, they have added 25,000. They have added outstanding amount. Contribution to unrecognized provident fund. Then interest on loan because it is paid for payment of income tax. Expenditure for extension of building. Yeah, have we discussed this? Yes. And amount paid to servant. These are all personal expenditure. Add back. Add income taxable but not taxed. This is this deemed business income recovery of bad debts. 15,000 only we also got now. 15,000 only we got. Hey, till here our answer is correct now. Till here our answers are correct. Now employee stole the money, subtracted that expenditure because it is a loss for you. You subtract it. Then adjustment in the stock. Now undervaluation or overvaluation. So only this one, I think one entry I told, this entry will make a mistake in examination. Undervaluation and overvaluation of stock. Okay, all the other points are something which we have covered only. Now can I say depreciation also I'll allow because they have not given depreciation as per income tax law. Right. Because they have not given, it is as good as that it is a depreciation of as per income tax law itself. Now here adjustments are more, but there is no adjustment at all. See, only this point is there which is different over here. When I say my closing stock is 2 lakh rupees, my closing stock is undervalued by 10%. What does this mean? How much should be my actual closing stock? What should be my actual closing stock? Now 2 lakh divided by how much, sir?
90%.
Now this is undervalued by 10%. So it should be 100%, but I have taken 10% less. So it is how much, sir? 90%. So can I say if I divide this by 90%, I'll get 100% value, which is how much? 2 lakh 22,222. So this amount should be added back to the profit because closing stock is going to increase the profit. Then similarly, 1,20,000 is also recorded as on at 90% only. Please note why I am telling you this is people will take 2 lakh into 10%, 1,20,000 into 10%. So this one point, which is how much? Whatever amount is coming. That is right answer actually. You should make that adjustment. Add closing stock less opening stock. Huh?
For exchange, adjustments, this one they have given us.
But nothing is there. I mean, they have just given everything, but those all are allowed. How to make you skip a topic? They engaged in manufacturing of chemical. Please note, they will not tell you I am a gube. You should only understand that he is a gube. Sir, gotagilla sir. When they say I am a manufacturer, additional depreciation will come. Okay. Furnishes the following particular in the Kolkata manufacturing unit. Opening WDV they have given. Depreciation for last year they have given. WDV of plant and machinery including additional depreciation for the last year. Now this amount is after depreciation or before depreciation. WDV of plant and machinery as on 31st of March 2024. So I am assuming it to be what, sir? This is before depreciation. So net amount after depreciation will be 25,25,000. New plant and machinery purchased. New plant and machinery purchased. This is more than. This is less than. Computer purchased. Okay, 4 lakh rupees. So this will be taxable at 40%. This will be taxable at 15%. 2 blocks should be created. Okay. Yeah? All assets were purchased by account pay checks. Okay, assets were put to use immediately. New plant and machinery purchased on this date and computer was installed at office. So can I say on this and this, no additional depreciation? During the year 31st March, a new plant and machinery had been purchased. During the year ended 31st March, a new plant and machinery was purchased on 25th of October 23 for 10 lakhs. Additional depreciation besides normal depreciation has been claimed thereon. So how much additional depreciation he would have claimed on that? 20%. But because it was put to use for less than 9 days, in that year he would have claimed only 10%. So balance 10% I will claim now, meaning 1 lakh rupees I will claim this year. The depreciation rate for plant and machinery is 15%, and I know that. The assessee has no brought forward losses. Okay. Compute the depreciation. Very easy question. Again, easy, no. Opening WDV less last year depreciation. So what is my opening balance? 25 lakhs 20,000. No opening WDV for block number 2. Assets purchased by me during the year. Correct. I'll take assets purchased by me during the year, and computer was purchased by me during the year. There is no information about assets sold by me during the year. I am getting WDV for depreciation. WDV for depreciation is how much? 43.25 and 4 lakhs. This is clear. Huh? Now, have they provided that whether he is shifting? Okay, they have told you find under both the methods. Under both the methods, if you are a person who is opting out of default regime, then can I say only normal depreciation on this? On this, how much you will apply? No, 15% Allah. Here you should take only half of 15%, 7.5%. For this you will take 15%. Tell me fast what is the answer? 35.25 into 15%. Whatever answer you have got, 8 lakh into 7.5%. 60,000. Huh? What is the answer? Under default regime, what is the answer? 8 point? 5.8875 you are getting 5.9 they have taken, which is correct, I think. So for what is that? 4 lakh rupees, whatever you have purchased. No, one more thing. Computer ka depreciation is 40% of 4. 1.6. Yeah, less than 8 days. So 80,000. 80,000 is the depreciation. And can I say the depreciation will be same plus additional depreciation you will add for? You will add additional depreciation. Evlo additional depreciation you get. So normal depreciation is 5.29. Add current year 10 lakhs ka 20%, 2 lakhs. And last year ka 1 lakh rupees is required to be added. So 3 lakh is the additional depreciation. Total additional depreciation which you are going to claim is 8.89 lakhs. Next question. Okay, go back question there. Import limited. See, this is how easy question. One, they have compensating. One paper was very big question. Now they have just given 2-line question. Important limited is power generating unit. On 1/4/22, it purchased a plant and machinery for 50 lakhs, eligible for depreciation at 15% SLM method. Compute the balancing charge, terminal depreciation. Now first you find the WDV during this year. So what is the opening WDV? 50 lakhs, 21/22, 1 year, which is 5 lakhs. Yeah, that only I am telling. And for 22/23 also, so 35 lakhs is the value of this plant and machinery. Correct? No, 35 lakhs. Yes. Can I say this is the WDV of this plant and machinery? Yes. I sold it for less than WDV. So 7.5 lakhs minus 35 lakhs will give me 22.5 lakhs ka loss. Can I say this is? If the SLM method ka asset is sold at a price less than WDV, then it is called as terminal depreciation. It is sold for 30 lakhs. Then also 5 lakhs is the loss. Terminal depreciation. 45 lakhs. 10 lakhs gain is there. What is this called as? Tell me fast. Balancing charge. Balancing charge. And if it is sold for 55 lakhs, can I say 2 arrow marks? Balancing charge is 15 lakhs is balancing charge. And 5 lakhs is capital gain.
So 27.5 plus 27.5.
Yeah, that is what I wrote. No, I know that 2 is looking like 7. See, this is 7. You don't understand. 27.5, then 5 lakhs terminal depreciation, 10 lakhs. Whatever I have written is correct. No.
Yes.
Yeah, I'll write. Hey, this is again time pass depreciation question. Admissible depreciation or capital gain or loss. Return on value of building A and B is 2,50,000. Cost of building C purchase is 3 lakhs. If all buildings are sold for 6 lakh rupees, then you will get a gain of
Minus
50,000 rupees. Is short-term capital gain. If A and B are sold for 5 lakh rupees, then nothing is there. 50,000 pay depreciation you will get.
for C we can
Yeah, whatever asset it is, you can claim depreciation for
50,000.
10% into 50%. 2,500 rupees is the depreciation. And if only A is sold for 50,000, no problem, you will get depreciation. Law attend here only, okay? February you will propose another one. New dot dot will come in my next class. Person is saved, yeah. Clubbing. There is one movie of that hero now, Vijay Sethupathi, Double Trouble. ఆతు వాకులా రెండు కా రెండు కా Nayanthara and Samantha, both heroines are good. Maja for Vijay Sethupathi are telling. Now please note, clubbing of income time pass chapter, very easy chapter. I mean, there will be no separate question on this. They will include. Separate question will not be asked on clubbing. Okay, they may include in other sources. Clubbing, section 60 talks about transfer of income without transfer of asset. So if you transfer an income without transferring the asset itself, the income whichever, why am I teaching from this? This is better. Yeah, you remember Gopal begging somewhere on the roadside? I gave FD interest to him. So that FD interest will be taxable in my hands. Revocable transfer. I am giving an asset to my, let us say I am giving an asset to Praveen, and Praveen is giving it to politician for farmers. I have transferred the asset. I have sold the asset, directly transferred the asset, which a condition that I will take it back from you. Revocable transfer. Whatever income is earned by Praveen will be clubbed in my hands. Exception, irrevocable transfer and transfer with a condition that it will be revocable on a future date. Then next point, reading is better. Section, if you are transferring anything to spouse or son's wife, if an individual transfers any asset to his or her spouse without consideration or for inadequate consideration, then the income from such asset shall be clubbed in the hands of transfer. Now, what are the conditions? Marriage should be there at the time of transfer of asset as well as at the time of receipt of income. And above is not applicable in case of divorce or in case of agreement to live apart. And if any amount has been given to spouse, and if the same amount is invested by the spouse in his or her business, then the clubbing provisions will be applicable if the amount is included in the capital as on 1st April of the previous year. If you remember, we discussed that if I take money from my wife to do business, if that money is included in the opening capital, then only whatever amount of profit I have earned will be shared to my wife. Then income from a concern where assessee is having substantial interest. So where any salary, remuneration or commission is paid by a concern where I am having substantial interest. So that concern is paying salary, interest, remuneration to whom, sir? My wife. Now in such cases, for example, there was Dharma production where Akshay Kumar has substantial interest, meaning substantial interest is more than 20% voting rights, profit sharing ratio or equity shareholding. Now this Dharma production is paying salary, remuneration, commission to Twinkle, which she does not have any technical or professional qualification. Therefore, whatever income she is receiving will be clubbed in the hands of Akshay Kumar. But if she has professional technical qualification, no clubbing shall apply. Now, if the Dharma production is paying, if Akshay Kumar as well as wife of Akshay Kumar both have substantial interest, if Dharma production is paying salary, remuneration to both of them, then will clubbing apply? Answer is yes, in the hands of that assessee whose income is higher before clubbing this income. Sir, if both of their income is equal or they don't have any other income at all, then no clubbing provision shall apply. Then clubbing of minor child. Minor's income will be clubbed in the hands of parent, whoever is having higher income before clubbing this income. And once the clubbing is done in the hands of any parent, for all future years, the clubbing will be done in the hands of same parent. And if the minor is earning income by skill, talent, manual work, or if he is a 80U disabled minor child, clubbing will not apply at all. And the parent in whose hands the minor child income is clubbed, that parent will get an exemption under section 1032, which is how much, sir? 1,500 per annum per minor child. Minor child includes minor married daughter and minor married son. Minor child includes own child, stepchild, and legally adopted child. And divorce of parent, clubbing will happen in the hands of that parent who is maintaining the child. That is all about this clubbing provision. Then we have set off and carry forward. Set off means what? Adjustment of losses against income. Now we have intra-head set off, inter-head set off. Intra-head means solving your own host problem. Inter-head means solving other people's problem. Carry forward and set off means whatever losses is not set off in the current year, I am going to take it for future end and adjust in that year. Now, intra-head set off, one by one I will discuss very fast. Salary, can I have a loss under salary? So setting off one salary ka loss with another salary ka income is not there. Not possible. Why? Its loss only is not there. House property, can I have a loss of one house property and income for another house property? Can I set off it? Yes. Then business income, normal business loss can be set off with any business income. Speculation only with speculation, specified only with specified. Capital gain, long term can set off short term as well as long term, but short term capital loss can be set off with long term and short term. Long term capital loss can be set off only with long term capital gain. Then income from other sources, exempt income ka loss can be set off only with exempt. No, it cannot be set off only. What is it? Yeah. Casual income ka loss cannot be set off at all, including casual incomes. Loss from owing and maintaining can be set off only with owing and maintaining, and any other loss of house property can be set off with any other taxable income of other sources. Inter-head set off. Can salary adjust other people's losses? Yes, except business loss. Can house property adjust other people's losses? Yes. House property loss, can it be adjusted with others? Yes. Maximum 2 lakhs. Can business adjust other people's losses? Yes. Can business loss be adjusted by others? Yes, except salary. However, speculation and specified can be done only with speculation and specified. From capital gain losses under head capital gain. Capital gain loss, can it be adjusted with other people? No, never. But other people losses, can it be adjusted with capital gain? Yes. Other sources ka loss, any head ka loss can be adjusted with other sources, but other sources ka loss can also be adjusted if you have any. But exempt loss and casual loss can never be adjusted. And normally unadjusted losses of a current year will be taken to next year, but you cannot take other sources ka unadjusted loss to future years unless until it is loss from owing and maintaining resource. Now, if the current year loss is not able to fully be adjusted, you will carry forward the loss of future years. Now, in future years, you are going to adjust them, correct? Whenever you are carry forwarding any loss, in future year, it can be adjusted only with other taxable. No. If there is any loss in the current year, okay, and you take it to future year, can you adjust that loss in future year? Yes, under same head of income. Okay, so house property loss can be carried forwarded for 8 number of years, and in future you can adjust with house property income only, and you don't have to file loss return for carry forwarding this loss. Business loss, normal business loss can be carried forwarded for 8 years, and if you want to carry forward the loss, you should file a loss return. And what is this? It can be adjusted with any type of business income. It can be adjusted with any type of business income. Then speculation loss can be set off only with speculation income. It can be carried forward for 4 years, and filing of loss return is mandatory. 35 AD business ka loss can be carried forward for indefinite period and be adjusted only with specified business ka income, and loss return is mandatory to carry forward the loss. Then long-term capital loss can be carried forward for 8 years and adjusted only with long-term capital gain, and filing of loss return is mandatory. Short-term capital losses can be carried forward for 8 years and can be adjusted with short-term or long-term capital gain carried forward for 8 years. Loss from owning and maintaining resource can be adjusted with owning and maintaining resource income, and can be adjusted, can be carried forward for 4 years, and loss return is also mandatory. Unabsorbed depreciation can be carried forward for indefinite period and adjusted under any income except salary. No need to file loss return. Order of set off is what, sir? First solve your own home problem, then go for other people's problem. Then business loss, first you do the current year adjustment, then do the brought forward loss adjustment. You cannot set off any losses against undisclosed income. Next is deductions, but before deductions, hey, 2 more chapters are left out. Now, compute the gross income. Income from house property, loss from house property, income from house property. Can I adjust this? Hey, can I solve this? Hello. Hey, there is 3 house properties. One is given 1.5 lakhs, 2 is giving 1.6 lakhs. So 10,000 is my net. Income from other sources 1 lakh. It is taxable. Losses under section 22, which is nothing but losses under the head house property of last year. I will take it in this year. Can I adjust with this 10,000? Yes, sir. So my current year house property income is 0, and I will have to carry forward 20,000 loss. Losses under section 56, brought forward losses can never be. 56 means other sources. Other sources ka losses can never be. It can never be carry forward except owning and maintaining. So what is the current year's income, sir? This income from other sources. Correct, huh?
Carry for 20,000, ignore that one.
Here it is given, no, here only. They have written some notes in life. Okay, in this case, they have not asked any question with respect to that. This is also business chapter question only. PQR are partners sharing profits and losses in the ratio 1:1:2. Provided the following, compute the firm's net income. Net income of the firm is loss of 1,20,000, out of which unadjusted depreciation is 20,000. R retires from the firm and others carry on. Okay, PQR. Others carry on the business. The firm's income for the assessment year 25-26 before adjustment of loss is 1,20,000 before loss and depreciation. Okay. So what they have done is, this is the last year ka loss. Last year ka loss is 1,20,000. Current year ka, last year ka depreciation is how much? 40,000. Current year someone retired and current year ka income is how much? 1,20,000. So against current year ka income, I can subtract last year ka loss, and my answer will anyways become 0. So this unabsorbed depreciation will be carried forward for future years. Oh, this includes 40,000, huh? Out of which unadjusted depreciation is 40,000. Okay. Okay, 1,20,000 rupees. Brought forward losses is 8,000. Losses which cannot be set off is 30,000. Hey, what is this loss? PQR. R means yeah. So 80,000 into 50%. No, wait. What is 30,000? If I say losses cannot be set off, they have given over away 30,000. So I'll take unabsorbed depreciation. Total loss of last year. Unabsorbed depreciation 80,000 rupees. Now share of A in the loss is 40,000. Okay. Share of R in current year loss for the 2 months. 1,20,000 into 1,20,000 rupees into 2 by 12. How much is it? 20,000. Into his share is half. So, okay. That is how they got 30,000. Have you understood this point? See, what they are doing is, last year because one of the partner is retiring, his share in last year loss cannot be adjusted. It cannot be adjusted, so they are just removing that also. So only 50,000 out of 80,000 loss of last year, only 50,000 will be adjusted. Unabsorbed depreciation will be adjusted. Total income is 30,000 rupees. Have you understood this question? I'll repeat once again. Total 1,20,000 is my current year's income. My last year ka loss is 1,20,000, which includes depreciation of 40,000. I'll remove the depreciation. How much is my loss? 80,000 rupees. In this, one of the partner is retiring. His share in the loss is 30,000. That share I am subtracting. Sir, but he has 50% share, no sir. Sir, his profit share ratio is 2/4. Yeah, but he is retiring in middle of the year. So current year ka only some share of profit will be given. So current year ka profit is 1,20,000. This is for full year. So for 1 month, how much is it, sir? Can I say 10,000 rupees? Into 2 months, 20,000 rupees. So they have taken 20,000 rupees is 2 months ka profit, in which his share is how much? 2/4, which is half, 10,000 rupees. So that is how they got this 30,000 rupees. They have taken what, sir? They have taken half of 40,000 plus 10,000. 30,000 rupees is a loss which cannot be subtracted by you. Okay?
So his date of retirement is given in the question.
Yeah, that is given. No, that is given. 40,000 rupees is 40,000 rupees is the law unabsorbed depreciation which I'm what is that? Set offing. Therefore, my balance income is 30,000 rupees. This is easy question. Income from house property, salary, you can adjust this both. How much is your income? Income is 0 and loss to be carried forward will be 50,000. This loss, ignore. Taxable income is 35 lakhs. He has opted for old regime. So 3.5 lakhs is your taxable income. $3.5 lakhs is your taxable income, and losses gross total income is this. Casual income cannot adjust anything. So losses of house property set off with salary income. Okay, what they have done is instead of set, so here what they have done is they are set off. Now, nice. Now please see. What did we do? We set off house property with salary. They did not do that. They have set off other sources with salary because other sources loss cannot be carried forward.
Makes sense.
Therefore, 1.3 lakhs will be carry forwarded, and this 10,000 loss which is there, that will not be carry forwarded. This is your taxable income. Okay? I mean, nice, good question. Yeah, this is same question. This year they have asked same question. Everyone is telling makes sense, as if they are some very good advisor. Makes sense. Makes sense. Okay. I don't know. Whose dialogue is? Oh, antara ಅವರು. ಅಲ್ಲ ಅವ್ರಿಗೆ ರೇಗಿಸ್ತೀನಿ, ಬೇರೆ ಜಾಗದಲ್ಲಿ ರೇಗಿಸಿ. ಏನೇ ಅತ್ತೆ? ಹಾ, ಎಲ್ಲ ಕ್ಲಾಸಲ್ಲಿ ಅದೇ ಕೇಳ್ತಾರೆ ಪಾಪ. ಪೊಟ್ಯಾಟೊ ಫ್ಲೇವರ್ ಲೇಸಾ? ಲೇಸೆ ಪೊಟ್ಯಾಟೊ ಅಲ್ವಾ? Deductions. D for deduction. Okay. Gross total income Now please note, if you want to find total income, what is important for you to do in life? If you want to find total income, what is very important for you to do? Learn deductions. Because from your total income, you subtract deductions, you will get. Go by from gross total income, you subtract deductions, you will get total income. Okay, not okay. Now, deductions can be subtracted from all incomes except what incomes, sir? Long-term capital gain under section 112, 112A, short-term capital gain under 111A, and casual income. Deductions can be claimed, yeah, all the other points is not relevant. Okay, ATC is the first deduction. ATC talks about deductions with respect to LIC premium, deductions with respect to tuition fees, repayment of housing loan, provident fund, etc. It is available only for individual and HF, whether they are resident or not. Maximum deduction allowed is how much, sir? 1,50,000 rupees. Now, LIC premium is paid by you. If you are an individual or an HF, if you are taking the life insurance for self or spouse or children's, and HF is taken for members of HF, they can claim deduction. How much deduction? Whatever premium they are paying or limit, whichever is less is the deduction allowed. What is the limit, sir? For normal cases, if the policy is taken before 1st April 2012, 20% of sum assured. If the policy is taken on or after 1/4/2012, 10% of sum assured. Person with disability. If you are a person with disability, then it is 20% before 1/4/2012. During the year 12-13, it is 10%, and now it is 15% of sum assured. If nothing is given, take what's at 10% or 15%. Now, if you are taking any policy on or after 1/4/2024, or if you are paying any premium on or after 1/4/2024, then the maximum deduction, maximum premium should not exceed 5 lakh rupees in a year. Now, if the policy which you are taking, if the premium is more than 10%, 15% or 5 lakhs, then whatever amount you receive on the maturity is fully taxable. See, normally section 1010D talks about exemption. Amount received at the time of maturity of policy. See, maturity means what, sir? Policy is maturing over. Now the policy holder is still alive. In such cases, what is the premium paid during the term? If the premium paid is more than the limit, whatever amount you receive on maturity is fully taxable. If premium paid is within the limit, amount received on maturity is fully exempt. And amount received by nominee is at the time of death. If you are receiving at the time of death, then it is always exempt. Now, if you are taking public provident fund, contribution by an individual for self, spouse or children's, and for members of HUF to 80 CCD fund, whatever amount you have contributed or 1.5 lakhs, whichever is exempt. Whichever is less is exempt. Exempt in the sense allowed as deduction. Employer contribution to recognized funds, statutory provident fund, recognized provident fund, approved funds is always allowed as deduction. If it is unrecognized fund, never allowed as deduction. Principal repayment of housing loan, including stamp duty, is allowed as deduction. Amount contributed to National Savings Scheme or NABARD bonds, Senior Citizen Savings Schemes, and ELSS, Equity Linked Savings Scheme, Unit Linked Insurance Policy, or pension of any mutual fund company, Sukanya Samriddhi account, or fixed deposit for a period of 5 years or more, allowed as deduction. Tuition fees, maximum for 2 children. Education should be in India, and full-time education, it is allowed as deduction. 80 CCC, pension scheme of any insurance company. If insurance company ka pension scheme you are taking, then will it be allowed as deduction, sir? ATCCD pension scheme for LIC. What is the ATCC pension scheme? If you are an individual, contribution is made to any pension scheme of life insurance corporation or any other insurance combination, maximum deduction allowed. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Yes, sir. That's what I also asked. No. Yeah, it is correct, sir. Yes, thank you, sir. Tomorrow we'll have class from 1 to 6. Morning I have 1 3 hours recording. I'll come here only, but I'll have to take that other class, online class. ATCCC. I have EA, some other subject only. No, recording on but I have to take on them. Or if we'll do it in the morning. Till 1 second.
Okay.
It's better morning than 6.
600 comes.
Before opening.
Hello. Hello. Sir, you do it ulta, sir. Students are telling, sir, you take our class in the morning and then do EA in the afternoon. So you do one thing. Tomorrow is 3rd Saturday. Third Saturday, that means you take from 7:30, sir. No, 8 o'clock you take. 8 to 1 for CA. CMA. And from 1:30 you take that class, sir. 1:30 to 4 o'clock. Thank you.
Thank you, sir.
8 o'clock we have told your timings. No, I should be available first. So 3rd Saturday, I normally drop my daughter to school and come. So I take 9 o'clock. 3rd Saturday means Raja will be there, hopefully. Huh? Otherwise, I'll have to hold my wife's leg, request her. Amma thai. 80 cc C. Yalini 80 cc C. Pension scheme of life insurance corporation or any other insurance corporation. If you are an individual and making contribution to pension scheme, life insurance corporation or any other insurance company, then maximum deduction which you can claim is 1,50,000 per annum. 80 CCD pension scheme. Now 80 CCD pension scheme is national pension scheme or central government pension scheme. You can claim maximum deduction of 1,50,000 rupees. If you are a salaried employee, whatever contribution you are making, that deduction you can claim how much, sir? Your contribution amount or 10% of your salary, whichever is less. For employer ka contribution, first it will be added to your salary and then deduction will be allowed under 80 CCD 2. Deduction will be allowed 10% of salary or 14% of salary or employer contribution, whichever is less. Now, what if I am a non-salaried employee, sir? Amount contributed by you or 20% of gross total income, whichever is less, will be allowed as deduction. One second, I'll just tell. ATCCE says the combined limit for ATC, ATCCC and ATCC D1 is 1,50,000 rupees per annum, and total deduction will be 1,50,000, all the three combined together. Next, 80D. 80D is important, 80C is important, 80D is important. Medical insurance or health insurance premium is paid by you. Please note this, only first sections are important. 80C, D, E, U, G, TTA. No, JJ, not that. 80D, medical insurance or health insurance premium you are paying. If it is paid by any mode other than cash, then only allowed as deduction. Central government health scheme you are investing money, or you are taking any preventive health checkup or medical treatment you are doing. If you are an individual, who can do, sir? For individual can do it for himself, spouse or children's, HO for members of HO. How much is the limit? Now here limit is separately given for individual, spouse and children as well as parents. For individual, spouse and children, the limit is 50,000. For parents, separate limit is 50,000. If anyone among you is senior citizen, extra 50,000. If your parents, anyone is senior citizen, extra 50,000 rupees. For preventive health checkup, you get 5,000 rupees. 80 DD. Your dependent is disabled. If your dependent is disabled, then if it is a normal disability, 75,000. If it is a severe disability, 1,25,000 deduction you can claim. Severe disability means the disability is 80% or more. Now please note here, if your dependent is disabled, whether you are maintaining him or not, it does not matter, you can claim this flat deduction. However, if a assessee himself is disabled, then he himself can claim deduction for himself under 80U. How much, sir? For normal disability, 75,000. For severe disability, 1,25,000. 80 DDB, not important. 80E. If you are taking any higher education loan and if you are paying interest for that higher education loan, whatever interest you are paying for 8 years continuously, you can claim the deduction. Every year you can claim the deduction. Now the education should be after 12th standard for self, spouse or children. Now housing loan, if you are 80E, interest on housing loan, if you are an individual, now this is over and above what is given over there in house property. If you are an individual paying interest for house property, you can claim a deduction of 50,000 rupees. The loan should be in the should be taken from bank or financial institution. House property value should be up to 50 lakh rupees. Loan should be sanctioned. A loan should be up to 35 lakhs. And what is this, sir? Loan should be sanctioned in the year 1670. Because it is only in that 1 year, this section is not important. Don't study at all. 80 EEA. If you are a person who is not covered under 80 EE, and if you are paying any interest on house property loan, then up to 1.5 lakhs deduction will be given. Now here, what is the condition, sir? Loan should be from bank or financial institution. House property stamp duty value should be up to 45 lakhs. Loan should be sanctioned during 1/4/2019 to 31st of March 2022. And the assessee does not have any other house property at the time of sanction of loan. 80 EEB, interest on electric vehicle ka loan. Up to 1.5 lakhs interest will be allowed as deduction if the electric vehicle is purchased by you during the period 1st April 2019 to 31st of March 2022. Donation, if you are giving, now if you are donating the money to PM Drought Fund, whatever amount you have donated into 50% will be allowed as deduction. If you are donating money to any central government fund, PM fund, CM fund, national fund, Swachh Bharat, Clean Ganga, army or Zilla funds, then whatever amount you have donated, 100% of that will be allowed as deduction. Now there is limit based also, meaning that donation amount will be limited to the amount calculated, that is nothing but 10% of adjusted total income or amount donated, whichever is less, into 50% or 100%. So 50% is for donation to minority groups or donation to any ETG trust or temple, mosque, church or gurudwara or housing accommodation. If it is for family planning or Indian companies giving for Olympic, then it is 100%. Now what is adjusted total income? Adjusted total income is your total income before this 80G deduction. 80GG is the rent paid by you. Rent paid, if you are a person who is not getting rent-free accommodation, then this is there for you. If you are an individual who is not got HRA and who is not having a house at the place of employment and who is not claimed any benefit for self-occupied property, you can claim a deduction of 5,000 rupees per month, 25% of adjusted gross total income or rent paid minus 10% of adjusted gross total income. What is the adjusted gross total income? Your gross total income minus all the deductions except 80GG ka deduction. 80GGA, if you are donating money for scientific research and if you don't have a business income, section 35, if you don't have business income, then you can claim deduction over here, whatever donation you have made into 100%. So if you are any type of assessee not having a business income and if you have donated money for scientific research, rural development or poverty eradication, deduction is allowed to you. How much is the deduction allowed, sir? 100% of donation. Note 2, donation is more than 2,000 rupees, then it should be made by account pay check, account pay demand draft or any other electronic clearing system. If you are donating money to political party, deduction is allowed. If you are an Indian company, 100% deduction. If you are any other type of assessee, also deduction will be allowed. For Indian company, the section is 80GGB. For other people, it is 80GGC. 80JJAA not required. 80TTA very important. If you are an individual other than senior citizen and having any interest income, then interest income is from saving bank account. It can be in bank or post office or cooperative society, wherever it is. Whatever interest you have earned or 10,000 rupees, whichever is less, will be allowed as deduction. 80TTB, interest on deposits. If you are a senior citizen and if you are having any type of deposit, it can be fixed deposit, bank deposit, saving account, whatever type of deposit, Up to 50,000 rupees of interest earned by you is allowed as deduction. Now for royalty income, 80 QQB, 80 RRB is there. Royalty income for books, 80 QQB. For patent, 80 RRB. Up to 3 lakh rupees deduction can be claimed by you. Now 10 AA. If you are an assessee who is having a unit at SEZ location. So if you are any type of assessee engaged in manufacturing business or providing services at SEZ location, then you can claim deduction under section 10 AA. How much deduction? For first 5 years, 100% of export profit. Next 5 years, 50% of export profit. And for last 5 years, 50% of export profit or amount credited to SEZ reinvestment reserve, whichever is less. Sir, what is export profit? Your total profit of SEZ business. Please note, SEZ business only you should take total profit of SEZ business into export turnover divided by total turnover. Export turnover means what, sir? Whatever amount is received by you in convertible foreign currency within the RBI time. RBI time limit is 30th September of next year. Now, one more topic I will discuss, which is total income. How to compute total income? Do you know? Compute all the heads of income. Do clubbing and set off adjustment. You will get gross total income, subtract deduction, you get total income. Now, the tax on the total income, you should compute. Okay, you should compute the tax on total income. While computing tax on total income, special income taxes compute first. Balance total income will be taxed at slab rates. You should see whether the assessee has opted for default regime and option regime before finding the income as well as tax. Now, that is the normal tax which you pay. Or the assessee also may have to pay alternate minimum tax. 115 JC. All type of assessee except a company. If you are an individual HUF, AOP, BOI, artificial judicial person, or firm or LLP, for you 115 JC is applicable. The tax which you have to pay will be tax calculated as per normal provision or alternate minimum tax, whichever is higher. Alternate minimum tax is how much, sir? Your adjusted total income into 18.5%. Whatever adjusted total income is there, calculate that first into 18.5%. Now, of course, surcharge and cess is accordingly applicable. Sir, what is adjusted total income? Adjusted total income is your total income of your total income. Whatever total income is there, take the total income, add back deduction under section 35 AD, deduction under 10 AA, 80 JJ, AA, QQB, RRB. If you have taken these deductions, add back these deductions. Which deductions are? 35 AD deductions, 10 AA deductions, 80 QQB, RRB, JJ, AA. You'll get some amount. Now, because you have added back the deduction of 35 AD asset, give depreciation for that asset. You will get something called as adjusted total income. Adjusted total income ka 18.5% is your alternate minimum tax. This provision is not applicable for an individual HUF AOP if their adjusted total income is not more than 20 lakh rupees, and if the assessee pays the tax under section 115 BAC, default tax regime, this is not applicable to them. Now, because you are paying more taxes, you will get something called as AMT credit. You are paying more than what you are supposed to pay, so you will get what's the AMT credit. AMT credit is your alternate minimum tax minus normal tax. AMT credit can be carried forwarded for 15 years. AMT credit can be utilized in the year in which normal tax is more than alternate minimum tax. It can be utilized to the extent of how much, sir? Whatever credit is there or difference between AMT and normal tax, whichever is less. You know 115 BAC, comparative analysis. If you follow 115 BAC, we have discussed all these points. What is normal tax, etc. If you follow 115 BAC, you will not get following benefits. Under salary, you cannot take leave travel concession. Under salary, you cannot take HRA exemption. Allowances under 1014 cannot be taken by you. Except which allowances, sir? Transport allowance, traveling allowance, daily allowance, and conveyance allowance. No deduction will be given under section 16 except standard deduction, which will be 75,000. House property loss, if it is a self-occupied property, interest deduction will not be allowed. No change for let out and deemed to be let out property. For business, please note, I am discussing about what are the benefits which will be taken away from you if you are following 115 BSc. No additional depreciation will be given, no donation for scientific research deduction, and 35 AD specified business deduction will also not be given. Income from capital gain, no change. Income from other sources, no exemption under section 1032 for clubbing of income. If you are an MLA, MP, constituency allowance or daily allowances will be fully taxable. Family pension will be up to 25,000 rupees. And deductions from gross income will not be given to you except 80JJA and 80CCD2. Set off and carry forward losses is normally not allowed. I mean, normally allowed, but house property losses cannot be set off with other heads of income. Now, even if you are opting for 115 BSE, the income taxable at special rate will always be taxable at special rates. AMT under section 115 JC is not applicable for these people. Now, when can I opt in or opt out of default regime, sir? At the time of filing your income tax return. If you don't have any business income, at the time when you are filing income tax return, opt in, opt out. Every year you can do that. But if you have a business income, once you opt out of 115 BSE, for all the future years, you cannot go for 115 BSE. Okay, one point, advanced tax point I'll tell you. I mean, TDS, TCS, so anyways, rates are there. So that is the last topic left. Advanced tax means what, sir? You are paying the tax in advance. You are paying the tax in advance means whatever taxes is paid by you by end of previous year, 31st March of the previous year, till 31st of March of the previous year, if you have paid any taxes, that taxes is called as advance tax. See, what is advance? Normally, whatever income you earn in the previous year, you should pay the taxes in assessment year. But advance tax says, because you know that you have to pay the taxes in future, why don't you pay now only? So they say that estimate your total income and pay the taxes in this year. So advance tax is payable only when your advance tax liability is more than 10,000 rupees or more. And if you're a senior citizen who does not have any business income, they don't have to make any advance tax payment. And if you're a 44 AD or 44 AD SSC, meaning if you're a person who's opting for presumptive taxation, you can pay your full advance tax in last installment only. Now, advance tax on capital income, casual income and PGBP income, which is earned for the first time, shall be paid in the year when you are earning it. How to compute advance tax liability, sir? First, estimate your total income for the current year. From that estimated income, subtract deductions, you will get your estimated total income. Now, this estimated total income ke upar, you should find the tax amount. Tax on whatever tax is there, add surcharge and says if it is applicable, you will get tax on total income. Now, subtract TDS, TCS credit. Whatever is left over is your advance tax liability. This you should pay in 4 installments. 15 June, 15 September, 15 December, 15 March. 15%, 45%, 75%, 100%. Okay, this is all about your advance tax. Now we'll see question. I think 2 questions are left over. One last question is there, which is nothing but. Akhil, 35, has provided the following details relating to the previous year, 25. Income from business is there, income from saving. Now see in the question they will not tell me. Interest, income from saving bank interest. So can I say 80 TTA will be applicable for this? 10,000 deduction is allowed. Interest from PPF is exempt. Investment in PPF is allowed under section 80C. You are required to compute his tax liability, advise him whether he should opt for old tax regime or new tax regime. Now see, if he is opting for default tax regime, what is his total income? 15 lakhs plus 12,000, which is 15 lakhs 12,000. Okay, if it is opting for optional tax regime, his income will be 15 lakh 12,000 minus 1.5 lakhs ATC minus 10,000 80 TTA. What is the income? $13 lakhs. A go base one small. 15 lakh 12,000 minus. Have you understood how I got this amount?
Yeah.
If your default tax regime, you will not get any deduction ka benefit. Okay, you will not get any deduction ka benefit. So I'll first compute the income. So I got 2 incomes. Where is that question? 13 lakh 52,000 and 15 lakh 12,000. This we found. So you'll get half marks over here. Now you should compute tax on this. Computation of tax, so you know up to 2.5 lakhs for normal people, and for these people it is whatever amount. Okay, you should compute the tax amount. Now I think only these many questions are there in this chapter. Meaning TDS, TCS, no question. All the PAN related questions not there. But even if they ask, they can ask you one question for 4 marks. Theory question. Now here, Ratan. This is a textbook question. Mr. Ratan, compute the tax liability of Mr. Ratan under old tax regime who is an handicapped. Can I say if you are a handicapped person, I should see 80, you 1,25,000 or 75,000. Net salary they have given. Net salary means computed salary. Annual value of let out property. Problem is there. Annual value is nothing but gross annual value. Okay, from net annual value, which is nothing but subtract
30%.
60,000 minus 30% is how much? 42,000 is your income from house property. Lottery income fully taxable. Taxable income from business and profession. LIC premium paid. Okay, this will be allowed as deduction. Ratan deposited in LIC annuity plan. So this is 80C. This is 80CCC and this is 80D. Nothing is there. Add all the incomes. Subtract these all items. You will get your total income. See, salary income you have taken business income. House property income. Then business income, lottery income, gross total income. From this subtract 80C, 80CCC, 80D and 80U. Now because they have not given whether it is severe disability or normal disability, we have taken normal disability because information is not there. If it is severe, they will give in the question. So 3,25,000. On 3,25,000, what is the tax amount? Can you tell me? But you don't have to tell me. Then here they have given textbook question, another textbook question. Now, Anil, aged 67 years, is an employee of government organization at Brudavan. What is his name? During the year ended 31st March 25, he received the following. Now here you should calculate salary. See, they have given basic salary, dearness allowance, entertainment allowance, annual bonus, rent-free accommodation with a license fee of 30,000. You should directly take license fee of 30,000 for government employees. Compute his taxable income and tax liability under old regime for the assessment here. His own contribution to provident fund is 30,000 and employer contribution is same amount. For his own contribution, he can claim a deduction under section 80C and he pays life insurance premium. So this is also deduction you can claim under 80C. See, first you should calculate his salary. While calculating his salary, because he is opted for old regime, standard deduction you should give only 50,000. So we'll see salary. See, salary 2,40,000. Bonus you will take. Dearness allowances, entertainment allowance, total allowances. Perquisite value is 3,86,000. What is this? 36,80,000. Okay. Which item is that? 36,80,000. So you Google. So this is the total amount, 3,86,000. Perquisite value is given over here. Now don't you think they have given it wrongly? This is point number 1. 30,000 is the perquisite value. Contribution to PF, it is within the limit, therefore they have ignored it. Now gross salary, subtract standard deduction, you will get your net salary. Now entertainment allowance they have not given only, no? They have given entertainment allowance. So entertainment allowance is given 5,000 rupees. Entertainment allowances will be subtracted, and you have subtracted this also. Okay. So 80C deduction will be 60,000 rupees, which is 30,000 for LIC, 30,000 for PPF. Tax amount on 3,01,000, I think you can calculate. Now here also compute the total income and tax liability under old regime. So income sum salary fully taxable. Rent received they have given municipal taxes, meaning they have not computed the rent. So you subtract this, you will get 22,000 minus 30%. How much is it? Whatever that is, the income from house property. How much is it? 15,400. Income from other sources, bank interest on FD fully taxable. Dividend from Indian company fully taxable. Examiner remuneration fully taxable. Deposited, this is not an income, so 80C deduction will be given. Own contribution to RPF, 80C deduction will be given. Paid health insurance for own life, 80 deduction. Donation to National Relief Fund, 80G without limit. And trust, ATG 50%. So you should take only 50% of this, and here you should take 10,000 fully. Okay, yeah. Now, before we close our today's class, can I quickly take? I think we have covered everything under DT from this question paper. Now we'll see how many of you give right answers, including me. Which of the following? Which of the following is an agriculture income? Dividend paid by a company out of its agricultural income. Share of profit of partner from a firm engaged in agriculture. Income from supply of water by an assessee from tank in agricultural land use. Interest from money lending. So what is an agriculture income, sir? Share in profit. B. I mean, you write somewhere, whether we'll recheck our answers. Write somewhere, A, B, whatever, any one person write. Pratik, aged 48 years and is a resident, has a total income of 6,50,000. Yeah, 6 crores 50 lakhs, comprising of long-term capital gain 20%, 55 lakhs. So long-term capital gain is how much? 50, no, taxable at 20% is 55 lakhs. Short-term capital gain is 65 lakhs. Other income is 5 lakh 5 crores this thing. What is the tax liability under default regime? Under default regime. ये compute करनो. For 55 lakhs apply 20%. You calculate under slab rate for 5 crores 30 lakhs. And for 65 lakhs you calculate 15%. Up to 5 lakhs, Allah, this is up to 3 lakhs, 3 to default.
To 10 lakhs is 2.
That is different, sir. For this, I think this is up to 15 lakhs you should do. It is something I think, I don't know. Why if I say wrong answer. In examination, it will take time. Let us skip the question and anybody go base. La 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 la. A 10,000 years you are taking. Up to 3 lakhs, no tax. 3 lakhs to 7 lakhs, 5%, which is 20,000. Then 30,000. Again 30,000. Then 12 lakhs to 15 lakhs, 20%, which is 60,000. So total is 60, 90, 1 lakh 40,000. Then balance amount is how much? 5 crores 15 lakhs into 30%. 1 crore 55 lakhs.
After this 140.
After 140 means including 140. So total tax is 1 crore 50. This is on slab rate income. So on this surcharge will be applicable at what rate? 25%. Yeah,
1 crore 94 lakhs 87,500.
With surcharge you are telling. No, you cannot do like that. What is surcharge amount you tell me? Now what is tax on this amount? 55 lakhs into 25%? 11 something. 65 lakhs into 15%?
Including those values.
How much? 9,75,000. Total is on this surcharge is 15%. 3 lakh. Now you add these amounts. This plus this plus this plus this. Oh, sir, MCQ, I thought easy, sir. This only will take 2 hours. Nobody is even thinking. I question very easy actually. Don't be in hurry while doing, okay?
2 crore 18 lakh 70,000.
17,000.
2 crore 18 lakh 73,700.
Yes, you should add Gube. New entry in Mamas.
27 lakhs 48,700.
Answer is option number A. Oh, A goes Christ. Yeah, but confidence is there. 5 minutes it took, but we got the answer. Oh. Which of the following? What is this? Which of the following? A. Which of the following receipts is taxable under the head income from other sources? Uncomputed pension of ex-employer, rental income from house property, income from rural agricultural land, income from transfer of rural agricultural land, not taxable at all. Income, this is also not there. Income from racing establishment is what? Ex-employer. Which of the following interest on delayed compensation is how much? 50% deduction is there. A, for minor income, how much is exemption? Income club subject to maximum 1,500 per. What is this? Both they have told one. I mean, TDS is not required to be deducted under.
1,500 I can deduct, but other income.
No, maximum. If the income is less than 1,500,
So I will not.
no, you will deduct. But if it is less than 1,500, whatever is there, that income only will deduct. TDS is not required to be deducted under 194A if the amount is not more than. If you don't know the answer, 5,000 rupees limit you take. Hey, go 5,000 rupees. This is TDS on 194A. GST we don't know. GST we don't know. Tomorrow we know. Now, first 6 questions. What is the answer? First question was B, A. Then what did we write? A we wrote. Answer is D. Okay, wrong answer one we got. This is correct then. Sixth one A only we got. No. What is this? Third one is income from racing establishment.
They think it is horse racing.
No, what to do? They are thinking we cannot do anything. We'll have to write what they are telling us to write. Which of the following shall be considered as financial year? 24-25. Assessment year. Previous year for assessment year. Question है बता. Assessment year for previous year for assessment. Now I understand. What is financial year? Financial. Can I say for the previous year 23-24, assessment year is 24-25, and for assessment year 25-26, previous year is 24-20. Oh, wow. Hey, nam jate aata. Hey. Hey, Maja only they are taking it like, hey, what do you think you are? Huh? They thought he'll not be able to answer. An individual purchased a bullion or 11124 for 5 lakh rupees through fair market value of assets 5,25,000. Okay, 25,000 is the difference. What is taxable under 56(2)(10)? Ille. Ille no. Nil, as the difference between market value and actual consideration is. What is the due date for filing 3CB? It is 30th November. 3CB 30th November. During the previous year 24-25, Mr. Sambit, a resident, has made a contribution to PPF for 1,50,000 and also paid insurance premium for life of spouse. Insured value is this much. You can take maximum. You can take how much? 22,000. Why? Because 10% of this. What is the deduction allowable under ATC for the assessment year? If he has exercised an option of what, sir? If he has exercised an option of shifting out of default tax regime. Yeah, how much deduction what is the deduction allowable under ATC? Max, he can claim maximum how much, sir? 1,50,000 rupees. Allowable under ATC. Okay, please note, both are allowed. 1.5 lakhs and 22,000 both are allowed. So 1,72,000 is the total amount covered under ATC. But how much will be allowed? Only 1,50,000. On 1st of June, Mr. Rohit made 3 fixed deposit, 3 lakh rupees for each for 9 months at interest rate of 9% with Park Street, MG Road Bank and whatever banks they are, which adopted core banking system. The fixed deposit matures on this date. Assuming Mr. Rohit has furnished PAN, what would be the TDS implication? Now, TDS implication, if you have a fixed deposits, if no TDS should be deducted, TDS will be deducted. TDS of 6075 is required to be deducted. Interest. No TDS is required to be deducted since interest does not exceed 50,000. Now, of course, I don't know what is the interest amount, by the way. 3 lakh rupees each, which is 9 lakhs into 9% is how much?
81.
Into 9 by 12. How much is the amount? For 9 months into 9 by 12. So, how much is the amount of interest? 16,000. So, what is the answer, sir? Option number 2. 10% is the interest amount. You found the interest? You found one option. XYZ Biotechnology incurs expenditure for scientific research of 10 lakh rupees on land, not allowed. Building is allowed. Other capital expenditure 8 lakh rupees. Revenue 8 lakh rupees is also allowed. So 20 lakh rupees is capital expenditure and revenue expenditure of 15 lakhs. How much? 25 lakhs. Can I say option number C? 100% total expenditure other than land. Now, what is the answers we have taken? Has anyone written? B, C, B, C, B, C, B, C, B, 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 C. Correct, huh? Ulta nodna. C, B, 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 C, B. Ah, wow, nice. Hey, rank bartisti. An individual being foreign national came to India for the first time on 1/3/25 for 200 days. His residential status for what is this? His 200 days he came. He's not a resident. He's not a resident. Yeah, 200 days, but he came on 1st of March 2025. So 31 days is gone for the next year. So for this year it is only 60 days. Keshav engaged in growing and manufacturing. Good one, Allah. You were not able to answer. Keshav engaged in growing and manufacturing tea. Furnish the following information for previous year 24-25. Sale of tea is 15 lakhs. Growing and manufacturing tea expenses is 5 lakhs. Whatever amount is there. How much is there?
60/40.
10 lakhs into 10 lakh. So 15 lakhs minus expenses you subtract. How much? 10 lakh. Into 60% is your agriculture income. Answer is what, sir? 4 lakhs. Who from the following will be considered as specified employee? This person. Whose ever salary is more than 50,000 rupees. Specified employee. Mr. Chopra purchased a residential house on 20th for 10 lakh rupees and made an improvement costing 2 lakh rupees. He sold the house in April 24 for 20 lakhs. Out of the proceed, he spends 5,000 for purchase of another house. What is the capital gain taxable in the hands of Chopra? So big question they have asked.
So 22
20 lakhs minus
10 lakhs.
April only has sold. Has he sold it within 2 years? July. Yes, it is sold within 2 years. So I'll take it is short-term capital gain. Cost of improvement is 2 lakh rupees. So gain amount is 8 lakh rupees. 8 lakh rupees is the answer. You will not get any deduction because it is short-term capital. Nitin has bought a laptop for 50,000 for his person use. He started the business. He started using the laptop for his business purpose since this date. On this, the market value of the laptop is 40,000 rupees. I didn't care. 50,000 into 40%. 5 4s are 20,000 is the depreciation. Quoting PAN is compulsory in following transactions: payment of life insurance, sale and purchase of immovable property 4 lakhs, in that time deposits. First one, payment of life insurance premium more than 50,000. So 6 questions will be asked from direct taxes. Because they are asking more questions in practical, here they have limited to 6 questions. A, C, only these options are correct. No? See, 1, 2, 3, 4, 5, 6, 7, 8, 9 options are A. C, A. I don't know what is the answer. A. No. A. C is correct. So here it is A. Okay. Mr. D, a part-time director employee but resigned on this day.
22 3.
Now this person is also a specified employee only. Now this person, if your salary is more than 50,000 rupees, then also you are a specified employee. It is not more than 50,000. If it is more than 50,000, then you are a specified employee per month. A. Okay. Last question paper we'll see. In case of individual HUF, agriculture income is, can I say exempted? Exempted but included in total income for rate purpose. Yeah, that is also true actually. Any payment received from account opened in Sukanya Samriddhi, the account is exempted. Which of the following deduction is not allowed if it is deemed to be let out property? Whatever, everything is not allowed. Personal effects does not cover. Immovable property is not personal effects. Preliminary expenses amortized. No. 5% of cost of project, yes. Maximum 80 TTD is 10,000. Cast spinning effect tomorrow. Yeah, let us meet tomorrow same time. Tomorrow we'll have class at answer illa set to idu. For this we don't have answers. Tomorrow we'll meet at what time? 8 o'clock we'll meet. You got a message, huh? Okay, tomorrow we'll meet at 8 o'clock. Bye-bye, take care, enjoy. Bye-bye online students, tomorrow we'll meet at 8 o'clock.